and the Wall Street inroads have been built now, and now it's just about like acquiring AUM for them. And they've broken records for their Bitcoin ETFs, but now ETFs are breaking records as far as accumulation for such a new product. And that's only going to expand too to new different L1s, different coins. Like one of the topics I wanted to discuss was like, when is Hex going to get potentially a treasury company where the company just either issues new shares or has capital on the books. They want to acquire a certain amount of Hex or PulseChain. It could be any asset really. And then they stake that or they validate it, they earn a yield, and they give that some of that back to the shareholders, or they just keep reinvesting that. And then there's like it's basically a derivative on the stock market, because it's still so difficult for people to create a wallet, fund it, keep it safe, not have user error, especially when you're managing millions and millions of dollars. And if you're managing millions of dollars on behalf of clients or investors, like right, you have to, be really compliant from a legal standpoint. There's obviously more freedom now, but you still have to approach it with, from a very like regulatory, sensible way. But so
I was gonna say that's an interesting point too, just for the ability to, if you don't think you have diamond hands yourself, if there's other institutions, again, people on the spectrum, whether they like centralization, don't, or whatever, but they can participate just like you can own physical gold, you can own gold ETF, you can own paper, this and that, or the real product. So with Hex too, I wonder if that would be another, if we do get to, strategic Hex reserve or other companies. I know there's different products and stuff that have been around the ecosystem, I think too before, but future, if we see things like that will, help you hold on to, if you step away from merge the in-stake button, like if there's products that can, encourage longer holding and not wrecking self, and if price continues to appreciate for Hex, I think a lot of confidence will go back into it. It's just we're at the, hey, price went down for a while, will it ever go back up? When it's like, I'm looking around like, what are you talking about? Like, what makes you think it won't go back up?
Yeah, it's just because, I think there's still a lot of PTSD and desensitization from the bear market, since it's been so bad the last few years, especially for most altcoin holders, and most of retail holds mostly alts, right? So I think for alts, we're not really in the phase where alts do crazy multiples yet. That's usually like a little bit later, right? But ETH still has to break out, and some of the large caps have to trickle down, and the profits have to be taken there, right? Because as everything goes up, right, Bitcoin goes up, ETH goes up, like then you have more powder in dollar terms to then rotate into other coins. Therefore, the prices go up, obviously just by hard slot too, but then you also have way more powder, right? If I have a lot of Ethereum here, and I don't just hold, PulseChain and richer hard coins, I have other assets too. But if I have like a lot of Ethereum and it doubles from here, which seems like a very conservative prediction in the next year or two, then I'll have, double the capital to then rotate into the other things, right? Even if the prices stayed roughly the same, I can get many more units. So, everything's going to rise together. And then as the Fed prints more money, or they lower rates, they print more money. If it's stealth or non-stealth, they're doing it regardless right now. There's a lot of stealth QE right now, and rates, I think, are going to drop 4 to 6 limit as far as what's possible. It's just, it's hard to know when that's going to, really pop, take off and outperform. So it may take time while you're sitting in an asset that's just kind of treading, it seems like it's treading water to ETH or BTC. But then usually, at least if you look at 2021, you had it was only a few months of high outperformance, but the outperformance was like life-changing. So we could see something like that again, but that's why it's so hard to time. So you kind of just want to position yourself so that you can benefit from that, but you're not like banking on that in order for that, to make it, I guess, in a sense.
Are we going back to the principles? I mean, all these like time in the market is better than time in the market, delayed gratification, all the stuff that, people have either forgotten or scoffed at, or just been like, Richard, look, he bought the top on blah, blah, all that stuff. Do you think we're going to see a return, again, once things get in a better shape as far as the price chart goes? Everything else is in pretty good shape, but a price chart, once that happens, do you think people start believing again?
Yeah, yeah. I think the price chart is going to be the leading indicator for them to believe, right? I think every little pump is kind of like to be sold, basically, for traders and opportunists. And we saw that most recently, like we saw a mysterious entity bridge in $5 million worth of DAI and ETH, and you saw people try to front run, and then it immediately gets sold down by people just assuming that every pump is going to be sold off. But once it finally breaks out of that, maybe it requires ETH to break 5K, whatever the impetus is. Then once the price goes up, then it's like when people believe more, they're more likely to hold, they're more likely to actually stake, which is an interesting concept. They're more likely to hold out for the next 2x or the next double. But right now it's just like it's like the sentiment of where it's just like kind of get whatever you can while there's green candles, right? So that will eventually shift. I think it's just, yeah, we're still a little bit earlier in the cycle, and I think a lot of people, I was expecting rates to be cut a little bit sooner here. I think Powell has waited. He's been a little bit too patient. He's been a little too patient to raise them. He's been a little too patient to cut them. But that's a whole nother topic. But the most bullish thing that I've heard recently is just that Trump signed an executive order to allow crypto into 401k investment options. And that could go into effect as early as Q1 2026, probably Q2 2026. And right now, there's $9 trillion in assets inside 401ks in the US. So that's just an astronomical number. And what's nice about this is I think there'll just be BTC, ETH, and maybe Solana and a couple others to start. But once people have that option, usually in 401ks, people just buy every month through their job, and then they hold for 20 to 30 years. So that's just doing, if they just apply 1%, 2% of the allocation to that, you're seeing inflows of billions of dollars a month into the large cap coins, right? That's just like buy pressure, which is very not sold very often. And what if people see the gains, and then they start, oh, okay, I'm going to start rotating a lot of my bond exposure, my 40% or 30% of the bond is I have into crypto, because it's pumping, right? Because of the green candle technology. Then that percentage can be much higher, and we can sustain these higher prices longer term, right? Than maybe having the crazy boom and bust cycles that we've seen over the last 10 years. So that's what I'm excited about. Of course, that could also maybe signal some sort of low top too. Some people speculated that once that's released, that could be a sales signal. Who knows? But I think long term, that's going to just boost and sustain inflows constantly, and that did very well for a lot of the index funds, ETFs, right? Have the vanguards of the world have really benefited from that, because everyone just wants a low cost option that's going to give me good upside, right? Do you think crypto should outperform Vanguard in the long run, and it has?
I don't think, is Vanguard even in crypto? I remember I keep seeing the CEO being like, "Nope, we're not doing it. Nope, we're not doing it."
No, they're one of the few that is not. Eventually, they'll capitulate, I think, like everyone else has. But I always tell people, like, banks and financial institutions have been in crypto since 2012. Fidelity has been in since 2011, I think. Like they've been filling their bags quietly. They'll bash it publicly, and they'll acquire it, privately, personally for clients. So that's been going on. Jamie Dimon has done that for many years now, right? So it's like, I don't see, I watch what people do with their money, not what they say, especially in Wall Street, financial world. But another trend is just when I'm talking to clients or just people that are interested in crypto, because I'm just, a geek when it comes to crypto stuff, and they view me as the crypto guy, even though I'm more of a stock market guy as well. But I talk about this in traditional finance, but the baby boomers and the greatest generation owns like up to 70%, 75% of all assets. And while people are living longer, this demographic shift and this estate planning, thing that they're going to have to deal with over the next 10, 20 years is going to trigger the largest transfer of wealth in the history of the US. Trillions of dollars, right, are going to have to be flowing from this generation to their heirs, to then the beneficiaries downstream. And the younger generation just likes crypto. They like internet native things. They're used to using the internet. It's more seamless transition. And they don't even have to put a large percentage of the net worth into crypto. But if they just use, again, if they just put a tiny percent, 1% of everything that's inherited, everything that's passed down into crypto, it's just going to sustain prices for a long term. It can bring, more financial freedom into the younger generation too, because as we know, they can't afford anything in this environment where housing is so expensive, cost of living is so high. So how do you curb that? You have to invest, and you have to invest in things that are going to give you high upside, that are going to outpace inflation, outpace the purchasing power of everything, so that you can get ahead and then afford the stuff you need, because inflation isn't going to stop anytime soon. Inflation is only ramping up as they print more. So it's just this, crypto's in this beautiful cycle where they're going to have to print to get out of the current situation. They're going to have to do QE. They're going to have to lower rates. That's all making risk assets, aka crypto stocks, or higher risk stuff, upside stuff, is going to go up. Real estate is going to go up versus the dollar, and there's further devaluing the dollar. So the dollar is just continuing to trend to zero versus everything else, right? So if what you're charting against just keeps trending to zero, cryptos and quality assets, hard assets, are going to go up versus that. It's just a matter of time. And the dips that you're going to get along the way, because I think we're still in a bull market, but the dips along in the bull market are for buying still. Right? We haven't even seen ETH break all-time highs. If it doesn't even, like if it does a 3x from the previous all-time high, that's a 15K ETH, which to me seems very achievable. And especially with all the things we discussed as far as the bullish macro environment, the treasuries, companies acquiring so much ETH, the ETFs, and
well, don't forget to everyone, Bitcoin was $15,000, $16,000, and now it's $115,000, and it just broke all-time high the other day of 120 some.
Less than 2 years, I think. Yeah.
It's like, why can't ETH go up? Why can't other things go up like that? I don't know why it's like kind of like that mindset of like, can't imagine these type of gains is crazy, where it's just like there's just no imagination, or there's no ability to study history. I don't know.
Yeah, I think it's just coming out of the bear market. The bear markets are so brutal that it's hard. You lose hope, I think, in a lot of sense.
I got to do a new T-shirt now. I got to do what bear market. I'm gonna do a T-shirt. What bear market? And just have green candles go.
And you can't fight like uphill against the bear market, right? It's like people want to Richard deploy stuff. It's like you don't want to fight uphill. You'd rather push the ball downhill while everything is flowing beautifully, instead of fighting your way up, and you're fighting so much sell pressure, or just right in the face of like nothing could have stopped what happened in 2022. Like everything went down. You couldn't have stopped that no matter what you did. Unless you just
but if Richard just didn't twerk enough, if he just stopped twerking, John, it would have worked out. He did that. The outrage marketing sunk us. That's what happened. That's the explanation.
And I mean, and PulseChain, like the whole chain is set up very beautifully as far as like how much potential assets could flow to it versus like the liquidity pool situation, right? Like based on my analysis, the AA lobby generated roughly 500,000 ETH in organic ETH potentially. There was 300,000 Bitcoin that was reclaimed in the first year of Hex. At current prices, 300,000 Bitcoin is some ridiculous number. And that's not including other just non-custodial personal assets over time, that he's held or people close to him have held, or right. And there's only $3-4 million of LP in Hex, PulseX, Hex PX pair on PulseChain, and Ethereum much less. But it's different now, because back then it was just one ticker. Everyone was shilling Hex and staking it, and there was cool derivatives. There was Hedron. There was There was the HSIs you could create. There was like COSA, but it was basically all hex generated and hex focused. Now you have so many tickers, not only including the pump tire stuff, but you got Inc, you got PulseX, PulseX, and the LP is all tied together that you can have someone selling down Pulse or PulseX heavily. And then PHEX is just going to get dragged down without doing it, without any buys or sells, right? And it's going to get dragged down heavily because the LP is so thin, and you have people with huge bags of PulseX or Pulse. And then conversely, it can go up very rapidly. If someone just pumping millions of dollars into PulseX or Pulse, Hex is going to rise without anything being put into it. So it's just now a way more reflexive system where you're getting way more volatility to the upside, way more volatility to the downside. And, you know, traders are benefiting from that, the volatility and the volume. But we're still like chopping in this like long-term like range, right? Like everyone's seen like the PulseChain chart range, like it's chopping in like a very defined, like, yeah.
I try not to look at it.
Yeah, that's probably for the best. So, I mean, if your goal has been to accumulate the last few years, it's been like a perfect market for you. It couldn't have been any better, right? You could sell some rips, you could buy huge dips, you know, and then just keep increasing the units versus, you know, whatever your dollars you're putting in, but your units just probably should be at all-time highs right now if you've been accumulating. If you've been trying to exit, it's been pretty bad, right? And we've seen large wallets exit, and the price has still kind of held up pretty decently, despite a lot of the sell pressure and long, you know, time capitulation, and you got price capitulation. So we got the time capitulation down. Price capitulation, I would argue, has also been kind of solid. And one of Richard's tweets, it was like a really bullish tweet, he was saying like, there's been some violent shakeouts that have happened, right, over the last few years, and I would agree, it's been quite a shakeout. So it's like the odds are tilted in the favor of PulseChain just based on the setup. It's a matter of time. But if it does not perform this cycle, I think that's when a lot of the I guess the fervent, passionate community would lose hope, I think, in that scenario. But
the highest stakes three, we're out.
Like because if we don't pump and you see other alts doing crazy multiples and ETH is at 15K, 20K, and Hex is still trending in the few cents range, it's going to be brutal, right? People are going to capitulate heavy there, and a lot of faith is going to be lost. So a lot is still yet to be seen, of course, but you know, upside, you got to see that, you know, there's asymmetrical upside versus the downside is, you know, is 1x typically.
I think that definitely if we don't perform well this cycle, there'll be a lot more diversification, to be generous.
Yes.
But I can't even imagine. I think this is my body's ready. And before we head off, I mean, great conversation. Love to hear the history part and talk this stuff too. We're coming up on the sixth birthday for Hex.
Mm-hmm.
What is it that still keeps you here? Like, what makes you believe in this product, in this community, in the founder? Like, what is it? Like, take us out on that.
Yeah, I mean, I think just with all the staking that's been happening since the 6 years, I think once people buy and stake for a long period of time, it's just like automatically you're invested for that period of time. So, you know, where you're financially are is where you're kind of motivated to be interested in. So there's that, right? The financial interest. For me, I always look at, when I'm looking at projects, it's, you know, the community is a big aspect, and the Hex community and the PulseChain community is very impressive, and it's been growing pretty rapidly despite pretty, you know, average price performance so far. So that's been very impressive, and you see and for me, it's like learning about the new protocols and learning about all the different options and things you can do with your Hex now that you couldn't initially, right? Initially, you could just do native staking. Now you can do, you know, you can do an HSI. There's things like Actuator. You can do LPX pools where you can earn yield on just liquid coins. There's other coins that are, you know, Hex centric, that are memes, but also generate yield at a higher rate, like Helgo, right? You could single side stake Helgo for 15%. can do V2 farming for 16, 17%. While, hopefully the ratio goes up versus Hex, so you're earning more Hex 2 on top of that, and you're getting the high yield. And, there's some other cool features there too, such as burning and stuff. Another thing I'll tease, just because Alex said I could, is Sigma, which is a equal indexed ETF that he's building. And it's basically going to take DAI, USDC, stables, and then it's going to build basically an index ETF of Pulse, PulseX, Inc., and PHEX, so that if someone wants to just buy an index, the index, or the Richard Hart index, it'll just be simple. But DAI in, you get this PRC20 or this token that's going to represent that, and then you can redeem it for the actual underlying asset in the future. There's stuff there. There's like a DAO token that potentially is going to be there too, and mint and redemption fees. So and I'm a big fan of Alex and Hedron and all that too, and Icosa, I know you are as well. So that's what I'm excited about as well, is just like all the new features, and then Hedron version 2, the new upgraded HSIs basically, and auction systems, and hopefully that ecosystem gets more activity. So yeah, I think it's just the financial interest I'm interested in. The communities is very entertaining, and you guys are hilarious and have great memes and stories, and all the crazy people in the community is hilarious to just track and troll, for me personally. And yeah, the memes are great. I think the financial interest was for me initially, but now it's just like the content is very entertaining, and yeah, I just want to see where this goes. Like, I want to see obviously Hex PulseChain higher up on the market cap listings, or listed at all somewhere one day. I want to see that. I want to see the financialization of Hex happen. I want to see treasury companies. I want to see all of the things that Wall Street's building for for Bitcoin and Ethereum and Solana and all the other legit coins. I want to see that also built for this ecosystem, because I think it makes sense to have those options. It's going to be easier to onboard bigger and better players. And they just, they don't want to deal with all the custody stuff. They don't want to deal with all the crypto aspect of it. So I think I'm just excited for the future, and I want to see it all play out. I want to be there for the ride as well. I think, just crypto as an asset class, if you can't tell by now, I think it's a very good asset class historically. I think it will continue to be, because of all the things we discussed today. So yeah, that's all I got for you. I know you guys into this.
No, thank you for dropping the Sigma info too. We've all been waiting for something to understand more. I remember doing like analysis of the logos. What does it mean? What do these things mean? All that stuff. Is there any other information out there than what you just said? Because that's all I know of. Yeah, you can I can send you some stuff on Telegram or whatever separately, and then you can read it and distribute it if you'd like. Sure. That'd be great. It's a rough draft, and he did say that things can be changed from between when he wrote it and then now, but he said it's roughly similar. So yeah, that would be amazing. Exciting. Yeah. At RH Maxi on Telegram, at RH Maxi. Okay. Gotcha. Yes. That would be great, man. Thank you. Whatever you can share. Absolutely. The whole community, I feel like half the people forgot about what Icosa is and all this stuff. I'm like, no, this is like one of the coolest, most exciting, by one of the best builders we have in the community. Like I want people to remember, I want new people to understand the power of the builders we have here and the products built on Hex. So thank you for that. Yeah, no problem. And I mean, I'm always looking at the new protocols too that are being developed on Pulse or for Hex so yeah, that's kind of what takes my time up too, is just learning about the new stuff and studying the markets. And I'm always trying to, have a good keen understanding of where we're at in the cycle and macro and the environment and stock market and all that. So naturally, I just follow the markets, and crypto is just another thing that I love to follow and track, and will continue to. I would pay to track crypto, but it's nice that I get to financially benefit from it and follow it, and then just follow my own just intellectual interests. It's awesome. I love it. So keep doing what you're doing. And thanks for having me. Glad to have you around, man. Hope to have you back on at some point as well on the show. And thanks for being part of the community. You're definitely one of the ones that are more informed than others, and we love to have good people like that.
Absolutely. All right, I'll get off because I know you got the next few people coming on.
Awesome. Thanks, John. Appreciate it.
All right, take care.
Okay. All right. Did you hear that? I was very, very pleasantly surprised to get any sort of information. I shout out to Alex if he has been watching from afar for Hex Week and it's like, give him something. That'd be cool. No expectations. Boy, definitely appreciate John sharing that and maybe some more information to come if I can share it. So that's awesome. Wow. Got your first, well, I don't know about the first new info drop, but definitely one of the most exciting things I've heard today. And we've had some great talks today. Wow. It's only going to get better because Fast Abdul is here and we're going to go through, I'm going to bring him on for a second. I'm going to play a video. Cairo, we're running a little bit behind on the schedule today because I got to play a 17-minute video, but it's pretty awesome. So strap in. Me and Fast are going to talk about it. There's Fast Abdul. He's got the shades on inside. A lot of people criticize the shades indoors. What do you have to say about that?
I have to say that I have a bright light in my face. As part of streaming, like you have to light your face properly or it doesn't work with the green screen. So I have a light pointed at me and the green screen, and the shades make it much easier. And also I'm usually multitasking on my keyboard and looking at multiple monitors, and it makes it less weird that I'm not like looking at you the entire time if I have the shades on.
I think that was a more elaborate explanation than anyone expected. So hopefully the glasses haters are satisfied with that answer. I hope so.
Excellent.
Sir, we've you pleasantly brought to my attention that we did cover a lot of Maximus stuff in the panel yesterday or day before, one of those. And I think you got me thinking about it too. I was like, man, is there any other thing we talked about or Maximus and stuff? And I totally forgot that about 2 years ago, I want to say, before PulseChain launched, I created this Maximus highlight reel that was one of the projects I did. I went away. I stopped streaming for like a couple weeks or so. I did a project and came back did 3 different projects outside of streaming. One was the Richard Hart vintage clips. I just like every day blasting through videos and timestamps and blah, 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 blah. I went through and like started, I think I clipped over 100, 150, maybe 200 at the time. Ton of different, it was a lot of clips. I got really good at clipping. Very good at clipping today. That's like my biggest skill is clipping. So that's something, I guess. And then so I created the Richard Hart vintage playlist, which had a clip coming out every Thursday until just recently. It just stopped coming out for like 2 years. So that was cool. And then I had a bunch of different shorts. I was like releasing shorts for so often. Actually, if anyone wants a big zip file of shorts you can post on YouTube and stuff, Richard Hart and all these different phrases and stuff, let me know. A ton of those. I think there's like maybe 100 or so. I produced a lot of those. And the other project was this Maximus DAO video talking about the different products at the time. I think I released it, and then maybe just a few weeks later, they had launched one new one. Maybe it's Poly or something at the time. So funny timing, but whatever. It was a great one, and I think it gives everyone an idea of what these products are about. So you want to see it?
Let's watch it.
Let's do it.
Going live now to discuss Maximus. Going live now. Discuss Maximus. Trustless Stakecoin. Trustless Hex Stakecoin. Maximus.
Oh man, that gets me hyped every time. We're on a mission to empower elite gladiators with high-yield assets to build empires of generational wealth. Our vision is to build the best decentralized financial tools that are easy to use, secure, and maximize returns for investors. Maximus is built on Hex, which is a leading DeFi protocol that allows people to stake their Hex tokens and earn trustless yield. In its first 2 years, Hex has done a 10,000x price run-up and there are over 100,000 stakers actively using the protocol. So we thought, what if there was a way to maximize Hex yield and minimize gas fees for stakers? So we built Maximus stake pools, which are trustless smart contracts that enable people to stake their Hex together to earn more yield and save on gas.
Right, and the way I like to think of it is each what Maximus DAO does is gives a Hex stake the properties of an ERC20. So now you can own part of a stake while also getting the exposure to all of the functionality a ERC20 has. Send, receive, as well as liquidity providing.
Non-negotiables, so no admin keys, no sacrifice phase, no pre-mine, no transaction fees. The project will be completed at launch, so immutable code, fair token distribution, and the code will be audited. Sweaty Hexican, I'm pumped. We'll gladly put some Hex away in the maxi stake. Let's go. It's really simple, guys. You're just pledging Hex. The cool thing about the mint phase is that you instantly receive your maxi tokens. So, unlike a sacrifice phase where you're giving your coins and then, maybe you get something in return, like an airdrop. With Maximus, you're minting your own tokens. It's just you interacting with the contracts, much like Hex. So there's no expectations of work of others, and it's immediate. So that's pretty awesome. We just passed our first audit, and then we just got our second one back and passed that as well. So to do that, like at first go, I'm really, really impressed with that. So he's been, in charge of development and kind of the economics as well. And then I have been on the product design aspect of building out the DApp, as well as kind of all the marketing and community management stuff.
With just 2 million more Hex, we will suddenly become the 5th largest ever max length Hex stake. So we have one day to get 2 million more Hex, and we'll be in the top 5 for largest max length Hex stakes.
Hedron's more of this is a representation of a share that existed at one point in time, and ICOS is representative of the cost of making a new stake, like the cost of a share. The Maxi system is really just about democratizing and selling shares of stakes, and I think those 3 derivatives of Hex all complement each other very well.
I know Tanto. How do you say it? Like Tanto Nomini, or just call him Diff Catcher, or
Tanto Nomini. So the Tanto Nomini means a name so great it doesn't need a tombstone or something like that.
Oh, that's cool.
Yeah, it's a cool name, but people definitely have a hard time pronouncing it.
Say Tanto Nomini.
Yeah, you always had that Italian twist on it.
Tanto, live radio, like the Italian FM radio station.
Tanto or Dip Catcher. You may see him out there under those different names.
Tanto Nomini.
Dip Catcher Radio, back again.
Yes.
I like that. Just 100% of the supply was created at the start. Then over time, the supply can actually be burnt, but it will never grow in supply. And then just after the stake ends, you can redeem your portion. And so until then, the market just trades the coin wherever, whatever the supply and demand is in that moment. So,
is there something else in the works?
So I'll just say that there's clear demand for this type of stake pooling, and seeing how it worked, and kind of how the market responded, and just also how people emotionally responded to it. That gave us a lot of clear-cut ideas of what to roll out next.
The new expansion pack for Maximus, yeah, because there's 5 new coins, and there's kind of a lot going on. You got some choices, you got some options,
new opportunities for Hex. We are introducing 4 new stake pools called the Perpetuals, and you'll find out why. Base is a 1-year stake, Trio is a 3-year stake, Lucky is a 7-year, and Desi is a 10-year. These pools will start just like Maxi with the mint phase. All the Hex will be staked and begin earning yield.
So in Maximus, we pool Hex into large singular stakes. The purpose is to save Hexicans from gas fees. It has other benefits like increased earnings and ability to sell at any time. But the entire purpose of the pools is really just to save hexagons on gas fees, because there is a lot of risk in gas fees, especially the longer the stake is. So the user's value proposition is increased earnings versus staking alone, 99% gas fee savings, and the token that holds your ownership in the stake is liquid, it's fungible, and it's easy to sell. So the stake lengths for the perpetuals are 369 days for base, 1,111 days for trio, 2,555 days for lucky, and 3,696 days for desi. And we have maxi. We didn't in this analysis we didn't include maxi just because just for more direct head-to-head comparison of the perpetuals or Secosa. Who benefits the most? So individual small participants benefit by being able to capture as much value from their staked hex as possible.
The team launch requires Maxi to mint team. So Maxi is the current 15-year pooled stake token that's out right now, and you can convert Maxi to team in a 1-for-1 ratio.
And then once you have the team tokens, you can stake those tokens to earn rewards. So you have to remain staked for that whole period to earn rewards. And there's also a 3.69% early in-stake penalty, which so that actually makes team supply deflationary, because it kind of works like Hex, where when you stake it, your tokens are actually burned, and then when you unstake, they're reminted. So right. that penalty, when people early unstake, that team is just never reminted, so it'll cause the supply to go down.
You said half of the max int to the contract for the team token goes to the mystery box, and then you said a second thing as well,
and a copy of the team minted. So the mystery box starts out with half of the team and half of the maxi that went into it. And so when people ask about it, since it's a mystery, it's a mystery, but what I ask is what they would do if you had a bunch of maxi and a bunch of team. And whatever they say, it's one of the possibilities, because truly anything can happen.
I think it's one of the coolest things about the Hex ecosystem in the bear market is there's been something to be excited about in a bear market constantly. We've had Maximus, then we had the Perpetuals, then we had Team, then we've got like Icosa and Hedron, and we've got all these things coming. So, personal thank you for making this bear market exciting, and for there to be things to learn about and discover.
So introducing Polywater. So Polywater is short. Water is short for "We're All the Executor," and it's the Maximus bid executor gas fee pool. So you prove your support for Maximus and increase the chance of success by minting 369 water tokens per 1 ETH contributed to the Polywater contract. Basically, Poly is a hedgeron pool that bids on HSIs in these auctions. So I guess you'd have to know what HSIs and auctions and hedgeron are. So for a branded person, it's a coin that's backed by other assets that produce yield, and the type of asset is they're called HSIs. They're hex stakes that have been put through this system called Icosa, which is related to Hedron. And the Icosa system, it basically causes these things to go to these liquidation auctions. And so there's going to be about 6,000 HSIs come into auction pretty soon. And so Hedron is like a variation of the previous hex staking pools that we built, whereas instead of the previous pools where you deposit hex and then the hex is staked as a big pool, you deposit Hedron. Hedron is used to bid on these these HSIs coming to auction, and then those HSIs are held and backed, or the Poly token is backed by those HSIs.
Welcome back, everybody. Dipcatcher Radio back again. Probably the lowest moment in Maximus DAO history. As many of you know, yesterday, as the first set of auctions were coming to an end, it became clear that the system for processing the HSIs and scheduling their end wasn't going to work. Basically, what happened was that the assumption that was made was that the HSIs were tokenized as they came in, since, you know, when you sold them back to the ICOS contract, you tokenize it and then sell it back. And so the mistake was that the assumption was that the stake remained tokenized, which it does not, because during the ICOSA buyback, it detokenizes the stake. So the reason why this happened was because on testnet there was no way to really test the auctions, because there just were no auctions to be had. We're pretty lucky that the safeguard against poor executor performance actually saved the situation, because the fallback option in the Poly contract is that unused Hedron just simply gets staked. And so when it became clear, let the executor know, no more, can't process them. So so in 30 days from now, the Hedron will be staked as per the design of the contract, to just simply stake the leftover Hedron. And so moving forward, Poly is it'll turn out to be about 1.8 trillion Hedron stake. So it's a little bit smaller than the God Whale, which I think is 5 trillion. But now Poly is basically a giant maxi for staking Hedron. In an amazing turn of events, we saw the Hedron source address mint 500 billion Poly. So they deposited 500 billion Hedron into the pool, and then minted the Poly, and then burnt the Poly. And so in effect, what that did is it canceled out that 15% Hedron haircut from the bids that went to HSIs that are good as burnt. But not only did it restore that, it actually exceeded it. So now each Poly is backed by about 1.1 Hedron.
When I'm doing those marketing things and I'm talking about Maximus, it helps me identify kind of those core components, which is kind of why I put off the website so long, just because, you know, bringing all those things together with the Perpetuals and team, it's not the easiest thing. I think I made the mistake when we announced. I wrote this hella long white paper that was just like every detail. I should have simplified before. So I'm kind of trying to bring simplicity to the white paper in like a cohesive site.
What's up, everybody? Back again. Dipcatcher Radio. The late night stream to announce the launch of yet another fantastic product. Who remembers those Billy Mays infomercials? I feel like Billy Mays. Back again with another fantastic product. There's two types of people in this world. There's dip catchers and there's pump chasers. Which one are you? This one helps you be a dip catcher and not a pump chaser. The algorithm can be applied to short-term time frames for intraday dip catching opportunities or long-term time frames for macro-level dips in the market. So you see here, while DCA, the algorithm was designed for like the long-term, like weekly and daily charts. If you apply it to the hourly chart right here, you can still see how the same analysis like helps round out those intraday dips. So like if you know that you're buying today, this can be a good way to just find the best price over any like 1 or 2 day period, just like by applying it to the shorter time frame conditions. But the bread and butter really is the long term dips, long term dollar cost average.
And we've got all these derivatives built on top of Hex now, so you may have heard of them, like Hadron, Icosa, Maxi. We've also got the incentive token. That right there is almost the whole stack.
Hit that like button. Hit the subscribe button. Share with a friend. If you have a friend that's sitting on the sidelines, watching you have all the crypto fun, time to get them in.
We're just having fun out here, baby. The rest of the market's not, but we are.
Are you Maximus for life, or like, do you have any idea around that?
I mean, that's what it feels like.
Maximus is just like so simple. It's like, 5 minutes you can kind of just get it. It's like, oh, if you get Hex, if you get Hedron, it's like, okay, yeah, this just makes sense.
Boom. 17 minutes of now you should know a lot about Maximus products.
It's informative, and it touched on a lot of things they've done apart from Maximus, like Dip Catcher's trading algorithm thing that he did. I think they even mentioned Polyhedron on there, eh?
Mm-hmm. There was. Yeah, I think, what was the product? I cannot remember what they came out with next that wasn't on there. There was something. I can't remember. But there was something I was like, oh, no, it's about to come out. Yeah, I've totally forgot about the Richard mention at the one of the Pulse conferences or Hex conferences. I totally forgot about the Richard mention until I saw that. That's pretty cool.
Yeah. Yeah, no, I definitely think like the Maximus products are by and large beneficial to Hex as a whole, right? Like it gives a different element to staking, and it gives service to a different part of the market that wants to participate with staking but stay liquid. So, like icosahedron as well, but I think this does fill a special role.
Yeah, it's I can't wait till the green candles beget green candles, and people have more incentive than they do without looking at the charts to go explore the Hex products and go choose the one that works for you and all that fun stuff, because it's a long-term game. I mean, all these products, Maxi is a 15-year stake. We're 5 years into it. I want to say it came out a year or so after Hex.
Yeah, right about there.
Yeah.
And,
oh yeah, we're talking about this October, right? Is when
October
that's a different one. Trio.
Yeah, Trio ends in October, so that's coming up right away.
So Maxi must end. Well, it's not end, but the 5 year for Maxi must be next spring. I'm going to guess. I feel like it launched in the spring.
2027.
Or is it 2027? Is it? Okay. So 2 years. Okay. So it launched in 2022. Yeah. 2027. You're right. That makes sense.
I got them all right here. So we got the base one I think ends in December again, because that's when it started, like this year. I'm pretty sure. Then Trio is October 2025. Lucky is the next one, the 7 year. Actually, is 2029. So it's September 2029. And then Deci is November 2032. And then Maximus is out till 2037.
Gotcha. Well, hex.com. That's all I got to say about that. Hex.com. I like it. And Maximus.cash. I always forget the Maximus website. The main one's like Maximus.cash, I think. They got a few. They got many websites for all. Well, they have like 10 different products.
Cash, Maximus DAO. Where
Probably
is it?
.com. Maybe.
Yep. Yeah. MaximusDAO.com. Yeah.
Awesome.
Did you see somebody posted about Hex.com getting updates?
I did not. We can quickly take a look at that, though. That's a great. I mean, I'm still mesmerized by the Sigma update that came out of nowhere.
Yeah, I've cool. Already retweeted that. That's juicy news.
I didn't know we'd have
that
much.
This Richard Hart guy just posted that there were updates coming for Hex.com.
Coming or here? I don't see anything different.
It kind of indicated they were imminent, but maybe that there were current updates.
He would do that during Hex Week? Yeah, let's go. Let's go.
That's strange.
Oh, actually, this is okay. So the one I see here, go.hex.com. Man, that's a when you do subdomains. That's a lot.
Go.hex.com, yeah.
Has just been
He said
lightning.
it's just become
lightning
lightning
fast.
fast. Yeah.
Okay, so go to Hex. Okay, so this is the upgrade for IPFS. That's what somebody was talking about earlier. They said that the Hex was updated to IPFS apps updated to 107. Okay, so it's faster now. Okay, faster, cheaper, maybe. We'll see. Rumor next
Faster, and it's going to get better wallet support too, apparently.
Nice. Yeah, let me show you. If anybody is a nerd out there and they want to check, I'm probably not going to do this. I did it one time, but IPFS changed. I did a whole thing of how to look at the code changes. Yeah, how to diff the code changes between IPFS apps. I had no idea how to do it. I'm like, there's got to be a way to do it. So you download the app from IPFS, and then you can diff it from there. And probably AI can help with this more these days too. But I have like a whole thing of like how to do it and how to diff it. So I'll drop in the chat in case there's any nerds who want a head start if they want to actually determine what the code changes are and stuff for any IPFS app you could do. This was for the bridge I happened to do as an example, but it could be any IPFS app. That's how the nerds do it. So pretty cool. Lightning fast.
Right,
good.
I blanked out there. Were you saying something nerdy?
I try not to, but every once in a while, yeah, I don't want to give anyone an answer or anything.
It just takes over, eh?
I try not to say words that means software or technology related. CPU. Oh God, no. All right, fast. I will see you in about 30 minutes or so. Looking forward to it.
Sounds good. See you in a bit.
See you soon. All right, everyone. Are you not entertained? If you tuned in the whole day, I think my opening was pretty good too for some other bullish stuff. But yeah, I've got some unexpected, awesome stuff. I'm sure Cairo's gonna hit us with some amazing stuff as well. Let's give him a welcome with this one. Let's do this one.
Sometimes you just gotta shut the FUD up.
Boom. You know how long it took me to get that chicken to say that thing?
How long? I'm curious now.
Man, I worked on and off. It wasn't like a straight sitting there, but I think on and off for like half a day or so. I kept going back and forth, and then I tried a different way, and then I put the bandana on, and I was like, I got to get this right. To come to Hex Week, I gotta give them the chicken thing. Shut the FUD up, because I love your phrase so much. So I just wanted to give you that one.
Thank you.
Yeah, awesome. Well, you're pumped up now. I'm gonna exit, do your thing. I'll be back.
All right. Thanks, Max.
Yep.
Good afternoon, Hexaco. Cairo Copeland here. Reinvent Ideal on Twitter, Substack. You also see me on YouTube as well. And I've got some very important things here to share with you. Because as you probably noticed, well, the crypto market's been having a tantrum now, hasn't it? We got coins plummeting faster than Rachel Zegler's career. And who's the puppet master pulling these strings? One man, Jerome Powell, or as I affectionately call him, J-Pow. The Fed's grim overlord, sitting in his ivory tower and probably cackling as he decides whether to nuke your portfolio, which he can do with a single syllable whenever he speaks. So tomorrow, if you don't know already, it's a very important day because all eyes are going to be on the whole Jackson Hole meeting. That annual banker wank fest where all the suits gather to pontificate about inflation, while the rest of us cling to our Coinbase accounts like rafts. See, Powell's got the market by the throat, and they're begging for a rate cut like it's oxygen. Now, historically, the little powwow they're going to have tomorrow, it's always been a roller coaster for the S&P 500. It has a dip, then it rallies, and then repeats. Like back to 2022, what did it do then? Well, Powell went full hawk in that year. So the market tanked 3% in a day. Just like a suburban princess that's been denied a Land Rover, it throws a tantrum. Or 2023, when inflation was still a gremlin, the market slipped. 2024, he had a very dovish whisper at the time, but that couldn't stop the initial plunge. So we can expect a dip tomorrow. We might have a big plunge tomorrow too, because it's like clockwork. Jackson Hole punches, the markets get bruised, but then they get back up. What we are seeing right now is the holy crap, what's the Fed going to do dip. Crypto is basically front running the chaos, as they so often do. And Bitcoin and Ethereum are trying to play psychic. Why the panic, though? Why is everybody thinking about tomorrow's going to be bad? Well, if you hadn't heard about it, the producer price index spiked like a bad fever, so it spooked the markets. They're already jittery from a weakening job market, and Powell is stuck between a rock and a hard place. Basically, he has to choose between getting a punch to the face or a kick to the balls, because the Fed's got a dual mandate. You probably heard him say it a bunch of times. They got to keep inflation under 2%, and then they've got to keep the jobs market alive with full employment. Well, the consumer inflation, CPI, is down, but the PPI is not down. It's out there screaming, surprise! Meanwhile, the job market, what do you think of the job market here? It looks to me like it's wobbling like a Jenga tower. Goldman Sachs says that there will be 3 rate cuts coming before the end of the year, but the prediction markets have slashed the odds of a September cut. It used to be something that was like practically guaranteed. Now it's just a, maybe. It was at 99%. Then it went down to 80%. And now it's at 70% on the FedWatch tool from the CME. Morgan Stanley even predicts that there will be no rate cuts at all this year. That's a very bold contrarian take, but Polymarket has got it almost 50-50. They're saying a 57% chance of a rate cut now. So tomorrow, however Powell speaks, if he's hawkish or he's dovish, is going to be widely anticipated. So who's most likely right? The optimists that think a cut is coming, or the naysayers that think nothing is happening until Jay Powell goes away? And why does this matter here for crypto? Well, it matters for crypto here because the thing that makes crypto go up, the cause of all the bull runs, it's not the halving, because most coins don't even have a halving. What causes it is money printing. And money printing is not going to happen when we have a very strong dollar. And what's keeping the dollar very strong is the fact that interest rates are so high. The 10-year treasury is still above 4%. There is not going to be no bull run until that comes down below 4%. So we desperately need these rates to come down to weaken the dollar so that crypto can go up, because the money printing and the weakening dollar is what causes us to go up. And I'll tell you how that specifically relates to Hex in a moment here. But who's right? Is there going to be a rate cut coming in September, or is it not going to be until December even, or maybe not until next year or until Powell leaves? The Fed July meeting minutes did give us a hint. As here's a direct quote from it. It says, a majority of participants judge the upside risk to inflation as the greater of the two risks. And what that means, translation from bullcrap to English, is most officials think stubborn inflation is a bigger threat than job losses. Until jobs really break. They're not going to cut the rates just to please the markets. So why the fear of inflation? Still too high? Core CPI, which excludes food and energy and shows underlying price trends, well, it was 3.1% year over year in July. And remember the FOMC meeting that happened before the most recent CPI and PPI reports? That came in hotter. But PPI is what's keeping it up, because that surged almost a whole 1% in a single month, and the sharpest that we've seen in 3 years. That report came after the Fed met. So even before seeing the spike, the Fed already feared inflation. They see that the inflation risk is greater than a bad jobs market risk. And the new data only confirms whatever bias they already had about that. Now, think of CPI as what you pay at the store, and then PPI is what companies pay behind the scenes before the goods hit the shelves. If producers' costs climb, they usually pass them on to consumers. And that's why a hot PPI print right now can mean higher CPI later, and why the Fed is staying cautious. Not to justify what they're doing, because I don't like what they're doing, but this is just to explain the logic that they're using here. So the meeting minutes say it would not be feasible or appropriate to wait for a complete clarity on the tariffs effects, which in plain English, what that means is the Fed won't wait around for perfect data if inflation looks sticky. They'll keep the policy tight now, rather than risk cutting too early. The job market It's bad, but it's not bad in a way that they notice. Because you see what they're looking at is the unemployment rate, which is at 4.2. The unemployment rate is not a good measure of the jobs situation. It's not a good measure of it all. I like labor force participation a lot better, which is down. It's not looking good. But when we look at, when we look at like how unemployment is measured and collected and everything, it's very flawed methodology. And Jerome Powell knows that. He's not a stupid guy. He might not be our best friend right now, but he's not stupid. Here's the real deal, though. Coming up in September, the Bureau of Labor Statistics is going to issue an annual benchmark revision correcting all the payroll data. And Goldman Sachs expects a large revision saying that somewhere between 500 and 900,000 jobs are going to be removed from measurement. They overestimated almost 1 million jobs added to the economy that are not there. So what I can tell you for sure here is that America is in a recession, and we're at that point where bad news is still good news. So I'm not saying that we should celebrate this or we should jump up and down and be like, yay, America's in a recession. That means we're going to get a cut. But what I am saying is because the job situation is so bad, that is what's going to have to force the Fed's hands to cut. So if I can share my screen here, which I'm going to do over here with this window over here. Let me show you just how bad it really is. Oops, not that screen. Hang on, let's share this screen. Let's do the entire screen. All right. So here is where we're really at. This is the benchmark revision that they're anticipating coming here. We already had 2 years of bad ones. Already had 2 years of downward revision in 2023 and 2024. We're expecting another bad one here for 2025. But what I think are some more telling numbers on the economy, labor force participation. When we look at this, it still hasn't fully recovered back to where it was before the pandemic. And man, like back in the 90s, those were some good times where we had almost 70% of the country working. We're not even close to that. We're down to 62. We want to look at some more bad statistics here that kind of show how rough it is in the economy. I've showed this one a bunch of times here. This shows that 39 out of 50 states have experienced negative GDP so far this year in the first quarter. But here's a very telling statistic. Look at this. Remember how your parents always told you should go to college because that's going to guarantee that you get a job. It's a first-class ticket to the middle class. I wish I could show them this here. Like if I was a kid, I was 18 years old again, and my parents were trying to force me to go to college, I'd be showing them this. I'd be like, look at this. There is zero difference now between the unemployment rate for college grads and the unemployment rate for high school grads. There's zero reason to go to college now because of this. Look at that. All the hard work you do, all the study and everything. For what? What good does it do you? So this is something that the Fed has to know because this is from their own blog. Yeah, the situation is bad. And how bad is it? This is like the worst statistic I've seen right here. What this one is telling us here, this one shows that the number of young adults that live with a parent. All right? Almost 50% of young adults still live with their parents or one of their parents. And some of this could be, well, maybe they are caretakers here and everything. But still, 50%? Does it got to be that high? This is a giant red flag for the economy. Because what does this mean here? I think you guys that are watching, you boys, you know what this means. Because if you were one of these guys that has to live with your parents, you know what you're not doing? You're not going on dates. If you're not going on dates, well, there's a big chunk of money that the economy's not getting. You're not getting into relationships. You're not getting married. You're not starting families. This is a drag on the economy. Because when you think about it, like, just about everything men do when it comes to the work in their lives, they do for women. When they're living at home, women are out of the question. So a big chunk of the workforce, a big chunk of the economic engine is demoralized and demotivated. The Fed has got to know this here. Does Powell want to continue keep playing politics or continue being Mr. Cauchy tiptoeing around the rates here and everything when you got all these problems? I don't know. We're going to find out tomorrow when he speaks here. But what I can tell you for sure is America is definitely in a recession. And when the Q2 numbers come out in another month, we're probably going to see the same 39 states still in red on that chart, maybe even more. Now, what are they going to do in response to this? I'm thinking it might be the largest cut, the largest rate cut that they've done since the pandemic, probably even since 2008. Because the cut that they're going to make in the jobs data revision is the largest cut since the 2009 financial crisis 15 years ago. Big enough to rewrite the entire story of the U.S. job growth for the past year. And it would mean that the Fed has been looking at this strong jobs market that Powell keeps saying is, so resilient. But it never existed. There never was no resilient jobs market. And this matters because jobs are the only data point left to justify the cuts. In September 2024, the Fed slashed rates by 50 basis points and immediately pointed to labor market weakness as the reason. Inflation wasn't the excuse. Markets weren't the excuse, but the jobs market were the excuse. Want a real sign that America is slowing down? Let me show you this here. This is just like a quick little view I've done, a quick little search I've done here on YouTube. Check out these thumbnails here. What it say is, well, looky here. Influencers are quitting their jobs and going back to 9 to 5. You're telling me that Stacy, the suburban princess, has got to stop her little yoga channel and go back to working an office job. That is a sign that the economy is in serious trouble. Or we take a look at this one here from, what's his face here? Economics Ethan. This one I really like. It says, the job search sucks so bad right now that this woman had to go back to her previous boss and beg to get hired again. That's how bad it is right now. So, the job market is bad enough to justify a rate cut. Whether the Fed wants to acknowledge that or not remains to be seen. But here's what we do know about the Fed is that not everyone agrees. Two Fed governors, Bowman and Waller, they wanted a 25 basis point cut in July. They argued, the tariffs are temporary, the jobs are weakening, we better start easy now, but they were outvoted. So here's the dates you want to pay attention to. Number one is tomorrow. Absolutely tomorrow. We want to watch that. Number two is going to be my next live stream next week, which I think will be Monday. Number three, September 5th, we got the August jobs report. And then September 6th, the very next day, we've got the revision where they could possibly erase 1 million jobs, saying, yeah, they didn't really add these million jobs here. They don't really exist. And then, of course, September 16th and 17th, the next Fed meeting. If labor weakens by then, if we got more of these nasty headlines, nasty charts like I've been showing you here, Powell might be forced to cut the rates. Or if we don't have as much of that, he's got enough cover to not make a move, to hold them. But all eyes are kind of shifting to Jackson Hole tomorrow and what Powell is going to say. Now, there's still hope. Still hope in all this here for this year in particular, but a lot of people are thinking that the cycle is going to extend into next year. I am one of them, but I'm not the only one. Alliance Bearstein, which, since they're very bullish, they should probably change their name. They are predicting that Bitcoin will be at 150 to 200,000 next year, and the bull market could stretch all the way out to 2027 as they see it. I don't know that it goes on for that long, but I do think it will go into 2026 just because of how much cutting that they're going to need to do at the Fed and how long it's going to take them to do it. I know that T-Bird out there disagrees with me on it. T-Bird, I'm happy to hear you out. Let's get on a stream. We'll talk it out. Well, let's talk about ETH and the effect that has on ETH, because you see, it's all a line of dominoes. First Bitcoin, then ETH. You know that SharpLink, they're hoarding 740,000 ETH, like a digital dragon. That's hoarding the gold. Wall Street, well, their ETFs are dumping ETH like it's cursed. BlackRock, Fidelity, ARK. Tens of millions in Ethereum thrashed out. About 2.5 billion in inflows, though, are reminding us that still people want this. But the most important thing for Ethereum coming up is the staking ETF, because that will basically turn Ethereum into a preferred stock. Now, preferred stocks are some of the worst investments in the world for people like you and me, the everyday investor. That's because, one, they really don't get much along the lines of capital appreciation. They trade right along the same price. And two, whatever yields they do pay typically is not keep pace with inflation. And three, those yields aren't even guaranteed, even though investors think they are. But these things are ideal for institutions because institutions get a very special break on preferreds. They get a special tax break on them. I think it's up to 70% of the dividend they get to deduct from their taxes. So it becomes a very attractive thing for an institution to hold because now the yield makes sense for them. It keeps pace with inflation, and the price stays very stable. It trades roughly right around $100 or so. This is good if Ethereum becomes an institutional asset, because that's very bullish for something that is a hard fork of Ethereum, because that hard fork is now the more everyday investor friendly, retail friendly asset. Because as institutions start using Ethereum and pushing the price up, it's going to become out of reach for a lot of people, kind of like how Bitcoin is out of reach for a lot of people. They could be doing the exact same thing to Ethereum by turning it into basically the crypto version of a preferred stock. But you know who's not afraid of a bear market coming, as evidenced by this? The institutions. BlackRock, Fidelity, ARK Investments. So all you bears out there that say, oh, the cycle's all over, you really ought to contact these institutions and tell them that they should hire you to consult them, because in your view, you know better than them and can help them avoid losing billions of dollars. Or how about the firm Amdax? They're out there trying to buy 1% of the Bitcoin supply. That's 210,000 Bitcoin. You got treasury companies that are still gobbling up coins like it's a Black Friday sale. MicroStrategy's probably got a Bitcoin tattoo by now. Altcoin hoarders are scooping up more than just Ethereum. They're scooping up XRP, Solana, like they're Pokemon cards. Bitmine is sitting on 1.5 million ETH, over 1% of the supply. You're telling me it's all over? Coinbase is whispering about an altcoin season in September. Market caps, they say, could go up by 50%. And what they're basing that on is that Bitcoin dominance has slipped from 65% to 58%. And then if the rate cuts happen, that will pour fuel on the fire. Now, if Powell pays hardball tomorrow or the Russia-Ukraine peace talks fizzle, we're going to be waiting longer. But as you know, there are no guarantees, only probabilities. So what does the data say? I got some new data here that I can share with you. The ISM Purchasing Managers Index. And what this is it's a bit of a temperature check, I guess you can call it. A temperature check on the economy. Where did I put that? I think I put it over here. No, I didn't. Yeah, here we go. All right. So if it is above 50%, times are going really good. We got a really nice economy and a really nice markets ahead of us when it's above 50%. When it's below 50%, we got work to do. And when it's below 45%, we're probably in a recession. Right now, it's at 48%. So this is like right on the line. And this tells us, well, there's the new orders for producers, manufacturing. This is the raw materials that are being brought into the country. What else do we got going for us here? Take a look at this one. They call this the leading index. Well, what's it leading? Well, it lets us know the indicators, the leading indicators, would let us know whether we're in recession or not. And right now, it is at 98.8 points. What does that mean? What that means is that we're kind of right on the line here. We're still right on the line. This is going to have to make some movement coming up here in the next couple of months here. Whereas back at the ISM, we know we're going to be at the end of the bull run when this thing is probably pushing 60, or we're going to be at the end of like a good economic times when that's pushing 60. But then one of my favorite indicators that somebody still wants to argue with me and say that doesn't matter, but he never wants to come on a stream with me to argue with me about it, the dollar index. It's at 98.65. This measures the purchasing power and strength of the U.S. dollar relative to other currencies and to other assets. I say this is most important here because what causes crypto to go up is money printing and weakening dollar bills. Here we got a very strong dollar bill. Now, Morgan Stanley gave us that very bearish prediction earlier that there's not going to be any rate cuts this year. They also have a very bullish prediction that says the greenback, the DXY, is going to drop by 10% by next year. And if that happens, I mean, one, what that shows you is how powerful the rate cuts are going to be the longer that they are delayed. But that is also a gift to risk-on assets, especially Hex and PulseChain. Because weak dollar means looser money, and looser money means degens will be piling in to Hex, or basically piling into any kind of centralized finance play, like it's Black Friday at the DEX. It recently had a death cross on the weekly moving averages. I'm not a fan of technical analysis, but the last time that happened, Bitcoin hit a new high 42 weeks later. If we do the math from now, that is going to be May 2026. That aligns with another very crucial economic indicator that you probably have gotten very familiar with. Let's see, am I showing it? Yeah, there we go. Global M2. The M2 money supply. This is another big play here, the M2 money supply, because what this tells us is just how many dollar bills are out there in the world, how much money is in circulation. And it falls in line with, I'm not really a big fan of the guy, but Raoul Pal's 2017 on steroids thesis. He's saying that we're going to really experience the 2017 cycle stretched out on steroids. We'll have a weak dollar, more money than ever circulating through the system than ever before. And the global M2 seems to support that. If the DXY comes down, that supports that too. Because you see, global M2, that's basically going to be crypto's mood ring. It's hit a record of 21.9 trillion last month for US M2. And that pushed the global M2 to new highs, and then it tanked. Biggest drop in 7 months. That's a red flag flashing trouble ahead for risk-on assets like Bitcoin or Hex, PulseChain. But historically, crypto lags it by 2 to 3 months, which puts late September to early October in the crosshairs for a local top. Not saying that that's going to be the top of the market right there, but might be a good time to take some profits. So what's the play? What's the play here? And what does all this have to do with Hex, PulseChain? Here's what we got to say about that. Once this starts to get going, which could be September, Coinbase seems to think so, Goldman Sachs seems to think so, the institutions seem to think so. The only namesayer really is Morgan Stanley. Once it starts to get going, you want to be prepared already. You want to be buying right now. You don't want to be waiting until September or until the thing gets going to buy. Obviously, you want to buy it when it's cheap, because what you're going to experience is a lot of FOMO. Now, here's what's going to happen. I guarantee you this is going to happen to you here. You're going to buy, and then Powell is going to come out and say something to make your coins go down. That is a test of your conviction. Markets test your conviction with time, not just the price. Smart investors are going to be stacking up for the long haul, but pocket the cash at the local tops. You just got to ignore the FOMO. And then you also got to ignore the headwinds that are coming down at it. Because I guarantee you, right after you buy, the price is going to go down. Happens there to me every time. But here's the reason for the ultimate conviction. Because you keep hearing the crypto media go on and on about Bitcoin supply shock. and how there's so little of it on exchange. Do you know what has an even smaller supply? Let me show you what has an even smaller supply. Where did I put it? There we go. So check this out here. For the liquidity on Hex. This is just eHex right here that I'm looking at. See, the 351 million, I think that's referring, well, that's not referring to eHex, that's pHex that's referring to. 351 million. That's less than $4 million worth of liquidity. We know that money printing is what causes the crypto market as a whole to go up. But what causes one coin to go up more than the other coins? That is low liquidity. And right now, Hex has got the lowest liquidity out of all the coins out there that, aren't obvious scams and rugs. But the best part of all this here is that we don't even need anybody to bridge to PulseChain and buy Hex. We don't even need anybody to buy it on Ethereum. We just need the DXY to weaken, which will power up Ethereum. And because of liquidity pairing, our price gets pushed up. So, why Hex? I haven't said much about it despite it being a Hex Week speech, but it's because money printing is what makes all coins go up. But what makes the coin go up the most is the low liquidity. You want to think about it like this. Say we got a nightclub. And, if you're managing a nightclub, you ought to know that what makes it go, what makes it popular is having a lot of hot girls there. But suppose you couldn't get that many of them. Suppose you could only get 10 hot girls. But there's 100 guys wanting to come in. Well, those 100 guys represents dollar bills. Those 10 hot girls represents Hex. There's just not enough to go around. So these 100 guys are going to be raising their prices, saying, I'm willing to pay this, I'm willing to pay that, blah, 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 blah. And these girls are going to be pushing up their prices, saying, you better be willing to pay this, you better be willing to pay that because I'm worth it. And it's just going to be this God candle that rips right through like a giant middle finger to all the bears out there that consequently chicken out of ever streaming with me. And that's what I've got for today here. So my name is Cairo Copeland. My channel is Reinvent Ideal. Find me on Twitter at Reinvent Ideal. And check out my weekly streams, my Substack, everything. I will kill the inner bear within you.
I love it, man. You are one of the funnest people to watch and most informative in the ecosystem to this point. I'm so glad you started streaming and sharing content and so you got on Spaces the other day and everything else. So thank you very much for Hex Weekend with making it hexy, getting hexy.
It's my pleasure, yes. And don't forget, Hexagon University, Tuesdays at 7 p.m. East Coast time.
Awesome. We'll appreciate it, man. Hop back on for the Hex panel later. If you're interested, feel free. It's open to everyone, but no worries either way.
All right, Max. I'll see if I can make that for you.
Awesome. Thanks, Cairo. See ya.
My pleasure.
Boom. Cairo Copeland. Popping off. Oh, his talks always keep me energized too. He's got a great channel. Cairo Crypto Hex. One of those very low number of subs to quality content. So check it out. Search them on the YouTube. I'll drop a link real quick. Let me find it. Let me find the link before we have our next talk coming up with Hex DC, Hex dollar coin. That what it stands for. Let's see. Let me find Cairo real quick. Crypto Cairo Hex, I think is the one. Some combination of that. I think I found it. Boom. Drop a link in the chat. If you're not a sub and you like what you just heard, feel free. Boom. Yep, got in there as well. Awesome. All right, everyone. Next up, let's give him a great transition piece. We're doing 10,000X.
Hex is complete. Project not complete. Do not the same thing. Promise returns and go build something. How much X is Bitcoin up now? 1,000X over a penny. Who's designed to replace fiat currency? Back to the 10,000X. Smart fucker I am. Everyone else cries and whines like a little bitch. Oh, 10,000x over a penny. It was designed to replace fiat currency. Back to the 10,000x, smart fucker I am. Well, then it was fucking designed.
10,000x, it's impossible. How can he do that?
Listen, you stupid fucks, everything else is up higher. Bitcoin to 2 million X, $1,500 fucking dollars.
I like that song. It's a great song. Shout out to Post Polar 10,000x song. It was up over a penny at one point, and then down, and then maybe we'll start counting dollars. Maybe Hex will start saying, how many dollars is Hex today? Fast Abdul, how many dollars is Hex today? Maybe that'll be the new measurement.
I like it. Let's talk about Hex dollars, or more specifically, Hex DC.
My body's ready. I'll be around if you need me.
Cool. I'm going to share some stuff if you can facilitate that. So guys, we're going to talk about Hex DC, which is a stable coin that uses Hex as collateral. It's a liquidity V1 fork, which in my opinion has proven to be the most reliable way to make a stable coin, a very decentralized stable coin in crypto. I'm going to share some stats first, and then we'll dive into the protocol. I can get my tech support to enable that. There we go. Just going to share my entire screen, and then I can jump around a lot. So DeFi Llama lists the protocols on PulseChain with the most TVL. We can see here that the Flex protocol is number 4 underneath Power City Earn protocol, Liquid Loans. Sorry, these are top liquidity forks we're looking at. My mistake. So these are the top liquidity forks in the world. PulseChain has 4 of the top 5, including Liquid Loans, Power City Earn, Power City Flex, and Ink Printer. And then as far as the on PulseChain, we can see that of the protocols on PulseChain, Power City is listed as the 3rd largest total value locked. And we can drill down on that and see inside there is the Power City Flex protocol. Then there's Power City Earn, of course, is slightly above that. The protocol itself is pretty easy to use. If you've used Liquid Loans or Liquidity on Ethereum, you'd be able to do it pretty easy. You basically put in your Hex, you take a loan against your Hex in the form of Hex DC, which is a stable coin that tends to be very close to $1. We can see right now on the data display, it's 0.99 cents and change, right? So it's doing just fine. That's well within an acceptable range. The value locked in here is pretty big. So there's $326,000 of Hex DC that's been minted. 217,000 of that is in the stability pool, right? Which I'll explain in a moment. The rest is in liquidity on various dexes, on PulseX and on Fox mostly. The benefit here to taking a loan is that you still have the right to take back the Hex that you took a loan out against. But you don't have to. So, and Richard himself has mentioned in the past, he's told Bitcoiners and other people that instead of selling, they should take loans against their tokens, right? So he says specifically, get loans against your holdings, never sell. In most jurisdictions, this results in not paying taxes against the loan. A loan is usually not taxable. Selling is taxable. So pretty easy to use here. So let's go to the Open a Vault page. Like if we put in a bunch of Hex, all right, so roughly $10,000 in Hex I put in here. So we can see the default is $450 that you're borrowing. You're actually borrowing $550 is without held here in this liquidation reserve that you get back when you close the vault. And then you put in the amount of money that you want to borrow, right? So let's say I wanted to borrow $3,000. It shows me my collateral ratio here, which is 338%. You definitively don't want to go under 110% because that is the liquidation mark, which bumps up to 150% if the protocol is in recovery mode, which doesn't happen very often. But I would definitely tend to stay above the 150% range. There's more you need to learn about this. The redemptions are part of the protocol, which is when people redeem one Hex DC for $1 worth of Hex. The lowest collateralized vault is the one that gets redeemed against. 338% would probably be the lowest collateralized one right now, so you might want to be higher than that. But redemption is a neutral process in the moment where you get $1 of your loan paid off in return for $1 of the Hex that you put in the vault. So it's not as sad as some people say it is. When you get the Hex dollar, and this is the cool part, there's cool things you can do with it. So you can deposit right into the stability pool of the protocol, which allows you to make currently 17% APR, which isn't terrible on stablecoins. With that 17%, you can do whatever you want. You're making it in the Flex token, right? That gets paid out to you as yield, which you can stake, which will give you an opportunity to get Hex whenever somebody does a redemption, or to get Hex dollars whenever somebody mints them, right? You get a percentage of that. So it is a token with true financial utility, in my opinion. DYROR, folks. But then there's other things you can do with the Hex dollar. So we can farm it against other dollars, and there's some pretty decent options. So on 2fucks.io, we have the RH stable stack pool, which has all the liquidity forks. So ink printer, Flex, Earn, liquid loans paired up with DAI. And right now it's paying 24%. So there's another pool here not paying a ton. That's the Power City ones paired up with DAI. But this fluctuates from time to time. So some days one might pay more than the other. Right now, the RH stable stack pool is paying the most at nearly 25%. That's decent. But wait, there's more. So the fiat.io website, which is PulseChain's fork of Aave, allows you to put in Hex DC, as well as many other stable coins and currencies on PulseChain. And you can take a loan out against your Hex DC, or you can loan your Hex DC to other people. The benefit of that is that you're going to be able to, here it is, you're going to be able to put in Hex DC and then borrow one of the other collaterals they have listed here. So you can put in a Hex DC, borrow Pulse, borrow Hex, borrow other stable coins, ETH, Bitcoin. Everything you see on this list can be borrowed, and you can put up your Hex DC as collateral, or you can let other people borrow your Hex DC. Right now, that means you'd be getting 1.65%, but sometimes this number fluctuates quite high. Occasionally, this is the highest paying APR on stable coins would be using the fiat protocol. So something to keep an eye on. And the benefit here, like you can play some pretty interesting games. So just for example, you could put in Pulse, borrow Hex DC, then take the Hex DC, put it in here, and earn 17.61% APR. And if your borrowing fee was less than than the amount of APR you're making over here, you could be making a gain and have larger bags overall when everything pumps. So this is a bit of an advanced play, but something that should be considered. I think there's definitely opportunity here for advanced players to make flow charts, and share them with people to show all the things you can do with Flex DC. And the great thing is that we have now 4 liquidity forks on PulseChain. They're mostly the same. So if you learn how to do it with one, you'll be able to do it with another. The downside is that when you put your Hex into the contract, in order to get your Hex back, you have to pay off your loan. But the upside to that is whatever amount you took out. So let's do this again. I put in $10,000 worth of Hex, right? And then I take out $1,000. In order to get back my $10,000 worth of Hex, I only have to pay back $1,000. What if Hex goes up in price? What if there is a 10x on the price of Hex, which I don't think is that crazy? Then my $10,000 I put in here would be worth $100,000. Okay. Do I have to pay back 10 times as much? No, you don't. You just pay back the initial 1,000 that you borrowed. That number doesn't change. So, if you did this instead of selling your Hex and then Hex did a 10x, you only have to pay back the initial amount you put in. So, if you're speculating, if you need money for, personal things, this becomes a viable option. Now, the other thing that Richard mentioned with, not selling your assets, that could be effective right here too. So let's say Hex does 1,000x and my $10,000 worth of Hex is now worth $1 million. Well, I could sell that and pay taxes on the $1 million, or we can simulate that here by adding some zeros to the amount of Hex we're adding. Okay, so now I got $1 million worth of Hex in there. Okay, I could borrow $500,000. Right? So that puts me in, a position where currently I'm unlikely to get liquidated, though you'd want to keep an eye on it at this range. In most places, I know in Canada and in the US, and I'm not a financial advisor or a tax consultant, but my opinion is that I would not be paying tax on this $500,000 that I borrowed. Whereas if I sold $1 million worth of Hex, I would be paying tax on whatever gains I had there. So, this is a game that rich people play all over the world. And as far as the cost of borrowing, it's extremely low. Like there's zero interest. So you have a zero interest loan here. There's a one-time borrowing fee. We can see that off to the right here. It shows 0.69%. That fee is actually variable depending on what the protocol is doing in the moment. It goes up and down based on redemptions. It starts at 0.5%. Right. So if there's not many redemptions happening, it can be as low as 0.5%. 0.69% is definitely reasonable. I wouldn't personally shy away from that if it met my needs. But that's something that you can watch for to make sure you get the best deal. If you see 0.5%, that becomes a better day to borrow against your Hex. Now, when we look at the concept of like, okay, I can put some Hex in here and I can borrow against it, and then I get the stablecoin. Well, then when we compare right now, like with the current scenario, with the current staking values of Hex, most of the things that I've showed you are higher APR than you get for staking your Hex. Now, you're not going to be able to use the entire value. So, I put in $1 million for the Hex here. I borrowed 500,000. Well, I can't use the whole million for staking like I could if I just staked that Hex natively. But if we take the half value right now, and we take half of roughly 18% here in the stability pool, and that would be 9% APR, which is still higher than you get paid to stake your Hex right now. And ultimately, you're much more liquid. All you have to do is pay that back. If you deposited the amount that you borrowed directly into the stability pool, that would mean that you could pull it out at any time. There's no lock there. And you'd be able to pay off your loan using the same amount that you borrowed with very little risk, in my opinion. I do want you guys to do a little more research on redemptions and how that stuff works before you proceed. I won't have time for that today, but there's definitely some pretty cool games that can be played here. The other consideration is going to be the actual Flex token, right? So the Flex token is on the market, right? It's not at its highest price it's ever been. It's not at the lowest price it's ever been. I think it's gone through a couple different sort of like up and down cycles. So you can just buy Flex off the market and then stake it, and then you get a piece of what everybody mints and what everybody redeems. So you're going to earn Hex. You're going to earn Hex dollars just by staking that there. It's single-sided staking with no lock. Then the final component that I think is interesting to understand. So first off, we're going to touch on liquidations. So when there's a liquidation, that means a vault falls below the 110% collateralization ratio, and it gets liquidated. That person's has lost essentially 10%. So you want to generally avoid that, but they don't have to pay back the money they borrowed, right? So if I put in the $1 million worth of Hex and I borrowed $500,000 against it, and then the price of Hex went down, so it would be very close to that $500,000. Like then, and I got liquidated, I still get to keep the $500,000 that I borrowed. So it's not neutral. It is, it's something you want to avoid. But like mostly based on the prices of that day, you didn't lose much if you borrowed against that Hex, right? If you're not, it wouldn't have been a big gain if you'd sold on the day that you got liquidated. So that's a consideration. But if you are on the other side of that equation, and that means you're staked with your Hex DC inside the stability pool, you actually benefit from other people getting liquidated. So the Hex DC in the stable pool goes to cover the liquidations. Some of it gets burned. You don't get it all back, but you do get a bunch of Hex back, which is in excess of the value of the Hex DC that you lost. So people in the stability pool benefit from the liquidations in the moment when it happens. They end up getting Hex inside their wallet that is worth more than the Hex DC that gets burned in the liquidation process. So, bigger players will put a lot in here, and when there's a liquidation, those guys actually feel pretty good. And then often they roll it back in. They might sell that Hex back into Hex DC and put it back in the stability pool, or they could put it back into their vault to recollateralize their loan at a higher ratio. There's a lot of flow charts we could go through here to show how this works. But the bottom line is, I feel like these liquidity forks are solid. They've proven to do a very good job holding up like the peg of the stablecoin. They tend to be very close to $1, slightly over, slightly under, and they are probably the stablecoin that did the best when there was the big USDC crash a couple years ago. They actually went well over $1 during that time because people were fleeing there for safety. This is not a stablecoin where the funds are being held in some guy's bank account. It's all on chain, right? Like every single bit of it is immutable code that maintains the peg of that stablecoin. It could work if Hex does a 90% drop. Hex DC should still be $1. If Hex goes out, does a 10,000x, Hex DC will still be $1. And there's definitely some interesting strategies that I've employed where if you get Hex DC when Hex is high, and then there's a dip, you can then redeem your Hex DC for more Hex than when you immediately took out that loan or bought it off the market, which you can certainly do. So there is a redemption option here where basically you put in 1 Hex DC, and it's not going to give me numbers because I don't have it in my wallet right now. Oh, maybe I do have a little bit. Nope, I don't. You can put in Hex DC here in the redemption screen, and it will give you that value in Hex according to the protocol. So depending on what's happening that day, if you took out a loan again in Hex DC or you bought it off the market, and then the Hex price drops, then you can put it in, and it will give you $1 worth of Hex based on that day's value, not on the day where you took out the loan. So there's definitely an opportunity to get more Hex with this technique as well. I'm going to take a look at the audience here and see if we have any questions. So I know I ripped through that super fast. Yeah, I don't see any questions there. Okay, Max, I think I about caught up on all the details there. Maybe we can get back onto schedule. But the bottom line, guys, is that these stablecoins on PulseChain, like all the liquidity forks, they're an important part of PulseChain. It increases the TVL. It reduces what I've heard called bridge risk, in that these are all minted on chain. They're not bridged from another chain. Even if the bridge went down, these stablecoins are still going to work just fine. And they can be bridged to other chains, which is something I would like to see in the future, is to have the PulseChain native stablecoins, of which we have 4 that are minted effectively on chain. They could be bridged to other chains and paired up against other things. I think that would be cool.
Excellent explanation of all these awesome products built on Hex. I wanted to go take a look at the native stablecoins. You brought that up. I thought that'd be interesting to take a look at real quick. Where?
Sure.
I see it locked. Where? I'm gonna go Pulse. Does Pulse Charts have this, or is GoPulse? I thought I had on here.
What are you looking for in particular?
The native stablecoins. Probably Bridge.
I don't know of a particular list, but off the top of my head, we of course have the 4 liquidity forks. So USDL, Hex DC,
stablecoins. Oh, here we go.
EXDC, INCD. There we go.
Yeah, that's the list I was thinking of. That's the only one I could think of.
Yeah, that one's missing some. Missing. We got Coast, and then we have INCD backed by Inc. is not on that list.
Oh, okay. Well, feedback for Go Pulse. I don't know if Pulse Charts has it. Let's do Bridge. Let's see if they have any stable coins. It'd be cool to click staples up here. No,
Liberty Swap also allows people to swap directly into these stablecoins now, which is cool. And sometimes there's even an arbitrage. You can move like USDC on base into Hex DC or some of the other ones, and they allow you to actually have a little bit of a benefit.
I see they added the Ink D on here. Yeah.
Yep. I got the Ink D.
Not middleman D, Ink D. Awesome. Yeah, Liberty Swap. Shout out to Liberty Swap. If you guys want to hop on Hex Week, feel free. Liberty Swap, Gibbs Finance. Anyone who's on PulseChain.com is welcome to join Hex Week. Pretty cool. Pretty cool. Axis. He knows a little bit about Hex and the price history. Do you think was he a good person to do that talk? You think?
Yes. Yeah. No, he's a TA guy. He'll be able to do it.
He can go for like an hour and a half on that, right?
Oh yeah, he can swing it. Make it 3 hours.
I just want to check with you first because I think he's up for basically the rest of the conference doing Hex price history, but I just want to make sure that you had confidence in him.
There's so much to say there. It's I think he'll really enjoy himself.
Nice. All right, Fast Abdul. I will see you soon. Hex Marketing at 5 o'clock Eastern. Around that.
We'll be there.
Awesome.
See you in a bit.
Thanks, man. Thanks. All right, let's get a rockets up.
Yo,
All right. You're back. I'm so glad you signed up for the rest of the conference to do Hex price history. I know you were looking forward to that, according to the last.
Glad to be of support.
It'll take at least 3 hours to go through each candle.
I mean,
on Hex day by day.
I'm going to do my best to give you a full recap of what happened with Hex.
Like
what up, RH Mexicans? How's everybody doing out there?
I haven't heard a name for the people who are fans of the channel yet for a while. I've heard of RH Mexicans. We got
happy to be of
Maxis.
Maxis.
There's a lot of good ones for that. I like that. Okay, so Axis is gonna from here on each again. We got about 1,800 days. So we'll give you the exact answer. Each daily candle, he's gonna look at it, point at it, and then draw a little squiggly line and tell you what he thinks it means from day one until
we're going back to the 5-minute candles.
Going back 5 minutes.
The beginning.
take as long as you need. I'll see you soon.
All right. Yeah. So this is the Hex chart, guys. This was the beginning. This was the beginning of the entire story. One thing is we don't have all the price data because the first couple weeks of Hex, the price was based in Bitcoin and it was on an exchange. I believe it was called Bidesk at the time. And the roughly the starting price is this yellow line up here on it was between 3 and 4 tenths of a cent. So that key level actually is significant in PHEX even to this day. That 3 tenths of a cent, 4 tenths of a cent. We actually bottomed around there not too long ago here on PHEX. And so this, I think it's just really cool how you see these levels play out, 5 years into the game, and show their significance. But that was the starting price for Hex was up here. And again, I don't have the data that goes back to the launch date of December 2nd, 2019, but it really doesn't matter anyways, because pretty much the price just got moved down. People were going to the adoption amplifier and getting coins from there and then arbing the price down on the exchanges, and people were fighting back and forth between 1 and 2 satoshis to basically double their money and sell. And then I know Johnny Chaos famously got left behind on one of those early days moves, probably somewhere down here on the bottoming. It was on the BTC pair. And then the price doubled and never went back. I guess this is a daily chart. As we move forward through time, the price crashed 99% before it ever did the 10,000x. So that's like the first most important piece to know. And the bottom date was February 5th. This wick here, you can kind of exclude it. It wasn't really indicative of real volume. This was because this is pulling data from a Uniswap pair or some other side pair that wasn't as relevant at the time. But that actual bottoming price was around 3 zeros and a 5. So even Pulse and PulseX are still below those price targets today, just for comparison's sake. But then sometime in February, there was the first markup, and it ran 6x in 5 days. And that was, early February of 2020. And then after some sideways consolidation, I do remember this period of time, and you can see the volume spikes down here on price. There was like a FUD event that was going around in February of 2020 where I questioned whether I should name names, but this guy was pretty public anyways with what he did. So I'll just kind of explain where I can, the people that were involved. But there was a huge FUD wave that went through the Hex community around this time after having this 6x markup, where people were like confused, concerned that the origin address of Hex was taking coins that it had received in the form of Ethereum and then recycling through the adoption amplifier to basically level out and even the playing field between the market price and the adoption amplifier price, so that there wasn't cohorts of people getting like all of the supply for that given day. So if you don't remember how that worked out, in the AA days, you'd put your ETH into the pool and there was like 550 million Hex per day that got emitted to the people who put into the adoption amplifier, and that going on for the first year. But during this particular phase is when the OA actually started to act by redepositing ETH in there to like take a bunch of the supply off the market and prevent massive arbitrages from happening, so that it wouldn't put so much sell pressure on the chart. And we'll find this over and over, this theme of the OA stepping in ways to remove supply from the market as we go forward. But this particular time is when that Knightley character, if you know who he is, he got out there and started making videos about how he'd started doing some chain analysis and said, hey, this is what's happening. This is likely to be scam-like behavior, because we had no way to know for sure, because you, as a founder, you can't publicly state your goals, or otherwise you're creating expectations, and that's like illegal. So, I remember he famously dumped a bunch of it off this price performance here. He dumped a bunch of his supply and emergency end staked a bunch, and then tried to get the community to follow him off the cliff, so to speak, into another token that kind of emulated what Hex did, called Wise. And to this day, I think the Wise Ethereum pool, so the token that he ended up creating, has one of the biggest liquidity pools in all of Ethereum, because it was one of the first examples of locked liquidity. So, I mean, Hex laid the groundwork, and tons of copycats came after it. And this was just one of those periods where early on in its life, we saw people leave and go to a copy, and a lot of that volume is represented here, but there's also more that was on other exchanges. Anyway, so it was short-lived, and by March, the price had already started to recover again, and within 20 days, it was back up another 3.5x off that low, and it might have been more because we're not capturing all the wicks. The early day data is kind of not all here, but that led into basically this period of consolidation before price discovery. So up until this point, even though I'm like a day zero Hexican, so to speak, and I did participate in days 1 and 2, during this period of time, there wasn't that much awareness around Hex, and there wasn't a lot of activity or interest, or there was like this diehard community that was into it then, but it wasn't the same as like what happened after we saw the infamous God whale come in and start to create massive price appreciation in a very short period of time. And I remember this period here, it was in April. There was like a 2x in price in a single candle. And I want to say that it was 10,000 ETH market buy. I think it was a 10,000 ETH market buy that basically doubled the price in a single candle. And I think that's here. So between these two candles, basically you get this 2x move. That was just like, it really started to set the Hex bull market in motion. And then there was all this follow through that came through as well. And this was a pretty cool time to be in Hex. I remember after this single doubling, the price ended up doing another 5x on top of it. And this is like where the market really started to pay attention to Hex a lot more. This here is, I'm calculating about a 12 or 13x move in 27 days. And then that marked the local top for that time. This is when people like Kareem came on the scene and got really vocal about staking. And there was a bunch of guys like Cabana and Big Kirk. And I mean, there's tons of early OGs, RG and Dollar Cost and Hexo. They were all very public during this period and kind of trying to share information about what Hex was and how it worked, and everyone was kind of figuring this stuff out on the staking side of things going into big payday. So, you know, by the end of May, we had topped on Hex. And you could say that was like its first cycle, really, truly. And then price really went into a bit of a decline. I think price dropped like 60 to 70% here. Same 60% drop over a 45-day period. So in the first, you know, got to think in this short period of time between December of 2019 and then the bottom on January 5th, and then through till the following June, the price had already done a crazy, even from that local low, it had already done like a 55x. And I remember at that time, RH was talking about how many X's we did versus Bitcoin, how many X's we did versus Ethereum, and then obviously the X's versus the dollar, which I have represented here. And this was getting to be exciting because there was a bunch of new money flowing into the space. And around this time, Uniswap started to get popularized because of Hex's success. And a lot of that trading volume moved off of the few centralized exchanges that we had and moved on to onto Uniswap. And as people started to learn how to do that, price started to recover, to use the Uniswap to like basically get in and get out and stuff. Price started to recover, and then it came up here and did like a topped out right at a double top, a pretty important area to this day too. I'll mark this one out. It's basically 0.6 cents. So what I got for you here is basically where the price of Hex had always had some bit of a floor price, which was up here between like 3 and 0.6 cents. And as we go forward, you'll see the significance of those levels going forward. But at that point in July, you know, it was the middle of DeFi summer, and so there was a lot of capital rotating between Hex gains and all these other opportunities as well. Like I think Aave came out, and obviously Uniswap was out at that point, and you had people like Richard even saying, "Hey, rotate your free airdrop money from these other things into Hex and stake it for mad returns." And but there was just a shift of capital, and the FUD never really stopped because this was all leading into what would be the big payday, which was the end of the adoption amplifier, and kind of the most exciting twist of fate that we would ever see in Hex. So at this point, so there was a double top, price retraced all the way down to new lows. It was a 69% crash, so 70% crash, and because the books were so thin at that time, it was really a game of playing with liquidity back when nobody really knew or understood how that stuff really worked to the same capacity as they do today. To give myself some credit, and many of you other people out there who have educated the community on how to use this stuff have went on and created projects and done amazing things on PulseChain with like the stuff that, you know, Richard and a few of the early Hex whales were doing back here, which was like removing liquidity at certain areas to make it easier to pump, or adding liquidity to buffer and support price. This was all going on during this period of time to try to get the price back up to make new all-time highs. It was always a combination of that, and then just that real world demand that kind of created this breakout moment going into big payday in November of 2020. So what happened was market makers bottomed the price. There was like a small accumulation range in here, and I remember myself, this is where I really started to pay attention to the chart, was in this consolidation point right here, because it was clear that if this could hold, this is going to make a big rip going into this exciting mass yield day, this big payday event. And so it makes logical sense that there's a run up on price and markets that goes into like a big event. Just how it always is with launches. And once the launch happens, it's usually this idea of sell the news. And that's exactly what happened for Hex. But it was interesting, right? Because in this case, the price, let's see, in terms of percent, we got a 7x. Not unlike we had a 7x in Hex last year, from the bottom around 0.3 cents up to almost 2 cents. I think it was like 1.8 cents or something. Or no, it was like 2.4, I think. We'll check it in a second. But it was a 7x move roughly. So Hex is known to do these 5 to 7x moves over the course of this chart already 3 times. And so then what happened was on the day before the big payday, the OA came in and staked all of its hex that it had gotten through the adoption amplifier. So this caused even more concern, more FUD, because people didn't know. Many people looked at that and were disillusioned by that, thinking they were going to have these huge APRs and they were going to be able to pull off their stakes the day after big payday and dump all this value for all this capital, right? That was just sitting in these pools up here. And so that's where there was the initial sell-off. This was leading into the event. There was the first sell-off, and then there was a consolidation and the possibility that this would not crash, right? And then the OA goes and stakes, and it flooded a lot of people out anyway. It would have been sold off anyway. It was amplified and freaked out a bunch of people. Price dropped 89% in just a couple days. And created this huge wick. And I remember this day so strongly because Hexologist had a stream going on, and he bought the bottom of this wick. It was like around like 0.002 ish. I remember him putting the buy order through on stream with a bunch of the guys on the 24-hour big payday stream. And this was my first real exposure to the community, was watching that stream, because even though I had been in Hex for that long, I didn't really know that there was like a community here that was actively like participating and communicating with each other and had something good going on. Because at this point I hadn't even came out of the woodwork yet and started streaming with like whales in the early days and all that. Yeah, so the price bottomed off that low, and then it created this, like, this was a really interesting time because there was a lot of like the cult mindset had been set in for sure, because there was a camp of people that really thought that what the OA did made sense and was good long term for the system, and then there was the camp that said this is scammy, and then they all basically got out here. But as the price was able to create a double bottom fairly effortlessly in just like, I think it was like 15 days, yeah, so it was 20 days it bottomed out here. I remember watching these candles here specifically on like an hourly chart and just watching this thing pop around like 1 or 2 tenths of a cent. And then here you have just this little candle here was a 50% candle in a day. That was really indicative of strength and demand that we just didn't know would be there until this started to play out. And as the price reclaimed each key level, it just refused to go break those levels over and over and over again. It just kept making higher highs and higher lows. And this is where the FOMO really started to set in, I think, for Hex users, is like, okay, this thing survived big payday. It's making new highs and new lows every few days. My time to buy coins at these prices is running out. And you could see how like these periods of time are very short before it ran up to the high again. And so there was a definite, there's definitely a voice in the back of every hardcore Hexican's head saying, I got to get as much money into this thing during this period as possible. Like this mass FOMO. And then on New Year's Eve of December of 2021, so going into January 1st of 21, the price actually wicked all the way up to about 2 cents. So I'll put a line here for that. You can't see it on this chart, but this candle here pumped all the way to 2 cents in a single candle, which was like a doubling. And then that marked a local top. So it was the new all-time high, a local top. And then that went into this period of sideways accumulation above 0.6 of a cent. And I remember this period really, really clearly as being like a huge accumulation range. And it seemed so, when you're watching the chart pump like this, you know, it takes this many days, like, I don't know, 30 days of sell off to tap a low, and then it just pumps right back, and it pumped right back in like 10 days or something. And then it did it again. And then it created like something to look for. And even in our charts today is these periods here on like a 15-minute chart or an hourly chart where you see a price candle print down or print up, and then it wicks back. It's indicative of that there's market makers that are absorbing supply at a level. And so that's what was occurring during this period. It was just kind of like these were like little washout periods to remove dead sell pressure from the chart early before the bigger markup phase. And I remember this period really clearly. It was the same kind of feeling as we had here, but this time it was like, all right, the confidence was growing that Hex was going to go on to take out 2 cents and go a lot higher. And then that's exactly what happened. We started to see big buys from Godwhale and a couple other big wallets that moved the price up slowly over the next, like, I don't know, 20 days ish, maybe. It says 31 days. So 1 month between March of 21 to April, where they marked the price up to the high at 2 cents where that yellow line is. And then they let it bleed one more time. And then this was like the big move where, again, where like Godwhale and a lot of the big players stepped in and marked it up to, it's saying it wicked up to 8 cents. Like this was around the time frame when the PulseChain sacrifice got announced. And so then the game became like, all right, let's make this thing as expensive as possible and then use the Hex to sacrifice for this new blockchain that Richard was going to launch at some point. And so we had these were like the glory days of Hex, where it just seemed like we couldn't lose and everything was going amazing, and we just, even though things would sell off, they would always recover. It just felt like there was a constant bid under price, and for all intents and purposes there was. And basically between the announcement date of PulseChain and then the actual sacrifice going live, from this local low to this high, price appreciated another 5.5x. So you had 5x more PulseChain sacrifice power than you would have had otherwise. And there was a lot of games that went on after the PulseChain sac went live. And so at this point, I remember on this particular candle here, the price actually wicked to 21 cents. I was sitting in my living room, and this candle here actually wicked all the way up here to 21 cents at this yellow line, and was immediately sold down, and the sac went live, and then people started sacrificing, and then there was profit taking occurring. And then I remember this particular candle with the wick was like was detrimental. Like it destroyed confidence and short term in Hex, and like the people were questioning who did it, because this community was quite small back then. So people with enough firepower to really move price down 54% in just 5 days was predictable to some degree. And there was a buyback on that, and PulseChain sac narrative was in full force. And once again, you had this double bottom maneuver around 10 cents. And this is where we kind of the train started to leave the station for the rest of the bull run. And at this point, Hex really started to overperform the rest of the market to the end of the cycle. Because at this point, like BTC had already topped and ETH had already topped. And so this was just like a hedge play. And I remember we were looking at things like nomics.com and just seeing the price just climb. Like every day was climbing. And so from that local low at the end of sac phase to the high, Hex went up another 4.2x to hit that, like, it was basically like 52 cents. It was, some exchanges got 49 cents, some of them got 56 to get the 10,000x. And there was a deliberate effort to make Hex accomplish its goal of getting the 10,000x. And it was at this period where, you know, all Hexicans felt unstoppable and that this thing was never going to go down. And that's when the PulseX sacrifice phase, as we started to lose these key levels up here in like the 36 cent range, we're only up there for like a month above 36 cents. Is at that point where prices started to decline, and then the PulseX sacrifice was announced, and that gave us a second jolt of energy. So there was like just a couple of major moves here. I kind of want to brush through this because I don't want to spend too much time, but because this is like the less important part of the lesson. But because we're getting into a bull market now, so we need to know the context. Lots of ascending triangles, lots of accumulation where things go sideways for a month and then they rip. Those are hallmarks of a really bullish economy. But this is where we did the PulseX sacrifice. So from that 56 cent high, let's say, down to basically 10 to 12 cents is where we bottomed out. And then this PulseX sac went live. Price ran up another 2x, 2 to 3x. And a lot of sacrifices went on for PulseX during this period. You had people getting in, getting out. The community had multiplied in size by maybe 4 or 5 times from that original 20 to 25,000 user base up to like a couple, like 100,000 to 150,000 potential users. That's when we, after that sacrifice launched, that's when we had a couple things happen. So I remember this period because I went live with Richard Hart for the first time live from the Rocky Mountains of Colorado on a Hex ski trip. And he had said on the stream that he noticed that there was a a brick of liquidity. I think it was like $2 million of liquidity that was placed on Uniswap V3 right below the price, around 20-ish cents. And that was in this zone right here. And there was an attempt to reverse price here to support it and create structure here and to stop it from going lower, but that did not happen. And the market just flipped bearish, and we lost this global trend line, which had been the entire history of Hex. And that kind of started to mark the great fall in some ways of Hex, where that liquidity brick got eaten through. Obviously the market maker, whoever did that, said, well, that's not sustainable. I can't put up $20 million bricks and just get, lose 20 million every, like on a regular basis to try to support the price all the way down. So that behavior kind of stopped. And then there was one more brick that was put around 3 to 5 cents. What do I want to say about this? So after PulseX SAC was complete, there was like another consolidation attempt, and prices were ranging between 10 and 20 cents. And I remember this was around the time that I launched, I believe it was around the time that I launched Radial, which is where we went deep on like the larger global economics and how they played into why we needed Hex. And during that time, we were in this move here, and the price doubled. It went from 10 to 20 cents. And there was a lot of people that were jumping on the bandwagon that this was going to be like a big rally that would help save Hex. And unfortunately, with all of the headwinds of like the outrage marketing and the Bitcoin and Ethereum bear markets in full force, Hex just didn't have enough to do it on its own. And one of the largest liquidity providers pulled a bunch of liquidity and started dumping out his entire stack and completely destroyed the market structure on Hex and pushed us all the way to him. And I would say that player and a couple others really saw the writing on the wall and knew that the doorway was small, just big enough to get a few large players through the doorway safely. And that's what happened. Was there was an exodus out, and a bunch of liquidity was removed, and a bunch of Hex was dumped, and it pushed us from that 20-cent high in May of 22 all the way down to like 3 cents in 46 days. That was devastating for the ecosystem, and everyone was trying to call bottoms, and everyone was trying to say, that where we're gonna pump to off the next rip. And there was attempts made. Even Godwell came in here and bought on one occasion. That was right here in October, I believe. Yeah, I want to say it was here in October of 2022. So there was like an effort to support price above that 3 cent level, but it just wasn't enough. And so this is where things get interesting to me. So after an extended period of a Hex bear, and everyone was against us at this point, the price bottomed out around 1.7 cents. And I do remember that. It seemed like an arbitrary level at the time, but it was basically just right under that 2 cent wick high from the New Year's Eve of 2021, right? So it made sense to be an area to try to create some upward price momentum. And so with the imminent PulseChain launch coming, there was one particular market maker that I remember came in here and basically, as price recovered, ejected the price out of this zone and pushed us from like 3 cents all the way up to 4.5 cents. And because I had direct communication with this particular player, I got a little more insight on what was going on during this time frame. And it was a scary time to be a bull in Hex, because there was no guarantees that you could get out of this trade, with injecting this much capital in and trying to make something happen, that you wouldn't get in and get out without getting your face ripped off, because it was very much PvP at this point. And so even during this rise in price, going into the PulseChain testnet V3, which launched right at the peak here at 12.5 cents, it was easy to be bullish if you weren't the guy putting the money into the system. There was so many unknowns going into PulseChain, like how much value was going to get diluted through Pulse and PulseX. Which hex is going to retain more of the market share, eHex or pHex. And that's to say nothing about Inc, because everyone at that time was so scared to do liquidity providing, because they had been so conditioned to buy Hex and stake it and do nothing else and not learn about blockchain at all. So that most people were too scared to even go into the liquidity pools to start. I'm talking general users, right? So, so because there were so many unknowns, there's two key events that happened during this period. During this period here, there was the USDC DPEG event. So USDC lost its dollar peg for a brief period of time. And the OA stepped in and bought a bunch of the USDC and saved the price to get it closer to peg. Or I'm sorry, was it? Yeah, it was USDC. And then people that were in USDC, they rotated their USDC into Hex to preserve value in a time where there was uncertainty around USDC. So it kind of worked out nicely because you had the OA arbing the price of a stable coin, in which he made, I think, 33 million on. Don't quote me on it. He made a bunch of money on that arb, and he prevented from even worse things happening to the stablecoin market. And then his users took their USDC and put it into Hex to help Hex recover in this period here. Because I remember the infamous market maker, who will remain unnamed, was worried here that there was a couple big stakers that were getting like 50 million, 70 million Hex stacks all out from their stakes at this time, and then we're liquidating some of it. And so it was like a question of who's got more power to force the price up or force it down. And luckily, the DPEG event gave us enough juice on this rally that price recovered and was structurally intact again. And then things looked good. And then there was the final markup wave going into the PulseChain testnet V3 in I think it was March of 23. And that was actually I was on with Max on his channel and with Crypto Sloth on his channel when that happened. And that was a really fun time to cover as well. I think at the time, a younger version of me thought that maybe we could save the price of EHEX, or like that we wouldn't see as much collateral damage as we did. And I actually thought we would see 20 cents at that time, and we never did. That was like basically that marked the end. And there was a few market makers that it became clear after about 2 or 3 weeks of this that lower highs, lower lows, like structure being broken, like that this was going to be an extended correction. And that's exactly what happened. Too many people looking for the exit door, too many unknowns, and too much value to be pulled out of EHEX to put it into other places that might be more opportunistic. And on the actual launch of the PulseChain here, it was ahead of the actual announcement from Richard, but somebody saw the blockchain go live and started to absolutely nuke. There was a huge recovery candle on EHEX here on May 11th. And then when the official announcement came out, like on the 12th or 13th, that it was live, at that point, there already had been a huge correction in play already. And so that's the nature of the beast sometimes with markets, is somebody gets the information first and then they act on it. And that's exactly what happened here. Is some group colluded and got a bunch of value out of it, and good for them. And then the price tried to recover around like 3 cents, and then it was just cascade all the way down. All of these guys that had bought in here and over this period of time were now underwater, and they had to make some decisions. So that set up EHEX for a pretty brutal last couple of years. I'll close out with this because it's already been going for quite a while. There was 2 events here. I don't know if we need to go into too much detail. There was an alleged scammer that came in here and pumped the EHEX price like crazy, and stayed in the trade for a while and kept trying to help it stay above this level. But it wasn't until the Richard Hart FUD tweet that PHEX was the dominant hex did we get this huge crash on EHEX. That was pretty brutal. Just a few whales, I want to say like 3 or 4 whales, liquidated their EHEX bags here on these candles and just totally nuked the price. And so ever since then, EHEX has been trying to find its place in the market, kind of trending sideways between 1/10 of a cent and 0.6 of a cent, with like that 3.5 tenths of a cent being a major level to watch. We can flip that as support Remember, that goes all the way back to the beginning. So let me go to a weekly and I'll show you that quick. Yeah, so basically back to the beginning, guys, like from the launch price here through the big payday events, setting a bottom, and then now we're just basically, that's the level to beat. Currently, I see a pennant here, so we'll see which way this breaks, but EHEX still fighting with its early days, the curse of its early days, I guess you could say. In addition to, I just wanted to show this chart, which was, I've got a couple cool things on here. So you can see, I wish Gerardo, if you're listening, I wish we could see EHEX, PHEX, and all the PulseChain assets market cap on one thing on here, because that might give us an indicator of where the market cap of everything is sitting. And it's definitely not down here where EHEX is sitting. What this chart shows is it's the ROI from the launch price. And but if you could see the just the market caps of all of the Richard tickers, we're probably sitting much higher. We're probably sitting up in here somewhere, which is like low enough that it's still behind the trajectory of where ETH was at the time, or Bitcoin, but it's also in terms of its lifespan, but it's also in an area where it's still a huge opportunity for people, to get involved in this ecosystem before it does inevitably have its big blow off moment. So if you take the two prices combined, it's sitting right here. We're at a 30x combined price ish. So EHEX plus PHEX, if you had held through the fork, you're at 30x the launch price of EHEX to this day. And that's just, that's not indicative of your PulseX, or Inc holdings. It's just, had you held liquid Hex from day one, you'd be up 30x. Pretty crazy. I think that's all I really wanted to cover. Max, if you wanted to pull me down or whatever you want to do. We can always, there's always the opportunity to talk about where things could go in the future, but that can be an arduous task at times. But in the short term, PHEX is looking pretty sweet, if you ask me. That 1 cent level is being retested. That needs to hold a support for consecutive weeks. Like it's got to be able to eat sell pressure at that level and not go below that level for some amount of weeks before I'm comfortable saying that, all right, we're ready to go take out that 2.8 cent resistance level. That's been the bane of PHEX's existence since launch. Hey, thanks, Archie.
They don't want me to come back. They want you to keep going. I've been trying not to. And every pause, I'm like, what else you got? Go down another rabbit hole. Go.
Yeah.
So
Yeah, there's a lot more in there, but yeah, there's a lot more in there. They just, there's a lot of players that have come and gone over the years. So
dude, which makes me, I gotta say, like this whole, call it a reset, call it a renaissance, call it a, we're all just sitting here hoping and putting it, doing our best to, do this and that, just wanting something amazing to happen, and again, building products or whatever it is around the ecosystem. That's what's special. I think this whole community, again, some people left, new people come, all that stuff. But I really think channeling that, and I just posted the video yesterday about PulseChain launch, and how every time I watch that video, I'm just like, oh, that is just such a magical moment of like something we were like waiting around for and just, getting excited for. And then it launched, and, things were good for a little while, and the ups and downs in between. But it's like that moment I want to see again for Hex. I want Hex to have that. Yeah. I don't want to call it a comeback. I still feel like the tech is there, the community is there, all that stuff. But the comeback on the price wise to show and reflect the value of like my favorite token on earth. So
I think it's possible. I wouldn't still be here if I didn't think Hex didn't have still big moves left in it. it's just going to come down to timing and Ethereum and I think you're getting the signal right here, man. I mean, this MACD, it does this once a year so far, where you get this cross, and it's like, okay, so maybe this time we can actually break the range. And then just think, if we can start trading above 2.8 cents for any period of time, like I'm talking like 2 months, I mean, that's a whole new range between there and 10 cents. And we could be doing that for half as long as this period. So, because usually, you know, when things get bullish, they don't stay there for long. So imagine being stuck. Okay, this is going to be crazy. Imagine being stuck up between 3 and 10 cents for like 300 to 400 days. It'll feel like, oh man, I just want the price to go up. But it's really from these levels down here, you're going to have this 5x gain, right? Hex is famous for making 5 to 7x gains. It's just about locking them in at a level and then creating new structure up there. And I think that the protocol has never been better positioned to get those gains because you don't have so much free weight sell pressure on the chart. With any amount of new users coming in, you know, maybe marketing, maybe Richard streaming, maybe Interpol FUD gone, maybe central exchange listing, maybe any kind of number of catalysts come into play. Maybe another movie gets made, and then that stuff's going to start to compound and give Hex that price potential we all know it's capable of.
Do you think this run will see a new, you know, if like just everything just fell out during as far as price goes during the bear market? Do you think we'll see a new floor, a new like, hey, like there'll be, you know, if you could travel, you know, see the future for 6 months, a year from now, hopefully PulseChain's popping off, everything is just going great. Hex is, you know, doing amazing, and there's a ton of liquidity here and there, and there's just this whole new environment that would keep it from going down, you know, 99%, like extreme volatility. Again. Yeah,
absolutely. That's the idea, right? This hasn't been able to make a new low in 826 days. So on that trend, I mean, it's a tiny trend, but it's there. It's strong. This is your trend. So I guess you could play this out, and people are going to be sad because it's going to take a long time. But if that's the trend, I mean, sorry, all my old folks. By 2037, you'll never go below, let's say, 3 cents ever again. Now, is that likely to be the way that it's going to play out? Probably not. Probably not. Probably be a little more accelerated than that, I would like to think. But then you could take that the other way too. It's like, okay, if that's the lower bounds, what's the upper bounds? And then it's like, okay, by 2031, we should be at 10 cents on the high end. And I know it's a very crude example, but this is the trend, is this channel now. And we can way overperform that. And I give that case with the Tron example with TRX, a coin that was, you know, announced dead on the scene in 2018, but it did a 39x over like a 7-year period of time, and it just keeps looking stronger and stronger and going more parabolic. This could be that kind of a setup now where the community is there. It's you got your hardcore base. You know, I think of gosh, I'm jumping around like crazy, but I think of like video game consoles, like how there was like the different camps for like Nintendo, Sony, and Microsoft growing up. And each console cycle there was a declared victor, but they all still lived on and created new things. And each cycle, or each video game launch cycle, one of the three companies kind of took the lead over the other ones. And Hex is going to have its time to be the main one too, because we got the community, we got the tech, we got the founder, we got the regulatory clarity, we got a bunch of good things happening here. And now we got higher highs we got higher lows on the Hex chart for 480 days. That's a lot different of a viewpoint than what we had with EHEX, which was just kind of obliteration since the highs of 2021. So I think it's a good setup. I think we have a great community that's going to basically take it there. But we have enough wealth created here already that we can fund cool new projects and help build on top of Hex to make it even more valuable. So I'm excited to see how that kind of plays out over the next few years. And I would challenge everybody to try to grab some of that Ethereum mindshare, the super innovators, right? The guys that created DeFi Summer and stuff, to come over here and try to figure some of our problems out. Because that'll just accelerate the growth and give more reason to be a part of it.
And what would make us, outperform as far as, I mean, for example, everybody talks about low liquidity and how that's bullish to the upside, and volatility upside and the downside as far as that goes. Is there a certain point we could get to on PulseChain with Hex liquidity where it's like kind of at the right position where it can go up easily, but also, people who want to sell can extract without, they can either do it in positions, they can do it directly, all that other stuff too, using the tools we have on the chain, but in a place where it's just kind of this bullish, like, I guess, what is the bullish setup for liquidity on PulseChain for Hex?
I think you're talking about a demand thing. So, what do I mean by that? Well, you need to have the right amount. The demand will change based on what the candles are doing. So green candles beget green candles, right? And so to get us moving, low liquidity to start. Once you hit that 3 to 10 cent range, it'd be nice to see a lot of liquidity pile in there and support the price at those levels. But that means that there needs to be equal amount of demand proportionally to satisfy that equation, so to speak. So that, let's say, what does it say here? We got 3.6 million on this pair. I would like to see that get into like the 20 million range to really start to create a robust economy where things could go up and down together, and kind of keep us in a steady state of growth. And it won't, and so then what you won't get anymore is you won't necessarily get massive rippers until you're breaching an all-time high. But at least then, like, and I think, let's see, low end last cycle, there was like $12 million in LP between Hex and USDC and Hex and ETH. If you combined it all up, it was like between 12 and $20 million of LP. And we have that on PulseChain across all of the pairs that are even non-Hex pairs. So they kind of share each other's liquidity. So we kind of have that environment now, which is why you get a chart like this where it's flat and stable over a period of time. Well, relatively stable inside of this 7x range. And so I think the number I'd like to see for the next phase would be somewhere in the realm of 20 to 60 million. And you need to start to see like that amount of money coming in on like a quarterly basis to kind of sustain up there. There's a lot that goes into that question, Max, that, like who's market making? Are they using bots? Well, how much do they have on reserves? It's not just how much is in liquidity, but I do think that 20 to 40 million dollars in this pool would be enough to support. It would totally be enough, I think, to support Hex at this price. Because look, Hex is already supported at this price with just 3.6 million in the pool. So it's not time to come in with that amount yet. You got to mark it up first, and get us into that new range. And then, I think between 3 and 10 cents, I think going back to 12 to 14 million bucks would be a good start, right? That's where Hex settled around in the beginning stages of its bull market. So that would have been like pre-big payday and then post-big payday. Like those were the numbers with it, and it hit a high of 56 million, I believe.
Let me ask you one other thing before we wrap up to the recent events. We saw around $5 million bridged in over the bridge in like an ETH and different stable coins. We, a lot of the suspicion is, or the gut feeling is that maybe someone who likes the PulseChain, likes the assets, and as if it is the same person as it was before, had bought them up in clips, different core coins, some equally, some over time, in various scenarios last year, the last 18 months or so. What would, $5 million, for example, buying the core coins, Hex and otherwise, with stables, with ETH and such, Is that something that you suspect is going to happen in the future? How bullish is that for Hex?
$5 million. I mean, I like that Pampy.app simulator for this type of stuff. Have you run that number yet? What a 5 million into Hex would do? I'm just curious.
I haven't ran the exact 5 million into Hex. I did this morning. I did 2.5 equally. I did 10 million, 2.5 equally into all 4 coins, and Hex did about 137x if I remember, from 2.5 million.
Yeah, that's crazy. So I don't know if this is. I just went 5 million straight into Hex, and it's saying we'd get a 10x. That makes sense to me. That's pretty cool. And then all the other coins would get a 2x.
I had 50% buy pressure turned on, I think, as well, and I had 137. Pretty sure I had 137x with 50% buy pressure, or sorry, sell pressure on there.
Yeah, I didn't do any sell pressure. Well, anyway, we could debate that. Basically, the math is easy. It's just looking at the let's see, the main pool here. If it was in a silo, you could 4x. You could get like 4. So I think you could get like a 16x ish out of like $6 million. I think you could 16x the price if this main Hex pool was the only pool. So the allure of, I know this is gonna like take the wind out of people's sails, but the allure of trying to predict where price will go, it's pretty easy to do. If you just know how much you're putting in and how much is out there, you can know exactly where the price will land. It's not like it's not like some big mystery or something. So every coin is calculable where it can go, assuming zero sell pressure and all liquidity pools are accounted for. See, what do you got here?
Weird. I got like a 5x from, am I sharing? Yeah. I got like a 5x from doing 5 million into just Hex. So weird. Earlier, I swear I did.
So I closed out the other 3 tabs and just only did oh, I didn't move that bar around at all. I just put in 5 million into Hex.
Yeah, weird. I swear I did it earlier. And hold on. Okay, 10.
Obviously, if you're buying Hex.
That's what I did with 50%. So let me do this one real quick and just see what it does. I think I did like a 1% liquidity reduction. Let's see. I'll do what I did earlier. And 1%. So sell pressure, set up 50%, calculate. Unless I did it wrong earlier. How in the world did it come? I thought it came up with much larger numbers earlier. Weird.
I don't know. But anyways, I got a 10x, so I don't know. But basically, if you put 6 million in, you should get a 16x, I think. Because let's say you got $6 million of Pulse. If you put 2 million in, you 4x the price. If you put 4 million more in after that, that's your total of 6 million. You 16x the price. Because 4 times 4 is 16. So $6 million straight into the Hex pool. If that was the only pool, you'd get a 16x, but that's not accounting for all the other pools that have Hex in them, which would steal value from it and reduce the pump.
Maybe I had Pampy on, awesome mode or something. I don't know.
Well, here's the deal: is like, there's so much money out there. $6 million is like, we could be seeing way more numbers than that. Yeah, per day. When there's a reason to buy this stuff, it's going to go up fast. So I would just say pay attention to what's going on in your environment and be positioned accordingly.
Awesome. Access Live, amazing.
Thank you, man.
Content, appreciate it. And see you back tomorrow for the Communist panel. Boom.
Sounds good. I'm excited for that one. Give us a reason to stake Hex again. All right.
All right. See you, man. All right. Fast Abdul has came to save the day. You're back fast. Have you had a proper meal or anything to drink today?
Have I what? Sorry?
Have you had a proper meal or anything to drink today?
Yeah, no, I slammed down some soup between streams, and I'm hydrated. It's all good. How about you?
Okay, awesome. Trying to stay that way. Minimal pee breaks. Yeah, I kind of take my inspiration from Richard Hart. 8-hour live streams, no pee breaks, or minimal at least. So trying to channel my inner.
You always get a catheter or something, no reason to leave the computer screen.
Man, that's an option, isn't there? Yep, they're telling me that's an option. That's an option. Yeah, we'll see how it goes. Hex marketing, you are alive. Here we go, sir.
Let's talk about Hex marketing. So we know in the past, like there's been various things done for marketing with Hex. Like I believe there's sponsored race cars, sponsored soccer teams. Do we want to sponsor the Super Bowl? I don't think we do. I don't think that's a good use of funds. I think there's better advertising concepts. One of the things I want to go through that I'm pretty sure Richard is well aware of is marketing is a lot about timing, right? Like, you catch, like, if you see 10,000 toothbrush ads, it's not going to necessarily make you want to buy a toothbrush unless you need a toothbrush, right? So, so marketing to people at the time when they want to see it, when they're looking for something like the product that you're selling is what the win is. So, with that timing in mind, when we look at the market conditions, and I know Axis just went through a ton of that stuff, where we want to see Hex marketing is when people are looking for investments, particularly in crypto, right? But not necessarily in crypto, just investments in general. So when we're moving into the part of the bull market rather, that I think we're moving into, we're starting to get towards what's going to be an optimal time to have some sort of ad spend that will, get Hex out to people so they'll notice what's going to happen. Now, I have, some concepts that I think are going to happen from what I've seen. So, quote Richard Hart on saying that there's a massive, never before seen marketing that's going to come. We don't know exactly what that is, but we do know that it's going to be a mailer going out to select people, but like possibly millions of people from what I understand. Like there's containers full of products coming to the US at some point in time. I can't say when, but I think it's going to be pretty soon from, sort of just the talk of when the containers were shipped that Richard mentioned. I'm thinking September-ish, all right, maybe October. These things are going to start to get mailed out. Now, we don't know what they are, but we do know they have batteries. I have a pretty good idea of what it could be. I'm going to share the screen if Max can see this. There we go. So what we have here is a electronic device that could be mailed, that has a screen, that has a speaker. Hello, Richard Hart here. I'm going to talk to you about Hex, right? I think that kind of thing would be cool. It would have a lasting effect. People would show their friends, and it's more than postcards 2.0. And as far as the effectiveness of this type of product, like statistically, it's actually really good. Mailers to people over 50 are one of the best marketing techniques. I know that a lot of people see this kind of stuff and they're like, oh, this wouldn't work on me. Well, then you're probably not the target audience. Like these sorts of things are going to be sent out to people who are likely over 50, who likely have some money that they could invest in something like Hex. And they're going to be interested in this. Notice that I just found this on Alibaba. Like this is not specifically the product that I think we're going to have, but it happens to be hex shaped, which is kind of cool. So I think something like this could definitively be a win. Now, does it do something else? Does it have other marketing data? I can't say for sure, but from the public Telegram room, I know it lists a couple different websites on the product. It's going to say hex.com, and reliable is then the catchphrase beside that. So it's also going to mention PulseChain as a possible thing, and pump.tires for new coins. But I think given the type of people I think would receive this marketing material, I think most of them are going to key in most closely on hex.com, right? Like reliable is going to ring a little stronger with people over 50 who have money to invest than the newest dog coin or whatever you might have on pump.tires, which plays its part. I'm not saying it's a bad thing, but I don't think it's going to be the winner of that marketing. Now, what else made Hex go up? What else was big, right? That made it do well in its first cycle to 10,000x. I think another thing that's going to come down to timing is going to be Richard coming back on the scene, coming back on the screen, and talking about Hex. Now, when should he do that? And I know there could be certain legal restrictions, et cetera, but I suspect he's timing that as well to a certain extent. There's going to be a time when it will be optimal, right? And that's going to be when things have already pushed up a fair bit. And then we're going to have Richard Hart on the screen again, talking about Hex, talking about PulseChain, and it's going to send waves, ripples through the market. People are going to be talking about it. People are going to be happy. People are going to be angry. It's going to destroy Twitter. I think that's going to be one of the major pushes in this cycle for Hex, is going to be Richard getting back on the scene, doing a media tour, getting interviewed by various Hex haters and destroying them as he's done in the past. And it won't be boring. If nothing else, it won't be boring. But the bottom line is going to be that, like, he did it before, he can do it again. We have a price that is, pretty appealing if you understand what's happened in the past. And the chances of us seeing a new all-time high this cycle, I think, are probably pretty good. So I think we're looking at about 50 cents in the past, and going forward, I think that's probably not crazy that we could beat that number. And if you can buy it right now at a penny, well, the math is pretty good there. Not financial advice, just something I like to think about. But, like, what else can we do as a community to market Hex? I think one of the biggest things is just staying positive, right, and sharing information. One thing that I've noticed popping up lately is people trying to get educational things out there. And I think that's going to be huge, because when it's time, right, when the timing is right, when marketing is coming out, massive, never before seen marketing, when Richard is live streaming again, when all those things come together and people start to look for information on Hex, for them to find things like I know Tam's been doing a series of Hexkin University spaces on Twitter, things like that, where they can come in, they can be in a comfortable environment, they can ask questions, or where they can find instructional videos, right? On, like, what is Hex? What can I do with my Hex? And, like, with that kind of thing, generally speaking, more the merrier, right? Like, obviously some people are more keyed into how can I do that than others. But, like, bottom line, if you write a Twitter post on this is how you stake Hex, that it just adds to the pool of information that people are going to be able to find when they look for it. And that's going to give a lot of confidence to new consumers. So, like, the community is the asset, and it is the marketing to a very large extent. Now, some people are going to come in, they're going to think we're a little bit wild, but, like, there's always some people who stick out, who provide quality information, who are willing to help others, get into the community themselves. And then with Hex, the Hex concept of the long-term staking, right? Basically, that wraps people into the community, and it makes them be essentially team members for, up to 15 years, right? And or longer, is because people make staking ladders, just like Crispy does. He's staking Quattro Cinco all the time. So, like, once you get one person in and they've staked for 15 years, they're much more likely to share that with their friends and family. They're much more likely to advocate for other people to do the same, right? And they're much more likely to have concepts where they can build a staking ladder. They can have certain times where they're going to buy Hex, where they're going to sell Hex, and they essentially will, like, feed into a financial plan. Now, what I would like to see is bigger than what we're talking about now, though. We see, like, all these ETFs and things like that coming. There's an ETF for Solana, there's an ETF for Ethereum, et cetera, et cetera. Why couldn't there be an ETF for Hex? It has better legal clarity than the things I just mentioned. That would be fantastic advertising. So, like, if somebody wants to do the math, if somebody wants to check it out and see what it would take to make that happen, I don't think that is the craziest idea ever. And a big part of what we're going to see, I think, for the marketing push for crypto in general, and with the way, like, legislation, like crypto president is going in the United States, like, to have Hex on the same table as those other big players would be pretty cool. And it's far from impossible. So, and then when, like, the boomers start coming in, I know in crypto, boomers, I think, is anything over 45. I would put myself in that category. But when they start coming in and looking at crypto, like, to have any sort of connection to the traditional market, I think would be like a cool extra edge. the other concepts that I think will play out in a big way is going to be getting Hex onto other chains, right? So being able to buy Hex on Base, being able to buy Hex, on whatever the flavor of the week is. We have the Richard Hart bridge that can essentially enable that for us. And this is another thing the community could do. Like if you're a Hex whale, you can bridge from PulseChain to Ethereum, where obviously there's already Hex on Ethereum, but either or, you could then bridge it to the base chain, and you could put it in a liquidity pool there, and it could be available for sale. And that, that's sort of an in-between stage where it's going to catch more eyeballs, right? But it's not quite the same as a centralized exchange. Now, I consider centralized exchanges as marketing. I don't think it's the play for, the community long-term in terms of like, this is how things are done. But like when we're talking marketing, ease of access is a huge part of that concept. So getting on one or more of the big 5 exchanges, I think is going to be, one of the final marketing pushes for Hex this cycle. So like being on Binance, being on Kraken, being on Coinbase, more than just, information. Like you could actually go and buy that coin, and then you could transfer it to your private wallet. But that's going to get people's foot in the door. Now, is there a cost associated with that, and so on and so forth? There could be. I think right now, would it be worth the cost that one of those big players would charge? Probably not. But like 3 months from now, 6 months from now, a year from now, when we start to get to market highs, there's huge interest. Fear and greed index is all the way at the top of the greed scale. That's gonna be the time where it's like, to have some sort of marketing spend to push us to a centralized exchange would be pretty cool and would be effective. Any comments from the audience on what would be other effective Hex marketing strategies? Yeah, Hexcar agrees that Coinbase or Binance would be huge. I like that concept. I read an interesting post from Gary Funding Jim the other day. He talked about how Coinbase basically had a function where people could swap directly with their centralized wallet onto the decentralized DEX. And he suggested the concept that people should bridge some Hex over there and get it onto the DEX. I want to say it's Aerodrome, and see if it works. So I haven't had time to explore that myself yet, but check out Funding Jim's posts about that, and I think somebody should look into that. It's not quite the same as just being on a centralized exchange, but it intrigued me. It sounded like a cool workaround to make it happen, and those kind of community efforts is where we're going to really shine in marketing. People really pick up the ball, and if somebody else drops the ball, there's a guy behind you that picks it up. The community is extremely strong with that kind of stuff. One thing that we're going to have to get a little better at is embracing new people. I've been pushing hard to try to bring some new influencers into the space and things like that. And there's not always an awesome reception from the community. Many people do very well with that. Some do not. But I think that's probably going to be one of the factors that really brings us to the top. It's going to be new influencers coming into the community, or established influencers that aren't part of our community, switching trains and getting on that Hex train. The same people who trolled us during the bear for engagement, right? Which is a lot of the reason that a lot of influencers do a lot of things is for engagement. They could be the same ones who join the team and start pumping it. Again, maybe not for the right reasons. It could be for engagement. And there's going to be a knee-jerk reaction to be like, oh, you weren't nice to us when things were bad. I don't care. Do you want to be right or do you want to win? I would like to win. So I think we should welcome these people, even if we think they may turn on us again in the future, or if we're mad because they were mean to us when things were sad. But I think they're going to come. Guys like Ivan on Tech, Crypto Rand, those kind of guys, they're going to show up when things look good. And that's fantastic. I would totally think that we should work with those guys to keep pushing the narrative even though they weren't always kind to us when things were bad in a bear market. And that's fine. That's how it works for some of these influencers, where that's actually their job, is to carry influence and not necessarily to support any one particular community. So if you see an opportunity, please take it or share it to get other established influencers on board. And I think we just need to keep hitting these guys with positive things, with aggressive things. I go and hang out in Ivan on Tech's YouTube chat sometimes. Send him the odd super chat, which I think is another awesome marketing opportunity. For the price of a super chat, you can get fairly large influencers, and I'm talking like between $5 and $50. You can get these guys to say Hex on the screen, right? Like it's a minimal personal investment that a community member could make to get any number of YouTubers to talk about Hex, even for a second, right? When you have a dedicated audience of thousands of people watching who are interested in crypto, and you get Crypto Rand to say like, "Oh, Hex, yeah, that's the one Richard made." Like, there is value there beyond the $50. So that is one mechanism. But to keep working on these guys, they see the audience, they see the community, right? They see that we're tenacious and that we're generally positive, which I think at this point, this is something that we should work on. It is going to be make a big difference in marketing, because more and more of those guys will start to come over to the light side of the force to cash in on the community being positive, right? Does that mean you should buy the meme coin they launched on PulseChain? No, probably not. But you could. That's up to you. But like, if they're here, they're talking about our thing, they're talking about PulseChain, right? They're debating Richard and getting destroyed by him on streams. That's fantastic. And I think that will be one of the final pushes in this market, is going to be just, like general market acceptance by bigger influencers, right? Who are going to push it to the general market, who will accept it, right? Because they're doing it and not us so much. So it's a long game as far as like relationships. And it's hard some days. Like there's days where like, oh no, people on Twitter are being mean to me today, which I mostly think is hilarious. But it's going to happen. And like, you got to walk away from the keyboard. But like, the community at large is going to be the main marketing push with things like that. The extra things, though, like the massive never before seen marketing, I really think it's going to work. And it almost doesn't matter if anybody in the community thinks it's going to work. I think just the metrics of the number of people who are going to receive it, the novel concept, and what I believe is going to be the absolute perfect timing for that type of advertisement. And what we don't know, but I think is likely the case, I feel like this is probably a test. There could be something that comes next, right? Because a big part of marketing is compiling data and doing it better next time. So like, let's say, for example, 200,000 of these things are sent out, and there's some way to measure the results. Now, whether that's because somebody clicked a link, went to a website, and it measures this many people did it, right? Like, there'll be data that can be used to refine that process to do better marketing in the near future. And then continual refinement will result in even better marketing, until you have a perfected product. And then once you have a perfected advertising product, the general wisdom is you do it as much as you can until it stops working, right? So, my guess would be the first 200,000 are a test round. There's some data achieved. The product has changed. The mailing list has changed. Something has changed to make it better. And then that keeps happening probably for years with a perfected product, right? Until it stops working, and then we need a new plan, right? Richard seems like he's come up with that plan all by himself. I suspect he's capable of coming up with a new plan. Does anybody else have any great marketing plans? Oh yeah, Elon said he was fond of Hex. That's right, Ivor.
You have fondness for Hex. I remember that. Yeah.
Yeah.
That's true.
Yeah, we should be pushing that tweet more. Somebody find that.
Every once in a while I'll retweet it and or do something with it. Yeah, it's pretty good. Yeah, I think a lot of mega marketing, this community has so much to be excited for, especially on that. And again, when the green candles beget green candles, I think that'll be motivating for a lot of people who need that to start talking about it as well. Plenty of influencers who probably have bags who have no reason to talk about it until they want to, and are properly, motivated, whether it's because to make their bag go up, or there's some marketing budget that goes out and helps with that, or otherwise. Man, I'm excited. I think there's a lot of bullish stuff in the ecosystem, and more about Sigma. I think we'll find out more about that tomorrow. I think Sloth's going to be on. I've got some information on it as well, which John Wick shared with me. It'll be pretty interesting. And
I was that kind of got my mouth watering a bit. I want to dig more. Tell me your secrets, John Wick.
Hey, I think it sounds like they want us to talk about it more. I'll say that. It's I know, I'm excited. It's only been like a year since Alex's last stream, since we last heard the ideal discussed. So should be fun. All right, Mr. Abdul, think you come back for the Hex panel? And come back for Hex panel in a little bit.
I can come back for the Hex panel. That's after the legal talk and Crispy Man, right?
That is true. Quick schedule update. Let's see. We had to change a couple things around. Fast is awesome, and came back to do this one. And then let's see. I think Hex Law School is next, and it will take place until. Why are the times? Oh, I feel like we're off by an hour. So I think the AI schedule thing. Am I just not reading this correctly? No, 5:30. I'm adding 3 hours.
It's 5:30.
It's 5:30 right now, right? Like Eastern time.
Yeah. There we go.
Okay. Why?
Back on schedule.
Off. Okay, maybe we are. Maybe we're good. Okay, maybe we somehow got back on schedule magically. All right. Just needed one fast Abdul, and now we're back on track. I like it. Come back if you want to. Again, totally optional if you're not up for it. I understand. But yeah, come back if you want in about an hour 15, hour half. We may give a little bit more time to the Hex Law School, see how much they need. And we got some extra time.
I'll keep an eye on it.
Hex panel is going to be running. I think we may extend that because I got some extra time today too. So, all right. Perfect. See you soon.
See you then. Bye-bye.
All right. Fast Abdul. Seeing him a lot at the conference does a lot of great stuff. Let's do Hex commercial, and we'll bring in Pop Boner and Nuclear Herbs. Here we go.
Hey, listen, seriously. Stop what you're doing right now and listen. It's important. People are getting rich right now. Truly rich. And you could be one of them. You need to see how people are becoming millionaires with Hex.com. Hex's launch phase ends on November 19th, and there's still time to get involved. Hex can make you truly wealthy. Go to Hex.com to find out more. That's HEX.com right now.
And we're live. Whoa. I like Papa's new avatar there. Pretty cool.
I don't know what you're talking about.
I'm good.
No. His audio is horrible.
Yeah. Oh yeah. I thought it was on purpose.
Oh, okay. Well, let me unscrew up my crap. Hold on. I'll log my down.
Usually people tell me my mic sucks, but you know what?
Sounds like a chipmunk getting tasered.
It's did they get the new Hex marketing package in the mail? We send them to the wealthiest chipmunk zip codes. You never know.
Let me log back in.
You got the prototype.
Yeah, when I was talking to him on the phone earlier, he was fine. So I don't know. I don't know what happened there, but let's hope
get rugged.
Let's hope that a good hard restart fixes the problem.
New World Order, World Economic Forum. They don't want us talking about the Hex Law School.
I guess not. Yeah. Somebody sabotaging you, bro. So anyway, how are you?
Don't tase me, bro. Don't tase me. Doing good. Good to see you back. I don't think you've been on the show since the last Freedom stream for Richard.
Is that okay? Maybe so.
It's been a while.
It's been a little bit, yeah. Hasn't really been that much going on, but all right. Let's see if Papa's got good audio now.
Mic check.
There we go.
Lovely.
Thank you very much.
Amazing. Yep. Welcome back.
Set it up so that we're facing each other somehow on this.
That would be nice.
It did. Yeah, I'm definitely going to rearrange it. It did sound like you're getting a squirrel getting tased. I confirmed.
I was a
me,
squirrel getting tased. What are you talking about?
I've confirmed it. They're telling me that's what you sound like. Yes.
Nice.
All right. Don't tase each other too much. I'll be back. Have fun.
Thanks, Max.
Oh, now I can see you.
That's perfect.
How are you doing? Yeah,
I'm doing great. Yeah, you look great, by the way. I love
Oh,
the new.
well,
I
thank
love the
you.
avatar.
It's a new suit. Yeah.
Yeah, the hat's spiffy. I like it.
Well, thanks. You can see me in 3D, huh? Given your specs.
Absolutely.
Very cool. Very cool. Well, hey, it's like I haven't talked to you for at least 15 minutes.
Right.
So
how you
I know.
been?
I stretched a little bit, walked around the place, touched some grass, looked at my portfolio, cried a bit, came back, and I'm ready to talk. What do you think? How are you?
That's exactly why I avoid looking at anything. I figure like if something big happens, the community will let me know. So.
Oh yeah. You everyone's gonna let you know and say, "What do we do now? I need some legal advice for free."
Yeah. Well, I'll be happy to tell you to go. I'll be happy to talk more and more about like trusts and things like that as time goes on, and a little bit of estate planning when we start seeing real numbers. So.
Very nice. Very nice. Hey, look, this little chat, just in case everybody is not familiar with my goings on in law, I have none. I am a layman, as they say, but I do read things, and I do kind of have a skeptical mind, as a few of you know. And I guess I was elected to kind of bounce some things off of nuclear herbs when it comes to stuff that's on my mind and makes the hair. I guess I've got a few hairs left on my head. They turn upwards and cold chills up my spine, and I'm all of a twitter and a flutter about this whole President's Working Group report called "Strengthening American Leadership in Digital Financial Technology," which is a mouthful. But what do you think? Can we dig into this? Because I think that's probably a better focus for our time in the communities.
Yeah, absolutely. Like, yeah. So that's I don't know how many people realize what came out last week. It was the White House paper. It's essentially a policy position. You remember a couple of months ago when Trump got into office, one of the things he did was he appointed Paul Atkins, he appointed David Sachs, and basically set them off to go come up with a revised crypto policy from getting rid of we're going to consider everything as security and we're going to test it under Howey, which made no sense, and nobody had any idea what was going on. Nobody had any idea like how to build anything. The SEC wasn't responsive to anybody's requests. All they did was just tell them to go screw themselves, and then sued them despite actors trying to act in good faith. So Trump realized that wasn't going to work anymore, and it really didn't work even when it was working. So the policy paper got put together over the last 6 months, and Papa and I are going to go through some of the more interesting points of that policy paper. Now, keep in mind that the policy right now it's not legislation, it's not enacted, it's not a regulation yet, but it kind of is here's what we in the White House think future legislation and future regulation should incorporate.
Well, they specifically use the word recommendations.
Yes.
So it's a thought, it's a summary of the landscape of the regulatory bodies of how they've been overreaching until now, and keeping things nebulous and ambiguous, and keeping the industry completely confused and afraid of legal battles, of which we as a community have just come out of one successfully. Thank you very much to your hard work, Nuclear Herbs, on that as well. But also it breaks things down into, like you said, a few baskets that are supposed to start getting things into focus. So it's, the taxonomy, the digital asset ecosystem as a whole, market structure, how it applies to banking, stable coins, illicit finance, and finally taxation. So, and what we're going to examine are a few things that we've actually read from the 166-page brief, and how they apply specifically to our ecosystem, namely Hex and PulseChain.
Yep. And none of this is, of course, legal advice. It's just, just kind of our own opinions from having both read this behemoth document and kind of what our takeaways were from it. So we don't really, again, know what the legislation is going to be proposed, what it actually looks like, or what regulations are going to be drafted out of that legislation. So, this is our best guess at this moment, but it does list some very significant policy points that are going to, if they are implemented in the way that it looks like they might be, boy, is that going to be good for our system, our ecosystem, and crypto in general.
Yeah. So let's dive right in. First of all, and I'm sorry, before we start, interesting breaking news: the CFTC may have a chair soon. Finally, it looks like it. I didn't realize that it was kind of in a stalemate situation in Congress, but it looks like the CFTC will have a new chair. And
good.
That chair has also been vocal. Strangely enough, you're familiar with the Storm case. You have lectured me on this, and maybe you can tell the viewers what that's about. But apparently, this new CFTC chair, when asked, is going to specifically advise the DOJ to not enforce Section 1960, which is the one that they caught Tornado Cash on.
Yeah, Roman Storm, who just got convicted, I believe, under that. I think that was one of the three claims, or the three counts against him, the criminal counts against him, and then two of them ended in a mistrial, kind of a hung jury thing. But the third one he was convicted on was, I believe, the 1960 violation. I'm pretty sure. I'm not 100% sure, but I'm pretty sure. And which is essentially now completely contrary to the DOJ's position, as announced as of this morning. The DOJ has now said that if you put software out there in the wild and somebody misuses it, and you had no intent to design it specifically for people to misuse it, then we're not going to come after you. We're going to go after the bad guys who misuse the product, which is exactly
what a novel thought. Yeah,
right. Think about it. This is the same idea as saying, if you're a gun manufacturer or a car manufacturer and you put it out there in the wild and you create a good, you create a product and somebody misuses it, they're not going to sue Ford every time a drunk driver runs over somebody with an F-150, and they're not going to, sue. They tried with the whole Bushmaster lawsuits, and I think it was Bushmaster, where they tried to sue gun manufacturers for people misusing the gun and shooting people. But this is the right way to do things. You hold the bad actors accountable, and you can't predict anytime when somebody's going to misuse your product. If I'm Cuisinart and I make forks, I can't predict that somebody's going to stab somebody with a fork reasonably, and I shouldn't be held responsible for that. And the government shouldn't be running around banning forks either. So,
unless you label it forks for your stabbing pleasure.
Yes, if you market it in that particular way, yes, go stab someone today.
Right?
Maybe you got a problem, but
Martha, get the stabbing set out. Okay, so anyway, all right. So moving right along, I think that if I can be so bold as to step into the first chapter that is of interest, the actual first chapter, true chapter of this working group report has to do with what is the technology, and it's basically built for Maxine Waters to really understand what the hell a Bitcoin is, and we'll glance right over that and go into something that's important, which is taxonomy and who has jurisdiction under certain types of tokens. Taxonomy, of course, is the definition and classification of assets, whether they're going to be securities or not securities. And my understanding is that the new approach is that, yes, a number of things could be securities, but most of them are not. They're mostly commodities. And if they're securities, it's not the death knell to them as it once was, being able to be sued for, taking part in a unregistered security offering, which would land you in hot water in court with the SEC. Now there's kind of a period of amnesty, or a road to coming in from the rain and the cold and being able to register yourself under the SEC. But before that happens, mostly commodities would be taken care of by the CFTC rather than the SEC. Is that a good summary, or what else would you like to launch off to in that chapter?
Yeah, that's pretty accurate. I think just like we classify animals into mammals and reptiles and everything else, I think the U.S. government has realized that there's enough different types of crypto out there that we need to have some sort of structured classification system for them and rules that apply to each one of them, so that if you're a dev that wants to build a product in a very specific way and offer certain features, whether you're going to trigger some sort of registration requirement under the SEC, or whether or not you can incorporate a design that just goes straight into registration under the CFTC, which is historically been a hell of a lot easier. Nobody, if you're selling corn or pork bellies or whatever, or any other commodity, it's a hell of a lot easier to do that, and there's a lot less reporting requirements for you than if you're registering and offering a security for some company that's launching or whatever. So it'll be nice for devs to have a clear roadmap, and if they're designing something that's going to run afoul of some regulation or may get them trapped in an SEC net, it'll give them the opportunity, if they're paying attention, to steer clear of it, or maybe write that function out of their code, or change it in such a way where it doesn't trigger whatever negative repercussion or reporting requirements or whatever. And I think it's been so badly needed for the last few years, because we had no idea what a security was, and to be honest with you, we still don't, because these things haven't been officially announced, and the structure for each set of digital assets or category of digital assets has not been even announced in the policy paper. But all we know so far is that Howie's dead, and good riddance to him. So it looks like we should see, I would guess, based on this policy paper, I find it difficult to imagine that they didn't come up with at least some proposed corresponding legislation that was handed to Congress and say, hey, this is ideally what we would like to see. So get working on it. Whenever you guys get back from vacation, which I'm not sure is until September sometime, but we'll have to go through the normal legislative process. And, it'll take forever, of course, because that's what legislation does. And then once the legislation defines classes of digital assets, they will, and typically in legislation, if everybody doesn't follow it that often, like it'll direct the CFTC or the SEC or some other agency or whatever to design rules and implement those regulations. And I'll go through that process real briefly with everybody, but I'm going to throw it back to Papa for a minute to add anything else he wants to here.
Well, yeah, I mean, before you do that, the paper kind of takes a stab at classifying things. It looks like there's this new, easier to fail criteria, kind of a Neo Howie test, if you like, where 99% of all of the things out there will fail and not be securities. I think that it had to do about decentralization, adequately out there in the wild after primary distribution. So all these things kind of play really well into the foundation, the fundamentals of Hex primarily. And then of course there's the receiving of Hex rewards, PulseChain airdrops. None of those would be considered securities. So that's great. And then for stakers, the new embracing of DeFi technology that the paper promotes would also say that staking rewards, where we are specifically concerned, the tokens get burned, and then you create them yourself from the contract again on the outside, on the back end. That too would not even fall into the safe harbor offered, loosely under the SEC oversight. And then validators, I think a lot of ways the validators are insulated from any dealings in non-security digital assets as well, which is great. And finally, developers, we're seeing this 1960 thing. The DOJ is not going to enforce it, and the CFTC intends not to recommend enforcement. Then I think that our developers can breathe the free air of the new world. Do I have all that right? And would you like to just continue?
Yeah, I think your read on that is kind of the same as mine here. The devil is always in the details, of course. So we're gonna have to wait and see, what the legislation, goes eventually looks like. But if I love the direction we're pointed in right now. It's very, very clear. If you take nothing else from this entire 160-page policy paper, it's very clear that the Trump administration does not want to cede its position as America's position as the essentially the crypto development capital of the world. He wants the U.S. to be taking the lead in crypto and all kinds of aspects of crypto, including DeFi, which I found very refreshing, because typically, you don't get government letting people do what they want more often than not. It's they try to kill off that portion of it, but we seem to be headed in the route towards the route where the government is not just recognizing that's self-custody and DeFi are things, but actively encouraging the development of those types of things and encouraging people to self-custody their own assets, which is holy cow, what a 180 from a year ago if we'd had the same conversation.
Totally. You said that you wanted to talk about the criteria, the yes no for being able to be considered for. Pass the mic over to me. What was it? Your next thought there on that one before we close it out?
I was just going to kind of just briefly go through like how how legislation that gets passed is essentially the Congress is going to pass something, and the president's going to sign it into law, and it's going to have directions to agencies to go implement the legislation. And this is kind of what happens in most legislation when they direct agencies to do stuff. The agency gets hold of the legislation and reads it and says, within the next 90 days, 180 days, whatever it is, I've got to come up with a proposed rule in how to implement this legislation with respect to what is what's going to be the criteria for a commodity, what's going to be the criteria for security. And it's not going to be Howie anymore. It's going to be something that people can understand and know clearly when they're driving inside the lines and when they're driving outside the lines.
Yep.
So the short version of all of that, and it's something that we all need in this community to pay attention to, is there's going to be a proposed rule drafted. It does have the actual text, the reason for it, the legal authority for it, and then it explains kind of like the effects on people, economy, builders, businesses, whatnot. And that is published in the Federal Register. If you've never heard of the Federal Register, good for you, but you're probably going to have to start paying attention to it at some point in the next year or two, especially if you're building anything on PulseChain.
Right, and as a community, we're going to be able to rally people and get on point, and then provide our analysis, our answers to it, and comment on it appropriately. Correct?
100%. So the minute it gets on the Federal Register, you have usually a notice and comment period starts. And you've seen this in other things. I think Richard tweeted out something last year when there was some rule being proposed, or maybe it was even 2 years ago now, and told everybody to submit comments on it. It's kind of the same idea. It is the same idea. It's exactly the same idea. So you will be able to read the proposed rule, submit comments to the agency, You can support it, you can oppose it, you can suggest changes. Agencies are by law required to consider all the comments that are submitted. They can't ignore them. And then once the comment period ends, they will take all the comments and review them. And if there are good suggestions, they may get implemented. If there are, some of the things that you may want to note in legislate or in your comment, if you're going to comment on something, you can say like, hey, this is over. Your proposal is it's overregulation. You don't need to put in these specific requirements in order to achieve the goal of the legislation. You can do it leaner and speedier. And so therefore we recommend that you pull these pieces out that are overly burdensome or whatever, and you still get to accomplish the exact same goal that Congress wanted for you.
Right. So we can't be complacent on this. Even if we want to say, hey, job well done, you got to understand that there's other people that could throw a monkey wrench into the whole thing. They can comment from the banking sector, for example, could say, or rather the previous old guard banking sector, the bad people in Congress could have their cronies send 100, comments. So we've got to neutralize that by good, solid support for things we like. Is that correct?
That is exactly right. So if I were you and or anybody listening, and you're a dev and you're building anything on blockchain or on PulseChain, or blockchain in general for that matter, go ahead and set alerts on the Federal Register for things like digital assets or DeFi or something like that, and you'll get notified when a proposed rule contains those terms, so that you can take a look and read it and go, wow, this is really good for us. I should submit a comment saying how much we like it, or this thing really sucks and it'll kill our industry, because there's a whole bunch of unintended consequences I can see from it, and we need to rally the troops and submit a whole bunch of comments. So,
right.
Yep.
So look, we're going to enter the lightning round now because we got 4 more chapters to blow through, and I think we can knock the next one out really super quick. This one's about banking, and it simply, I guess my summary is that it acknowledges that there was Operation Chokepoint 2.0. It's no longer just a catchphrase. They refer to it as a known fact, and they say it's done, it's ended. People are not going to be debanked for doing things in crypto. Businesses can now actually apply and not be, turned away simply because they have the whiff of crypto or DeFi in their business brief. Developers are encouraged by banking organizations to explore innovative banking technologies that they're going to offer to those developers so that they can actually get supported. And banks themselves can do things like hold assets and offer premiums and or staking rewards in the near future. Do you think that that's about the best summary that you can pull from it as well?
Yeah, that is a completely concise version of it. Do you remember the I do not remember what it's called now, but there were states that had to implement their own banking rules in order to deal with crypto projects, because the feds would withhold some sort of approval, or Federal Reserve banks would withhold some. That's gone too. So that it's essentially, we're done. The White House, from a White House policy standpoint, the banks are done trying to kill crypto, which is fantastic. So there's going to be a lot more leeway, a lot more freedom that banks have with respect to collateralized limits on things, being able to lend on, with respect to, they don't have to, I don't think they have to have dollar for dollar anymore in reserve assets with respect to crypto. There's a whole bunch of stuff in this document. I don't remember it all off the top of my head, but it is completely worth a look if you are going to be in a position where your DApp is going to need to somehow interact with the conventional banking system. It's worth taking a look at. It's also worth, again, setting alerts in the Federal Register.
Right on. Okay, jumping to the next section, which is stablecoins and payments. And you said not dollar for dollar on crypto assets. However, these banks are now going to get approved to offer, and so several of them have already announced that they're going to offer dollar-backed stablecoins in opposition to the concept of a CBDC. And, the committee certainly is against CBDCs, just like Trump is, and we are. And then those stablecoins issued by banks without the ability, hopefully, to be surveilling you and or turning them off without good reason, if at all. That's going to be able to be free flowing into DeFi, which should bolster liquidity in PulseChain, which should kind of create better liquidity for trading pairs and liquidity for Hex and PulseChain. So it's kind of a big one. It doesn't seem like much, but liquidity inflows and ease to get your money in as a digital asset, as a stable coin, to come into DeFi, to bridge over and to a number of chains, especially our beautiful layer 1 PulseChain. That's kind of opened up the floodgates, or should very soon. Do you read that as well?
Yeah, everything except the very soon part. And I should clarify that for everybody here.
Okay. 2 more weeks.
Yeah. The legislation itself, Congress just doesn't move fast. I mean, they can't agree to change the toilet paper in the bathroom of the Capitol without like 6 weeks of discussions in committees.
That's Maxine Waters' committee, isn't it?
I believe so. Yeah. Let's give her that responsibility and see if it works out. So it'll be a little bit. It'll, even if they got right on it as soon as they return from vacation, I seriously doubt you'll see anything actually passed into law probably before the end of this year. There's usually a time frame where they direct the regulatory agencies, hey, within 90 days or 120 days or 180 days, you have to implement, or you have to publish your first proposed rule. And then there's the 90-day notice of comment period, and then there's the whatever period where they finalize the rule, publish it, and then there's usually a time frame before it actually goes into effect. Like, so 180 days from today or 90 days from today, this rule will take effect. So if you add up all of that time frame, if you're expecting this bull run to end in Q1, Q2 next year, don't expect any really substantial legislation or regulation to be in effect before that time frame. So just want to clarify the really quick part.
Yeah. No, I use quick in like my favorite thing to watch is not horse racing. It's snail racing. So, in that sense, I know that the gears of the higher up even the executive branch are very, very slow. And then Congress makes it like molasses in February, is it? But at least it's in the right direction. All I want is me personally, I want things to kind of come into some hard and fast solidified law by the end of Trump's second term. Is that reasonable?
Oh, completely. Yeah, I think so. And I think that all along the way, as we start seeing the draft legislation, the draft regulations, things like that along the way, we're going to see where this country's headed with respect to, what rules we're trying to make for DeFi and for stablecoins and whatnot. And that positivity should translate into, new money coming into crypto, because they're not going to be afraid of the rules that are coming downstream, right? Like when somebody wanted to put something out there before, they were concerned that, oh my God, what if the SEC sues me because they now think it's a security? Now I got to consider that before I decide to launch or whatever. But if we kind of know from the draft rules what everything's going to look like in the future, and it's probably not going to change all that much, radically much from what the proposed legislation or proposed regulation draft rules are to the final rules. We're gonna feel a sense of certainty that we've never felt before in crypto, and I think that's going to be a positive sentiment and draw a lot of people in. And that has a side effect too of, if normies who think crypto is just, crazy internet money that has, that has no value, but now we see the government taking it seriously. That's going to bring an entirely different sentiment towards us too. So
right on.
I look forward to a lot of this.
Cool. Jumping on to section 4 out of 5, countering illicit finance. Now, this to me was deliciously vague in that it pays lip service to the people in Congress that accused us all of being, bad guys dealing in drugs and things like that, trafficking and money laundering and all this other crap, which I'm positive that no one in our community is actually doing. And my friends over at the DEA, in my past life, I mix with a lot of them. I keep in contact with them. They would all love if every drug dealer dealt in cryptocurrency, because it's just so easy for them to, find out where it's going from on the public ledger, see timestamps, wallet addresses. The case is very easy to make, and then of course they sweat these guys out and are able to confiscate it all, which is how the U.S. government amassed their big, crypto fortune. Correct. So they in this brief, they kind of define that in kind of a, I don't know, it's kind of an easy way for us to find out that we're not responsible for a lot of things that will be, possibly fingers pointed at us by the DOJ. We don't have to worry about these things. Holders of Hex are effectively protected under this idea of self-custody being very important. So we don't have to worry about any of that. The staking mechanism is going to be clarified under BSA regulations and obligations, that we don't have to be responsible for the AML or KYC or CFT rules based on how many bits and bytes pass through illicit wallets and things like that. That's all going to be, it's all going to be done away with. It's going to be very clear that it's just between you and the contract. There's nobody in between. And finally, validators. Again, this one was probably the biggest risk, is that someone would say, well, you're going to be having to be a money transfer, a regulated and verified and registered money transfer agent, just because you're receiving rewards from the chain and you're helping to bolster the security of the chain. But still, it's possible that the nodes themselves are connecting up with other nodes, and that could be problems. So you have to AML all of those other owners of all those other nodes. That is going to be done away with as well. So I'm kind of happy about this section. Primarily, it makes me very, very happy that these guys get the points, get our pain points. And again, the developers also, this 1960 rule is going to be done away with. Therefore, they're protected as well. Anything I missed on that section?
No, I think we just have to recognize, like, if you read this policy paper, it is very clear that the previous administration was operating under the completely misguided sense that, anybody in crypto must be doing it because they're trying to evade some law here or some law there or something like that. Therefore, we're just going to assume everybody who uses crypto has criminal intent or is, somehow nefarious. And this paper basically says the exact opposite. We're just going to assume that everybody who's in DeFi is doing it because they have the right to self-custody, they have the right to their own assets, they have the right to control whatever they want. And, we're not going to bother with you. Essentially, we're not going to make any rules to mess with you unless you start getting into the world of criminal activity, in which case, we're going to focus the negative consequences on you directly, the bad actor, rather than whoever put the software out there. And I couldn't be more positive about that sentiment. So I'm exceptionally happy about that. And about where that's going.
Right on. And the final final portion that we should cover, just to kind of summarize this 166-page brief. One that is near and dear to my heart and keeps me up at night, and is basically the chess match that we all should be playing with the IRS, and that is taxation. Effectively, a few of you that, or not more than a few of you, hopefully all of you that are taking care of your little micro transactions through something like Coinly, online every year, and overwhelming the IRS with all of the microtransactions and gas fees and same wallets that you own, the back and forths there, and your cost basis and your adjusted cost basis and your pros, and all of this stuff is going to get incredibly, apparently they're advising this to get very simplified, and all of the microtransactions from your validators, when you get little rewards, will be categorized as de minimis receipts of digital assets. To remind you, you can think of mini-me. So all these little mini-me transactions that are coming through, you don't have to spend the highest tier of accounting for Coinly every year. You can simply minimize that to the lowest tier and say, hopefully, did I dispose of that asset or did I not dispose of this asset? That's one of the things that they're proposing, is that you may not have any compliance burden for reporting if you did not sell the asset or trade it into another asset. Even asset to asset transactions are up for debate. But I will take just not having to, hopefully pay any taxes on gas fees, but to have to report them alone would be a huge burden relief for the average validator. What do you think?
Yeah, I think this is more of a practical realization by the government that, hey, listen, like we have 20% of our citizens owning crypto, and it's going to be 50% in the next couple of years. And if there are 25,000 DeFi projects offering different things, rewards, staking, whatever, just the burden for reporting all of that on a citizen is insane in and of itself. And then when you take that and you say, how many auditors do we have left after Trump fired them at the IRS? And they're like, we got 15,000 auditors left or whatever like that. How the hell, just as a practical matter, could they reasonably audit people who are receiving, if you're a validator and you're receiving 20 pulse every 15 minutes or 10 minutes or 5 minutes or whatever for attestations or something like that, and then you get block rewards and whatever, and then tips in the block rewards and and all this other stuff like that. How the hell can you do it? How can they successfully audit it? So I think there's a practical realization where the de minimis has to make sense. And I think you're right. I think at worst, I think we'll see, this is just my complete speculation here, but at worst, let's say your aggregate rewards for validating and over the course of 3 months equals some number that's above the de minimis exception. You may have to, file something at some point saying, I received X amount over the last couple of months or whatever. And then, or maybe you just have to, maybe it's a quarterly statement that you have to prepare with your annual taxes. I don't know. I mean, I'm just completely guessing at this, but I think the individual day-to-day de minimis stuff, I don't see any practical way for anybody to keep track of all of that. And therefore, I don't see any practical way for the government to audit that at scale. So, I think the government has recognized that this is a problem that's only going to get worse over time when there are more and more and more projects offering more and more different ways to earn different rewards, and they're all trickling in. If you own coin X and it pays you out like 1 hex a day, like what, and then how are you supposed to how are you supposed to monitor all that? How are you supposed to take care of that? And then what are you supposed to do at tax time? So I think you're right. What I would love to see, and I don't know that it's going to happen, but I would love to see 1031 exchanges for crypto.
Yep.
If you go to stablecoin, or if you go to, if you cash out, that's a taxable event. But I would love to be able to see you move one crypto to another without having to, without triggering a taxable event in the same way we do now. So
a pass through, like you're talking about something to do. Right now, that would be like real estate, for example. If you get into a new house within, 6 months of selling a house in certain states, it's like a carry through of your profit from the previous sale. Is that
the 1031? If you own real estate and you want to swap it into other real estate, then you have to identify the property within 30 or 60 days or whatever it is. And so people typically identify like 3 or 4 properties that they want in case something falls through, and then actually close on it. I think you might be right on the 6 months. I'm not entirely sure on that, but you have to like actually complete the transaction within a specified period of time. And then you can defer the capital gains on that real estate for, until you eventually sell it and don't 1031 it into another property. So I would love to see something very, very similar to that for crypto, because eventually, like the whole idea, everybody knows this, the government knows that eventually people are going to either put money into stable coins because market goes down, or they're going to want to cash out. So they're going to be able to, get that taxable event at some point, because nobody's going to leave their crypto in crypto forever unless they forget their seed phrase. Right. So,
yep.
So
and
that's
the thing that I can't stand is, I mean, look, I lived in Silicon Valley during the high point of the bubble, during the internet boom, and I saw people that were desperate because they got stock options, and back then the tax rule was, if you get something, be it a stock option or otherwise, based on that fair market value of the time that it was signed over to you, you have a tax event. Right. So people were going nuts and like jumping out of windows, basically, because they got into a startup, they got this huge valuation, they got their stock options released after a year, and on like days after they got their stock options released, it went down by like 50%. So they're like, oh my God, I got to pay so many taxes. What the hell am I going to do? I don't even have the value anymore. The same I don't want to see for crypto. And I think a lot of people are being vocal about that. When you get a validator reward, I don't want that to hit the market and have to account for it at fair market value. I want to say, you know what? I'll take the hit based on $0 cost basis. That's fine. I'll pay the full amount. Just don't hit me for, disposition or disposal of the asset rates from top to bottom at that moment, because I don't want a tax bill, right?
Yeah, and we have to think of it. We're in our own little bubble here on PulseChain, but I mean this applies equally to Ethereum and other chains that are proof of stake. So imagine the burden on Ethereum validators is just as great as it would be for us. So and there's a lot more of them than there are of us, right? So there's the government is going to have to take this into account. And, quite frankly, at this point, Ethereum has a much bigger voice in the regulatory arena than we do. Hopefully that will change over time, but, they are, they have the Ethereum Foundation, they're better organized, and they're better able to kind of make their voice heard. But that directly benefits us. If these type of rules get put into effect that benefit Ethereum's validators, they're definitely going to benefit our validators as well.
Nice. Well, I mean, this is the beginning, right? To bring it back down and to land our plane, I guess we could say that this is a really good step forward. It's putting things in writing. It's official. It's a roadmap for, let's say, the next 3 years to fill in gaps and to, provide a pro-innovation framework that benefits Hex and PulseChain stakeholders. It's really great recommendations. I mean, I don't see a lot of downside. We don't see a lot of sinew and skin on this skeletal type of view of what regulation will look like, but it's a damn sight better than what we had to sweat through Gensler. I mean, honestly, it's really great. It's really great to see that we're breaking through. We're validated as an industry now.
It's incredibly positive, yes. Yeah. And when you think about the Trump kids who own stuff in DeFi, I mean, and one of the things we have to keep in mind too is there may be a little bit more of an aggressive push to get some of this stuff done, because we have midterms coming up, and historically the party in power doesn't maintain the House during, after midterms. So there may be more of a push to get some of this legislation and regulation enacted and in place before this Congress concludes in January 1 of 2027. So let's keep an eye out for stuff.
We can always hope that the gerrymandering debate and issues that are going on now in Texas and California and possibly other states could secure the House once and for all for the rest of this president's term. Wouldn't that be glorious?
That would be fantastic. Yeah.
Yeah. Not that I'm trying to politicize this whole thing, but it wasn't my choice to make crypto a highly partisan type of debate in Congress. It wasn't anybody's desire for this. We thought that this was just the simple truth, that it was going to evolve and it was going to be the next, big earth changing iteration of technology, like the internet. But no, right. It has to be made into a aisle left against right type of debate. And if it's going to be, then let's win it at least.
Yep, I'm fine with that.
Cool. Well, I guess we came in just about 5 minutes over time, but do you have any closing remarks that you want to make before RH Max appears? And he does.
And he does. Yeah.
Boom.
No, I'll just say, and if anybody doesn't follow Papa for, he's well worth following for his security advice on, how to keep your crypto safe, and which is going to be even more important for anybody you're onboarding right now, as we get through this next bull run. I'd much rather not see people show up and lose all their shit to some hack that could have been prevented, or some bad security practice that they had complete control over and ignored. So,
and if you ever try to tag him on X, it is at BOEHNERPAPAH. If you search for Papa Boner, you won't find him. If you search for anything else, you won't find him. You'll have a bad time. About 15 minutes to try and tag this guy on X.
Actually, you know what? Blame Elon for that, because before he owned the company, I got Papa Boner got locked. I don't know why. I didn't post anything bad or anything. Maybe they just figured that was a bawdy type of name. So the prudes, before Elon bought it, just blocked it. So then I reversed it. So I'm at Boner Papa on X. And by the way, back at Nuclear Herbs, obviously you guys know that he is the go-to guy for everything legal. He's got his finger on the pulse of all the legislations that are popping up and will probably continue to pop up against our community, against our assets, against our founder, whatever it is. Nuclear Herbs is the go-to man. He's our legal beagle. I'm just Smeagol.
I will do my best to keep everybody informed. But please feel free to tag me. I know everybody does, but feel free to tag me if something new comes out, like Travinsky's post this morning about 1960.
Yes.
I'm happy to take a look at it. Thank you very much.
Before you go, Nuclear Herbs and Papa Boner give you an opportunity to say anything bullshit. I keep hearing, and maybe you could set the record straight on this too, regulatory clarity for Hex. Is that at face value accurate? Do we have regulatory clarity based on the what the SEC case finalized?
Okay, I'm going to give you this is a slightly longer answer than you're going to want, but it's okay. I'm going to give it to you anyway. With respect to PHEX, it was an airdrop. I think we have complete regulatory clarity on it. Period. It's not, that wasn't even involved in the suit against Richard, because it was only EHEX that was involved in that suit. Just like currently in South Carolina, the only the only crypto at issue in that lawsuit is Ethereum Hex, EX. So at this point, they're asking the court there in South Carolina to declare it a security under South Carolina state securities laws and under the federal laws. So could that still happen? Yes. Is it going to have a real big effect on any of us? I seriously doubt it. However, as I briefly mentioned on Maddie's stream a couple of days ago, this may wind up needing to be a community-driven mail-in campaign, if you will. I suggest that everybody here go over to Grok or Perplexity or ChatGPT or whatever and type in something along the lines of, hi, there's a lawsuit happening and the class representative does not represent my interest or the interest of the most of the class. What are our options? Can I mail in a letter? Can I whatever? And then get your answer. If you can always ask, AI to generate you a template that it thinks would work. Feel free to post them on in a reply to any of my posts on the matter, and I'll put something up as well. But let's crowdsource this and see what we get, because I have thoughts on the matter, but I'd like to see what everybody else comes up with as well. And I think a mail-in campaign may be the best way to go. I'm not sure, but judges have to do an independent analysis of whether or not to certify a class and whether or not the person purporting to represent the class does actually represent the class. And if we have 100,000, 100,000, hexagons mailing letters to the court saying, hey, this guy does not represent my interests. He's pursuing a legal strategy that's completely adverse to my interests. Whatever the case is, however you feel about it, the court's going to have to consider that. And then not to mention the fact that there are serious due process issues with certifying a class of people overseas where they're probably not going to get proper notice, an opportunity to appear and state their objections. So we have a lot of hexagons from overseas. And, if you're going to ask AI for a domestic letter, ask AI to give you an international letter. Say, I'm changing my position here. I live in the UK or in Germany or in Australia or whatever like that. What does my letter look like to the court? And have it draft that. And we'll take a look at them and, we'll put together, I think, whatever people think is the best strategy, we'll just go with. We'll crowdsource it.
The only difference is in the UK, you would spell honor with a U.
That's true. It's true.
They call that English over there. I'm not sure. Every time.
I'm still
know about English.
Nuclear Herbs, great name. Papa Boner, perhaps the greatest name. Not Ralph Boner, Papa Boner.
Boner.
Appreciate you both, gents.
Thanks, Max.
Thanks for Hex Week.
Thank you, Max. Wonderful conference.
Yes,
yeah.
Thank you.
Great job on the rest of it. Thanks for having us on.
Appreciate it. We're almost done for today. We got a lot more tomorrow. I'll see you guys later.
Thanks.
Bye-bye.
See ya. All right. Whew. Man, we are hitting everything. We are not, what's a good way of saying all over the place? We got our finger on the pulse. Let's say that. Everything happened in the ecosystem. Very, very cool. Wanted to ask that before we have them there too, because a lot of people, we have regulatory clarity. We're the only one to do this, all that too. I wanted to get, Nuclear Herb's opinion on as well. So it's some very interesting stuff there. All right, do a quick transition. We got Crispy Man coming up, and then we'll get into our Hex panel before we close out the day. Are you not entertained, Hexaco? Let's go.
Trustless, immutable timeline reward. This is Hex. Community influence, foundation support. This is Taxation. No fraud, no forces, no corporate office, no admin keys, true decentralized markets. This is Hex. This is Hex. This is Hex. Yeah.
How are you feeling, Hexy, Mr. Crispy Man? How's it going?
Yo. Big hey now. Can you hear me okay?
I can hear you great. I can hear you great. That was a new Pulse Wave vibe. Just sent it to me. Made it for Hex Week. He made all the intros and outros and the backgrounds for all 3 events, and he just came up with a new one. Super good. Had to play that for your intro. Boom. Like this flames, a lot of fire, a lot of flames, a lot of winning.
Yeah, he's pretty talented, huh?
It's good. Very good.
Pretty awesome.
He is awesome. But I mean, a lot of great community. I mean, it's like literally, I feel like this community is Hexaco. Like whether it's a physical place, it's an idea. We're already here. We have, people of every kind of talent, and it's a beautiful thing to see it all come together. And I appreciate all the stuff the community has put forth to make this place great, and to make this event awesome. Because I'm enjoying Hex Week. I'm very tired, but I'm very much enjoying all the stuff we've had this entire week. So
I bet.
Oh, all right, man. It's all yours. Take it away.
I know. We appreciate it.
Go ahead.
At least I do.
No, you guys. It couldn't happen. It could not happen without the community. It would. Me up here for 25, 30 hours. I ain't doing it. I'm not doing it. I'll be in the background, but I'm not doing it for 25, 30 hours. So Crispy's up here. He's put in at least 2.5 hours, maybe 3 this week. So, putting in work, man. I appreciate you, sir.
We're here.
Right.
15 more years.
15 every time you make a 5 stake, that's 15 more years that hopefully you'll be making some mad gains.
Hey, while you're still on here, I know I sent over some documents over to different people about my ideas behind this whole biggest marketing event ever that's taking place.
Boom.
Have people had a chance to talk about that on? I haven't watched every hour.
We haven't. I'm trying to think. I was planning on doing some stream or so next week. That if you're interested, we totally come on as well. And then there is Hex panel coming up in a few. I mean, after your talk. So if you want to chat about it, then I can probably come on for a bit if you want to, if you feel like it. So we can make time today. I was going to do a dedicated stream next week as well, but there's a lot to talk about.
It's good. 2 more weeks, man, and that stuff's going out. The only message I wanted to send with it, I mean, the thumbnail message to everybody is, it truly appears that Richard picked the best way to market PulseChain. I mean, like, I went through the numbers, I did the research, and so you guys follow some of the streams, listen up, and we need to get around this as a community.
I think there'll be no shortage of knowledge on mega marketing in the next few weeks. I think so. I'm pretty stoked too. So
I joke about 2 more weeks. I have no idea when things are actually going to
get off. If anyone's been around for a while, 2 more weeks is the timeline for everything that we don't have any idea when it will happen, or that we want to put. That's the placeholder idea rather. There you go.
It is. Well, I'm going to get you back on schedule because I have a pretty good presentation, but I'm not going to go into great detail on every.
You can go into great detail. You can go into every detail you want.
Nah, man, there's pages. There's pages and pages of stuff.
But we're not running out of time today. There's pages and pages of things people want to see. Crispy, do not sell yourself short.
Yeah. Let's see what the chat has to say as I go forward with this, and we'll dig in. You gonna stay up here with me or no?
I think I'm gonna sit down. My legs just hurt from time to time.
I know. If people don't know this, RH Max stream standing up.
I stand. Apparently, it's not.
I stand with Hex. I
think I'm one of the few people who stand. Every time I look, I'm like, everyone's sitting, but I'm always standing. See, I'm standing. Look at that. This is a 3rd anniversary Hex shirt, by the way. 3rd. Got the 3 on that.
Oh, very nice.
We're coming up on 6, man. This shirt's old. It still looks good. Looks good condition too. Yeah.
Yeah. Well, you did name this stream Super Hex, so.
I did. Well, so the story behind it, if you saw it, I talked about it. You both, C3 and you both were interested in event Hex strategies. And of course, I want to hear from both of you on it. And I happened to put him on the schedule first. So he got advanced Hex strategies. And I was like, all right, what can I name Crispy's that's going to be, coming, I'm sure, from a different approach and talk about some stuff too. And I was like, super fantastic Hex strategies, where to find them, what can I name this? And I ended up just going Super Hex strategies. Yeah.
Super.
That's the inside scoop. The scoop.
Super Hex. All right. Yeah. Well, I got some stuff for people. I'll start telling them about it.
Sounds good. I'll be back in a bit. See you soon.
All right, man. We'll be back. Hey, everybody out there in the old chat land. I see a lot of the regulars out there. I see a lot of Quattro Cincos in the chat. I like them. All right, so we're going to talk about a couple of, well, I got 5 or 6 different things that I'm going to talk about tonight. For many of you who may not have ever heard of them, particularly new people, but I'm going to go through those different strategies, and just know that some of them go beyond the basics. I'm not, no expectation everybody's got to understand everything about these tools that have been built by the community, but they've been built specifically to interact with, work with, support Hex in different ways, right? And ultimately, fulfilling the ultimate use case, which is to be able to stake your Hex, scrape the earnings, and be able to take some sort of value from the system, right? And that is what it's all about. And so it builds conviction, and of course the approaches that we have are all about controlling your assets, right? So I'm going to walk through real high level native staking, and we talk about a big shout out to the Helgo meme farmers out there, Helgo communists. We'll talk a little bit about that. Actuator. We won't go into detail because some of these are being covered already multiple times, but to kind of put them all in one place, Maximus, DAO, and then finally Flex, the Flex protocol and the loans. All right. So whether you are a long-term hexagon or just getting started, this is good alpha to have, good things to know about. And there are other tools that I'm not even going to talk about. I mean, there's just so much now that's out there. All right, so I'm going to give you my uber wonderful presentation, right? So at this point, we're talking about Hex staking. Anybody who follows me knows that I'm very much a proponent of native Hex staking. All right, I think it's a great way for people to get started. And of course, if you're going to do that, what is the best way to get set up with your ladder? And again, we've already done a couple of these presentations even this week talking about this, but one of the ways to do it is to go from the 5 to 15 year mark. That's a 10 stake ladder. I mean, everybody can do variations on that, but what's most important is getting that Quattro Cinco in, particularly for those folks who plan to be participating in multiple 15-year cycles. And the reason for that, of course, is the T-share rate, and the T-share rate going up, and how you get the best effect by having your stakes at Quattro Cinco, because you get exposure to lower T-share rates for a longer period of time, right? It's that little extra push and bonus that you get over the finish line. Now you can go listen to my previous talk yesterday, where I went over Hex staking and the ladder, and why it can turn out to be such a good thing. Right now, Hex staking just by itself, just native, directly competes with TradFi in terms of reward. You can put a ladder together, probably a ladder. I didn't do the numbers on this. A ladder from 5 to 15 years is probably going to average you pretty close to 5%, which is slightly better than some things that are out there in TradFi. And what you're able to do with that then is be able to earn on that. But you have this situation where Hex inflation has really taken a downturn. Sure, there's a lot of people have stakes out there ready, and they've gotten inflation or they've got it allocated, and then eventually they will mint that Hex and it'll be part of the supply. But for all the new stakes and even the existing stakes that are still in place, they're earning a very small amount of Hex. So over time, that is going to affect the tokenomics. So Hex being more rare, T-shares being more rare, and then you have the potential for this price appreciation, where all of a sudden, yeah, when I think about it, and I say, well, I'm only earning a penny and a half per T-share per day, doesn't feel like a lot, but when that becomes $5 or $7.50 US, all of a sudden that changes things quite a bit. So there's this opportunity. So one of the very first things I'd tell people to do is to, I wouldn't tell them what to do, but I would suggest they look into Hex staking, and to do that in a native fashion, right? With a native Hex staking ladder. Probably one of the easiest entries would be something of that nature. Now, moving on to, let's go take a look at some of these other protocols out there. Things that you may or may not know about. Helgo. Now, I don't know if they actually call it MemeFi themselves, but it was meant to be the original meme token on PulseChain. And you know, this one's a very interesting play. Helgo it is, because with Helgo, let me just move my screen. I'm sorry, guys. I'm going to do something over this end. With Helgo, it is a deflationary token. It is something that was launched trustlessly. It's farmable and there's no lockup, right? But here's the thing: is it is paying some pretty strong yield, right? And so you can do that. You have to go to their website. I have it on the screen here to go dig in deeper to it. But probably the most important thing about this one is just the sheer size of the liquidity out there. All right. And it's not liquidity with anything, you know, funky. It is liquidity with Hex. Now, why is that important? Well, so this is a group of the founders, I believe, are a group of Hex OGs, right? And they load it up, you know, by providing LP between Hex and Helgo very strongly, to the point that Helgo outperforms Hex just a bit. But it's all about providing liquidity for Hex. It's all about reflexive market making, which means that it'll act a little bit like you know, leverage on top of whatever happens with Hex on PulseChain. So that is one that I got my eye on for sure. Helgo. Now, none of this stuff is financial, but you guys, I think, all know that. You know, but you get a chance to go take a look at it. And if you are in the Hex ecosystem, you should at least know about it. You should at least know about it. So that's the Helgo. Communis. Again, we've been talking about it. We'll keep talking about it. Communis is a reward token for staking Hex. So if you stake Hex natively for at least 180 days, you'll receive, or will have the opportunity to claim a bonus in Communis tokens. And if you stake greater than 365 days, you qualify for a end bonus, right? So another great thing here, people giving back to this. I say giving back, definitely the dev building it was giving something back to Hex stakers. It's all about that. You remember that first thing I was talking about, having a staking ladder, native staking ladder? It's all about helping to incentivize keeping a staking ladder up and running and continuing to add Quattro Cinco rungs at the end of it while earning additional com. All right, so that is the first part of it, is, you know, really incentivizing people to keep their staking ladder up to date and full. But here's the beautiful part about this: because it is a reward token, we developed something, or came up with this idea that you could call what you get on starting a stake a coupon. And currently, when people start a new Quattro Cinco, for example, native Hex stake, they get about 4% of the value back in com. Now, com is a token like any other token. It's got liquidity, And again, shout out to the people that are willing to put up liquidity to incentivize staking Hex so that people can get COM and claim it. Because then what those folks can do is take their COM and swap it for Hex. Right, so it creates a little bit of a do loop, and the higher coupon rate, the more you get back with that. So if the price was to double, it would be an 8% coupon. All right, and if you can go from there, and so you can see how that could provide great incentive. And this is DeFi and it's crypto, so I'm pretty sure those prices always bounce all over the place. But Communis is rare, like a T-share, rare, and a lot of people have not claimed their Communis or will not. I mean, that's just part of the game too, and so that makes it even a bit rarer. But the main liquidities are normally with Hex. I say normally because once in a while a big player will come in and accumulate the COM by setting up big LP. And so recently we saw it come almost to all-time highs against both Hex and Pulse. And now that particular market is cycling in the downward direction. But again, it's crypto, and so we do expect there to be ups and downs with different tokens. And again, with the community, it is immutable, no admin keys, and it's what I like to call conviction-based. Definitely conviction-based, and in support of the Hex ecosystem. We move on to Actuator. This is definitely go check out Bill from C3 Works and some of his streams. I've done streams on Actuator before in the past as well. But what a fantastic opportunity this is, because there are people that have Hex stakes they have made using the HSI protocol, the Hex stake instance, or the Hex mining instance, and that's part of the Hedron ecosystem. You're able to put those up as collateral and extract a value from the stakes while still owning the stakes. You do put them up as collateral, so you have to pay back whatever the value is that you pull out. But it's a loan where you can actually do that and then go do whatever it is you need to do with that liquidity. Yeah, I suppose there are some people that would exit completely out of that, in that way, but that doesn't seem to make sense to me. But you do retain the actual ownership of the stake, at least until it ends, or gets to its to the Hex time token date that you may have chosen to mint. But again, I can't get into too much of the detail because that'd be quite confusing to people. But the basics of it: if somebody makes a stake using the HSI process, you're able to take some value out from that. Now, that's just one half of the coin. The other side of it is, well, if you are somebody who is looking to invest, well, when you take that loan and those those tokens are minted, I was going to say printed, but they're really minted. Those tokens are minted. They equate to Hex in the future, right? So we call them HTTs, Hex time tokens. They have a particular date assigned. On that date, anybody who owns one, just turn it in for Hex. You just redeem it for Hex. All right, so that creates kind of what I call a super bond situation, where sure, you may not want to take value from your stakes, but somebody took value from their stakes. Well, now they're using that for something else. And so those HTTs typically run at a discount to Hex. And because they're running at a discount to Hex, you can obtain them on the market at various prices. And because you're getting them at a lower price than Hex, you can very quickly see, and they have this on their dashboard at actuator.finance, you can instantly realize ROI, return on investment, because you know that you paid, let's just say, a quarter of a Hex for a full Hex in the future, and it will be a full Hex in the future. And in that way, it's very similar to the bond market. So you can actually go check out that actuator.finance and see how that is. And there's a lot of different ways to utilize that particular application, that protocol. So it's pretty cool. And it does pay you right now for farming. So you're able to set up LP between the HTT tokens and Hex with very little risk at all. in my mind, in terms of impermanent loss, because you're basically doing is setting up a token that will be equal to 1 hex in the future with hex. And so it's all hex. And so over time, you would eventually be able to pull that pool and redeem both sides for hex. And while you're doing that, at least for the next 2 years, you're able to earn rewards in the form of a farming token called Actuator. So now let's move to Maximus DAO. Now, this is a very interesting one. Now, with in regards to Maximus DAO type tokens, I know a lot of people here know about them. I'm just going to focus on the 2 top ones at the moment, Maxi and Deci, because they're the longer term tokens, but they do have several others, Trio, Base, etc. You can check those out at the Maximus DAO site and go get more information about them. But these tokens are basically liquid wrappers for either a Quattro Cinco stake or a 10-year stake. They also run on the market in different directions, right? There's not a lot of liquidity, but that can work into people's favor. So you can go purchase these tokens, and they represent older stakes that have earned a tremendous amount of hex at a higher number of T-shares than you'd ever be able to get today. And they're still in place. And quite frequently, they're at pretty close to the price of a hex or at a discount to hex. Even though their NAV, their actual value is much higher than 1 hex. So people are people, and they trade on DeFi, and maybe somebody had bought the token earlier, or maybe they even realized a profit, but they're willing to sell them on the market. And because we're using automated market makers, the automated market makers just react to that constant product formula. And so it doesn't know that those tokens really should be worth more. But I know, and I know a lot of other people know. And so they will go purchase those tokens off the market at a discount during dips in order to, again, make sure that they have exposure or increase their exposure to hex in the future. All right, so very, very cool way to be able to do that. Those are community-driven stakes that are monetized by having, having that stake, that token, right? And so now, again, not financial advice, but my rule of thumb with anything I've done that has to do with these derivatives has always been, I'm willing to wait until the expiration date. So I take the risk off the table. These aren't, for me, these aren't trading opportunities because I don't really trade. What it is a way for me to get additional exposure to a hex stake that earns at a rate that's much greater than I could accomplish on my own, right, at this point in time. And so because I am willing to hold a Maxi token or a Deci token until expiration, it's all good for me, right? The same thing as when I didn't put HSI auctions on this list today, but the same thing with HSIs. I'm willing to go bid on an HSI and win an HSI, but there may not be another market available at some, when I want it to be available to actually go resell it. But I am willing to wait until the end date, to the maturity date, and therefore I will get the hex if I'm willing to do that. So you do have to proceed with caution on all these different things, and do your own research. Go look at those websites. But that's another really great strategy. Let's look at the next one. We're going to talk about Flex for a moment. This is a really cool one that maybe a lot of people don't know about, but we do have a stablecoin on PulseChain from Power City, and they have a couple of them, but this one specifically for Hex, called Hex DC. It's a stablecoin that's backed by Hex. How it gets minted is that people People will put their Hex into the vaults there, and they will take a loan against their Hex, and they obtain Hex DC. In addition, there's some other things that they could be doing within the within the ecosystem to stake another token called Flex, and you can earn rewards and fees on that platform. Now, I know with the Hex DC in particular, this is a little bit more towards, I wouldn't say it in a derogatory way, but more towards the trading aspect of things, right? Because there are people, particularly with a run up in one of these assets, when Hex is running up, you have more and more borrowing power, and so there are people that utilize this liquid loans, the earn protocol. They'll use that to buy the assets on dips. Sell at highs, buy on dips, borrow more, and then cycle through that process. So there's a lot of little different things you can do, but that would be another thing I would go take a look at. I know there are some liquidity providers that provide liquidity for Hex DC on a number of different different platforms, and enable that entire ecosystem. And then as we get to the last slide here, I'm going to come in right on time for everybody else to join. So in the chat, I don't know if you have any questions or have any thoughts that you want to add, but I do see one comment about getting the COM rebate over 10%. That would be nice. We require the community to buy. I'm pretty sure that would be the case. But are you ready to maximize your Hex journey? Right? There's a lot of information out there. There's protocols I haven't even mentioned. And
somebody say maximize?
Maximize. You want to RH max your Hex journey
to the moon.
That's my high level spiel for the last few minutes here.
All I got is PLPL. Keep KISS. Keep it simple, stupid. I try to do that myself. And PLPL.
Yeah, I like KISS for sure. Deep it, simple, stupid. Hey, Ferdy's out there in the chat just mentioned this. Asking about RH memes. I'm with you there. I would have liked to see some people talking about pump that tires and whatnot, because I am actively monitoring and looking and participating in some of these things. And pump that tires is awesome, man. Okay, there's some problems, right? I'm sure there's always issues with all this stuff, but those pools over there, besides the fact they do all the burning that they do and the attention that they bring, because remember, guys, yeah, I'm wearing my Hex hat while we're sitting here, but there are people, they got pumped out tires hats, right? They've got meme hats. That's what they're wearing, right? And they're all about, even though it may seem silly to others, they're all about trying to get a little bit of that stuff cheap and sell it high, right? And probably holding it too long too. Yeah, but the pump dot tires, man, it does so much for us in the fact that it burns so much of that pulse in the beginning, right? And then once it's launched, it burns a lot of PulseX. And then I know a lot of us will, I saw like Crypto Solve talking about this, maybe some others. We talk about these dead pump that tires tokens that are out there. Well, they're not actually dead. They might not have any activities. I guess we call them dead. But each one of those that's like that, it's like burning more pulse without burning it. Because those pools that get abandoned out there, it just becomes another several $1,000s worth of pulse that nobody gets to. It's not even there.
Yeah, I mean, at the PulseX conference, I think we had Pedro launched a token live on Pump Out Tires. So we had some more content on that. I did a debate with Pedro the other day on the RH cores versus the RH memes. This is why I don't call it Hex Week a conference, because I wanted to make this one. Everything else, we had longevity talks, we had all kinds of different stuff in the ecosystem. But Hex Week, I want to focus more on Hex stuff. However, if
there is a Hex Pumped Out Tires,
well, that's not the Hex token. It is.
Okay.
It is.
Fair enough.
Yeah,
you're right.
Same name, but different one.
But
I was going to say though,
a lot of those tokens are being used to support Hex.
I don't know. Here's the phrase I go back to every time someone, like anyone, makes a case for meme tokens. I say, is it making the Hex price go up? And what makes the Hex price go up? Buying Hex. I don't think that statement will ever be defeated. I would welcome a debate on it. But in general, I mean, it goes again. Just go back to those principles. What makes the Hex price go up? Buying Hex. Now, is pump tires great for PulseChain? Sure, I love.
Yeah, it's
the best version of what it can be. But I need help with Hex. I don't think.
Certainly, some of this stuff is indirect, for sure.
Yeah,
meaning,
if
you know,
if it's
by
indirect
itself,
too, it's kind of hard to prove. It's hard to show. That's kind
It
of
is.
we start getting into the hopium territory. It's like, oh, I hope it'll be good for it. I hope. And it's
I
like,
hope
you know what?
so.
You know what? I know is 100% no hopium. It's buying the Hex token. That makes price go up at least for that particular, buy and sell. But anyways, I am. If anyone wants to talk about pump tires, Hex version of on pump.tires and the Hex panel next, they are welcome to do so.
Yeah.
But as far as talks go at Hex Week, try to curate it more for Hex. And again, this is anyone knows me knows I'm not against pump.tires. I don't like meme coins, but I'm glad they exist. I'm glad people are here because of them. But I always go back to what makes Hex price go up. People buying it tends to be the most direct.
Well,
pressure on
I'll
Hex.
tell you pretty much that's the answer for every token. That is the answer for everything.
Yeah,
that's what makes price goes up.
And I've actually so since the last the debate with Pedro, there was some interesting information too that I learned about. I've had a chance to go into because I've been a little bit busy lately with things, but looking into the connections with the SAC or OA or Richard otherwise with Most and with some of the other tokens. I think Most has so far has the most interesting actual backing of stuff that, again, unverified, don't quote me on it. I haven't at least been able to verify myself, but there's some interesting things there I think that are worth pulling the thread on. So I hope to go into that and maybe do a stream or talk about it one day as well, because I got some interesting pieces I've seen there that came from the debate with Pedro that I think is cool. Yeah, it's
very good.
Hex.com is my favorite, and Hex Week is Hex focused, of course, but the Hex panel is open to whatever speakers want to talk about. So if speakers want to talk about Hex pump.tires, they can talk about pump.tires. I will not say only talk. I prefer talk Hexy, but of course, I think there's interesting discussions to be had all over the place. And Shill Gates is here too, so I think
Shill Gates. All right,
shilling some Gates. Otherwise,
I never did get a stream set up with him.
You haven't got one yet? Well, he may be.
I may stick around for a few minutes.
I was going to say, if you want to stick around, you can talk.
Well, I want to talk about that.
You going to pump those tires?
No, I want to talk about that marketing. I can talk about pump that.
Oh yeah, that too. Well, awesome, man. Awesome. I'm glad you're sticking around. We got a full stack panel as we do every day here at Hex Week. I'm going to take Crispy out, do the transition, come back in with a stacked group of Chads. Any Chadettes or other Chads want to join? I'll put the link in the chat. If not, we'll do it this way. We'll do it live. Oh, Cairo's here too. Nice. All right, you got some good stuff. All right, be right back. Let's do what's going to get us pumped up here. What have we did? You know what? We haven't did dance for. Let's do dance. I like.
Let's see if they talk to Kendrick Lamar one time. I remember serving something. I see from my level, but this a nigga, this a family. This the mama count this. I'm a shower, my account. I'm just coming down with this. I say, with my singing there, only fully in the living girl, like a fire westy girl with my taste buds. Ooh, that pussy good, like you said, they know my taste buds. I can't wait to be with you. She got me through the inches. I love when you got me from the only land interest. And you feel the beat to the damn fool. If I drop your beat, you just got to hate him fool. If I quit your beat, I'm extra round with six.
And the panel is back. How's it going, gents? Dance moves. My Cowboy got dance moves.
Hey guys.
Kyro's back. He went to drink a protein shake real quick and come back, do some pumps, get some dips in. Cairo, get some dips in. He might have got a dip or two. He's on mute. You're on mute.
He's on the mute. He's on the mute.
I just gotta say something real quick.
What's up, Joe?
I'm Fast Abdul, and I approve this message.
He's just here for the tech, man.
Indeed.
He's just here for the tech.
How are you guys? Thanks, RH Max, for hosting it.
Welcome back, man. Welcome, Rodrigo, too. Yeah, I want to hear.
Yeah, guys, is my audible here? Is my mic working?
You're very audible, sir.
You're
good.
Okay, good. It was not cooperating earlier.
It's all right.
It's working,
I want to hear.
Yeah.
Real quick, Rodrigo, before we get into the panel too, I want to hear, because you mentioned before you did the talk on the options and stuff, and you said you were from Guatemala. I'm always curious when I hear Hexicans all over the world do all this. How did you get into Hex? How'd you find this place?
I have a friend from school that he introduced me to Hex. I think he joined just before the adoption amplifier, just before it ended, and I started researching Richard. I watched all his YouTube videos. And I was like, all right, there is something here. And I've been buying ever since. And for the last 3 years almost, I've been working at an option structured product desk. So we do options from any token going from Bitcoin all the way to almost 1,000 market cap. And what tokens we don't do yet? Anything RH. And that's why I'm here. I want to push this. I want everyone in finance to be able to trade options for Hex, because we're not available yet, and the only thing we need is a perpetual contract.
Do you guys do futures? Do you guys do futures too?
We do all derivatives, so we do perpetuals, futures, options, and structured products.
Oh wow, yeah, that's what I've been pushing for that too. So definitely shoot me a message and let's see what we can get done.
Let's do it. So, I mean, the tech is built, and there's a few trading desks in the US and in other countries that do it. But the only thing we need to manage risk is a perpetual contract.
Yeah.
So I'm pretty excited. What does a perpetual contract look like? What does it do?
So a perpetual contract just gives you it just makes you available to buy or sell without owning the asset. And it also lets you use leverage if you want. You don't have to, but you could just essentially just short Hex or just long Hex.
Which is already an option. Like there are options too, short and long Hex.
You can do it on chain, but no institutions do it on chain. Everything's done through centralized exchanges, and there's barely any volume or liquidity. If you get a perpetual,
oh, sorry.
No, so let's say we get it on a tier 1 exchange. And there's more than a couple $1 million of volume a day, then you're able to create options around it. And with the volatility that Hex has, which is over 100%, let's say 30-day vol, the premiums on options could be super interesting. Yeah. I'll give you an example. Ethereum has around 65% vol right now, which is like more than double what Bitcoin has. And if you do a simple covered call on ETH, you could make 30% a year just by selling calls. Now imagine what could happen with Hex. Like staking would be something of the past with this. Or you could do it in tandem with it.
Yeah, supplemental.
And you could also, like the main reason I'm pushing this is because whales don't have to sell down the price with using options. You could just collect yield on both sides with calls and with puts. And then you could also protect your portfolio. Because when there's a cascade, like we just saw, everyone started selling. But if you could be able to buy puts or do risk reversals with puts and calls, then price wouldn't be as volatile.
Yeah. I say the same thing with like V3 and yield farming. It's similar to staking, but you know, you're producing yield from holding an asset that you don't have to sell.
Who would be handling the exercise of those options if they were chosen to be exercised?
So market makers take the other side that you do. So let's say you sell a call, you're essentially short, but the market maker's long. so they have to hedge that risk internally.
Okay.
With those perpetuals.
That's what I was gonna ask. So you're talking centralized, so you would have market makers and liquidity providers.
Right.
Got you.
But we have this for any token. Like you go on CoinMarketCap and every single token has perpetuals, but we don't have them.
Yeah, that's what I've been pushing for, because everybody essentially has exposure to that, except I mean we have it on chain like Abdul said, but like in terms of like the exchange exposure, even just on spot, we don't have it. But you know, then branching out from that to the options and the perpetuals, it's like that there's so much room for volume and onboarding there, in my opinion. And like I've been talking to all my exchange contacts. Like I have contacts at Bybit, Femex. Like I worked for all of them before, so like I've been trying to get them. And the major thing in the past was the SDC. Now that that's gone, I've resumed my my promotion of trying to do this, but thus far I haven't gotten far. I've had some good conversations.
What kind of reception are you getting? Like, what are they saying?
So Shillgates, if you already have these contacts, let's push internally how to get them on the tier 1 exchange you mentioned. And the only thing we need is for the community as a whole to get this listing. We just need to pay for it.
There's two we can talk about it right now. There's two problems, right? The main problem is most of these exchanges charge a listing fee and Richard's not going to pay it. So then we get to, okay, are we going to fundraise this? Like, how's that going to work? But beyond that, the other problem is Hex and PulseChain have been listed on exchanges and nobody traded them there. Like from the community, everybody stayed on PulseX, all that. So a lot of these exchanges, when they look at the past numbers, they're like, this wouldn't even make sense for us to list because we wouldn't get any traders and volume.
Well, it wasn't on the larger ones.
Well, it was on Maxi and what was the other one? OKX.
OKX listed it, but not just on spot. They didn't have their
yeah. There was no derivatives, but it was the
might
spot
be the key.
was like,
if they had derivatives, maybe they would get the volume they want.
yeah, we could like. Here's the thing, like it sucks to say, but like these coins go down a lot, and I've always kind of wanted to be able to short them because I expect them to go down at times. So it's like not having that, but other people that hate on Hex could short Hex. You know what I mean? Like it's not like I'm not hating on it. It's what I've seen from the time that I've been here. Like it's gone down more than it's gone up. But why? Like the whole beauty of futures and stuff like that is to be able to make money both ways.
You see, that's right. What I kind of want too.
There's actually a video of Richard. Oh, sorry, I'm interrupting.
I was just gonna say, like, that's kind of what I want too, is to have the option of a short call available on Hex, so that when I'm arguing with a hater, I can just be like, "Hey, why don't you just put your money where your mouth is and just buy this short or sell a call here on Hex," and then we go on our channels and we tell our audiences, "Hey, we just got a hater to short it here. Let's all buy it and get him liquidated." So that way, not only does he lose out, but his liquidation also helps the price go up.
Right.
Yeah.
Exactly. Or if you really believe in it.
Richard speaking about that, we need people to be able to short Hex, but he said it has to be on chain. But I don't think
it's
so.
just done to be clear. Everywhere. Like you can short Hex on chain using fame.io.
Yeah, but there's barely any liquidity.
Plug.
So,
but yeah, I think the one issue that we run into with that's all well and good for all of us because we're essentially native to this ecosystem at this point. But for the outsider that is trading on Bybit or Femex and doesn't really come around these trenches, like I feel like us not being exposed to them is, I don't want to say holding us back, but it's a missed opportunity.
Yeah, well, I agree. Like the advertising on centralized exchanges is like for advertising alone, it would be worth being on one of the major ones. It has to be a major one though to really have an effect. Like we've tried OKX, MEXC. Like we need to move to the next tier.
Yeah.
Well, OKX could work perfectly. I don't want to name names. We were already there. Like it doesn't have to be as hard to get in there. And it's not only like professionals, like the fact that Hex would have a perpetual and have options available out there, either OTC or public, it shows a strength in the market that we're a serious and mature asset, not just on our own little chain that barely anyone uses.
And what kind of people are noticing that, right? Like who would take note?
Well, I could tell you we work with VCs, foundations, miners, high net worth individuals that they play around wherever the volatility is. If there's high vol on any asset that's moving, they'll play with it.
Yeah,
I'll
that's
tell
where
you
the
what,
money's
Cass,
made.
like, what
So
I'd
it's
be
big
doing
players.
with this is if you got short puts available on the asset. Well, that's something that I'd be marketing all across the board right there, because a short put is kind of a no lose scenario there. I mean, if it's an asset that you want to own anyway, great.
You just buy it at a discount. Right.
You get the opportunity to exercise the put. But if it never goes to your put price, well, you get a little bit of income from the options premium. So there's no way to lose there. And if we got short puts here on this, well, this is a great thing for like the whole Hexagon community to like, even if you don't end up owning the asset and it doesn't make the money that you want to make right away here, this is an opportunity for you to either get more Hex or get a little bit of money waiting to buy the Hex for if they like hit a price you want to buy it at. So that's,
you called it perfectly. That's it. You either buy it at discount or you get paid to wait, which is great.
Exactly.
And if people want to speculate, well, they just buy the options outright. Most people make money by selling them, but whatever, like people can trade. And there's the opportunity.
Similar way.
We're almost 6 years into Hex, and we don't have this yet. And Bitcoin had the CME right after 7 years of existing. So we're pretty much on time if we do it in the next couple of years.
Yeah.
Yep.
There's a lot that's missing, but it's catching up, and that's what I like to see. Because like I've been in crypto since 2015, so like I remember when, like you said, Bitcoin was like this, Ethereum was like this. Like I've watched all of them kind of mature and develop into true like assets and markets, and it's like we're still in the early stages where things are getting put in place, and Fast Abdul right here is creating really cool stuff. You know what I mean? So it's like there's people that are building and developing and making all these tools that we want to see, but it just takes time.
Well, it'll happen eventually, but might as well, like you said, like we can build it. Or the tech's already built. We just need the availability to do it.
Well, that's one thing like that is kind of frustrating to me, and you know, this isn't negative towards him, but the person that could make all this happen quickly is Richard. You know what I mean? Like he's the figurehead, he's got all the money, he probably has connections with these people even though they don't like each other, but it's like he's so against being listed on exchanges that it's on us. And then you got people like me who actually has contacts, but I don't have the same pool that Richard Hart has.
Well, people say you have to own the actual asset, but they don't understand the way and the whole new level that you could protect yourself. Imagine if we were at 10-cent Hex and you buy puts there, now you would be making millions down here. But this wasn't available up there.
But it's
yeah,
like
we don't
Let's
have
push
limit
it.
orders on PulseX currently, do we?
No, but there's some bots. I got a one Telegram bot. I don't want to plug them. I like getting paid for plugs. But it's there's a couple Telegram bots, and I can tell everybody in the audience as well as you guys, there are some people building some really cool tools on that front that are going to be like web UI front ends that are basically built to trade, like for traders with stuff like limit orders and stuff like that. So I know those are in the
I think
pipeline.
we need real limit orders though, and that would be one of the great upgrades to PulseX would be limit orders.
I agree.
Because the bots are cool, but like there's an inherent risk in most of those Telegram bots because you
Absolutely.
usually have to feed it a private key from a wallet to make it work. And if you understand what that risk is, you can mitigate it. But you know, for new people, I wouldn't want to invite them in and be like, here's how you trade. You use this bot, and not have them really understand the
And
risk.
not comfortable trading size on something like that either, because all the counterparty risk.
Yep. But there is the one that I've used that it seems to work just fine is there's a SolidX trader bot. You can find about it in that Telegram room. That's the only one I know for sure. I know there's others. I'm sure Shillgates has more.
Yeah. The other thing that I was gonna ask you is, and everybody else here, what do you think Richard's reason for not having V3 is?
Timing. Not
That's
having
it?
V3 yet, right? The technology is not like look at the stuff, look at PulseX day one, right? Like it's a fork of PancakeSwap V2 that's missing features, right? Now that, and those features have started to show up, but like at a reasonably slow rate. Like we have the curve stablecoin pool, right? That showed up. We don't have V3 yet. We don't have limit orders. This is not like crazy high tech stuff, right?
No.
Like,
I mean, 9mm and 9-inch both have it.
Totally. Yeah. 9-inch is just about the exact same thing as PulseX. It's more or less a fork of the same code. So anything you see there could definitively be on PulseX. I'm positive the devs who developed PulseChain, like deploying like a chain is way, way harder than deploying like a PancakeSwap fork. So yeah, those upgrades are for sure not off the table. Like Braytep could probably do it in a weekend. So I think the reason is timing, right? Like we're missing features. All of a sudden the features show up at the perfect time in the market and like off to the races.
On top of that, like Richard is a very,
Shilly,
very
I have a question for you.
perfectionist, and whatever he does is so additionally scrutinized. Because like remember back before like PulseChain itself came out and PulseX was released and everything, there was a lot of times where we're getting it this week. Oh no, we're not. And like, you know, the test nets, we had like 3 test nets when we were only supposed to have like maybe 2. And it's because like it has to be perfect because, you know, our haters you'd never hear the end of it from them if there's one little bug in it. And like when we got off to a little bit of a rocky start on PulseX at first here, and like while we had a V2, man, I'd never heard the end of it from all the haters. They're still saying, oh yeah, PulseX was launched with multiple bugs. It's not true. It's not the whole story, but that's what they're going to run with. So they're thinking that if he's going to do a V3 or some sort of enhanced version of PulseX, he's going to make sure that thing is perfect before he lets it out.
There's another component too that I'm sure he was very well aware of, and it's just the nature of V3 liquidity, where you can put up single-sided liquidity. V2, like from a founder perspective, is a great way to launch a token. It provides support on both the sell side and the buy side. With V3, it gives people the opportunity to only provide support on the sell side, right?
Yeah.
So, you know, maybe he didn't want to push that early on as, you know, as a concept. Oh, I want to sell my pulse against DAI. I can just put up the pulse. I don't have to put up the DAI. Whereas with V2, you have to put up the pulse and the DAI, right? And it's a different player that's doing that, probably a more community-minded player. So that must have been part of the decision as well. But going forward, now that there are V3 dexes on PulseChain, which of course took time because he didn't put it there, somebody else had to do it. But it doesn't mean that when he does it, other people won't adopt what he did very quickly. So I think at the right time, he will do so.
Like that's where all the volume is. So like I do V3 every day, but it's like it's not even close to what I can do on Base or Solana or whatever because there's no volume on these third-party exchanges.
Much less.
Yeah. Have you heard about this Liberty Swap bridge that there might be a Solana way soon?
Yeah, they said
like
that's definitely
in a couple
happening.
days. Coming up right away.
Is that bridge, like, what's the risk with that bridge? Because I saw it's in like beta or they're like trying it out. Or But what could potentially go wrong there?
It won't have any special risk. Like Solana's a non-EVM chain, right? So like to get things off Solana, you essentially have to move from Solana to Ethereum, or swap from Solana to Ethereum. So that there'll just be more steps than going from base to PulseChain, to go from Solana to PulseChain. But as far as like Liberty Swap, like it's not a bridge. Like it's more of a cross-chain swap. Like they have a pool of liquidity on Pulse that they use to fulfill the orders before the bridge could fulfill the order, and then they're holding the order to get paid in the end, right? So I'm sure with like a non-EVM chain, it would work the exact same way. Their main concern is probably to make sure that they get paid. They have to be able to verify the transaction, and not that it can't be done or that there's special technical difficulties. I'm sure they'll be successful. You can already do the same thing with change now from Solana, right? It's just you can only do like $600 or something, which is not acceptable. So if they're gonna have limits of $7,000, which I believe is their current, or raise that to $10,000 from Solana, fulfilled in under 3 minutes, then they're probably going to want to do some homework. But yeah, I don't have any special concerns.
Yeah, I've always heard that bridges are, and this isn't anything specific to Liberty Swap, but I heard that they're one of the most exploited things in crypto in terms of like the attack vector. That's where it's weakest.
It's not weakest. It's actually, bridges on average are quite strong. It's that it's like a focused attack vector, right? Just like a centralized exchange. You put all your money on a centralized exchange, there's a bunch of money on there. If there's going to be a problem, it's all in one place. And the bridge is kind of like that, except for like Liberty Swap is not a bridge, right? Like they're swapping cross chain. Most of the money flows through the RH bridge in the end. They're just paying the users up front for the money that's sitting on the bridge. That's sort of the main concept. So, for a small fee, they take care of it for you. It's much simpler. But like the Omni bridge fork that the Pulse chain uses, like the RH bridge, I call it, like it has an extremely good track record. I don't consider it high risk at all. It'd be one of the lower risk bridges, in crypto. There's never been a hack on, the RH bridge. We can say that with confidence.
Yeah, especially like at the beginning when we were backed up. You remember like when they first launched PulseChain, there was like so much backup. Yeah. It took me like probably 15 hours or so for my money to actually cross over. And it was amazing that we've not had a single issue with that bridge, because that's another thing. If we had an issue, you'd never hear the end of it. You'd hear Ivan on tech going, PulseX! Oh, yes. Oh, how are you guys coping with this? PulseX!
Man, Ivan. But yeah, there's there are still time issues with the bridge. Like if there was a really busy day, like let's say, I don't know, $50 million got deployed on the chain all of a sudden, and lots of people had decided to bridge on, which is something I could see happening. It would still be slow, and that could be mitigated by a team like Liberty Swap upping the amount of like pooled liquidity they have to fulfill orders on PulseChain, so that they would be waiting instead of you. And there could be other things to do to speed up that bridge too. But security is not one of the issues. I would like to see that bridge work from multiple chains, like to bridge directly from base to PulseChain, which would require special liquidity of to accommodate that. But I think there could be the Omni bridge, like that same code is capable of having every EVM on it and not just Ethereum, right?
That's
if
what I
there's
was
liquidity
confused
on both
about.
sides.
It's like why isn't that a feature?
Liquidity probably would be the main thing. Like you'd have to, like, because when you take like let's say you have USDC on base, right? And you want to bridge that to PulseChain, right? Like, because we have USDC from Ethereum on PulseChain. That means someone has to have pooled liquidity for USDC from base on PulseChain for you to swap into, right?
Yeah.
Otherwise, you're just creating a token with no liquidity to sell it into. So I think that the focus being on Ethereum makes sense, but like moving further into the bull market, like and you wouldn't need to have every single asset. You could have one stable coin per chain that had a substantial liquidity pool from the top 5 or 10 chains, and that would do the job, right? Or even another great one would be the gas token from the chains. No, we'll say something not popular this year, but Polygon. You could have wrapped Polygon and PulseChain, and then just like you have ETH from Ethereum, wrapped ETH bridge to PulseChain, you could have wrapped Polygon bridge to PulseChain from Polygon that you could sell into Pulse, right? And that would be, that would really network the chains between each other. Like, oh, I'm going to sell my AVAX on Pulse because it's a better deal. You'd have arbitrage, all kinds of things.
Does anyone remember?
Speaking about different chains and protocols, do you have any contacts on PancakeSwap?
No, Binance hates me. Listen, back in the day, I used to go so hard on CZ, and crypto Twitter was so small back then that he heard everything. I'm blocked on everything, because I used to call them out for all the stuff they used to do. They did a lot of shady stuff back in the day. It's part of the reason why he went to jail. But I'm not here to bash anybody. It's just
no, seriously. He goes to jail and everything, but the crypto industry rallies behind him, whereas Richard is taking on the SEC single-handedly and actually defeats them, but they all still ostracize him, which makes zero sense to me.
Crazy.
And BNB makes a new all-time high yesterday. But I was mentioning it because PancakeSwap has a lot of different chains. Even Uniswap, but we know what Uniswap thinks about us since they canceled us. But if we can get one of these exchanges to actually list it, or even like Arkham, that's a block explorer, to track PulseChain, that would be big because there's new eyes on the chain.
See, I think Richard himself could probably have luck with Coinbase. I think they would list it. I think Binance, if him and CZ made up, but CZ's not there anymore. But I have contacts. I helped grow Bybit from the ground up. I'm still earning money from my affiliate work that I did for them. I know Ben, the CEO and founder, personally. We used to talk all the time. I used to talk to all those guys. I used to talk to SBF. They were just us. They weren't who they became. So I know a lot of these people. I helped launch Femex too. But I've been reaching out to all these people and just kind of getting stonewalled, and it's not because they don't know me. It's more, I guess, optics, and at the time it was also the SEC case. But I mean, Hex has a really bad reputation. Well, Richard has a really bad reputation, and by extension, Hex.
Well, now that's done. I guess it's just reputation.
Yeah, but it's beyond that. I mean, even Kraken, right? Kraken was always super pro Bitcoin, so they're probably anti-Richard because most of the Bitcoiners ended up hating Richard. And it's a lot of these OGs that run these exchanges and stuff, they're not trying to deal with the backlash of listing something like Hex because they know as soon as they do the listing announcement, even though all of us are going to rush in and be like, wow, it's so awesome, blah, 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 and all the army's going to show up. There's also going to be a lot of pushback calling them scammers, and, so it's been a narrative.
It's just been the timing, but other than that, everything works as it should.
Well, no, we all understand that, but the mainstream narrative in crypto, I came from the mainstream of crypto, so I heard all this shit every day. Is that Richard Hart's a scammer? He's the ultimate con man. And everybody that is bought into Hex and PulseChain is a delusional cult member. That's the mainstream crypto narrative.
Do you think that is what's holding Hex and PulseChain off of exchanges, or is it possible that it's also just because of if they listed these tokens here, I imagine with the other tokens that they list, they have somebody at the Ethereum Foundation or the Cardano that they can get a hold of if they want to. But
to a degree, but I mean, they're also listing Fart Coin and Titty Coin. So it's who's the Titty Coin CEO?
Think of
That's what I was
they
going
want,
to.
they want a team that's doxed that they can be in contact with, though. And of course, Richard is not going to dox himself to an exchange.
He's pretty doxed, as far as who is Richard Hart. I think that's established. I think one of the main components that Richard is unlikely to facilitate is these guys want to bribe every single time.
Yeah, absolutely.
Yeah, bribe, but like
They wanna
also
get
want to know
paid.
where he is too, right? So they know how to get a hold of him.
Yeah, not impossible.
Yeah, and I'm sure he does not want that, especially right now. But like even before SEC, before Interpol and everything, he didn't want nothing like that.
And too,
But
there
that's where I
are
was going at the
definitely
beginning. Mhm.
huh?
That's where I was going
Say
at the
again?
beginning. Like every single token in the top 500 has a perps, either a perps or a spot listing on any
That's what I'm
exchange.
saying.
There's
It's
barely any volume on that.
It's specifically their hatred of Richard Hart. Like it's nothing else. That's the reason.
Or it's on
Well,
us
let
to
me
do
let me
it
let
now.
me let me back that up. It's also Richard's I don't want to say inability. It's his staunch belief to be anti-exchange.
Okay, so if it's just the hatred of Richard Hart, you know how we fix this? Well, we just hire Sydney Sweeney to be the face of PulseChain.
Well, no, it's a two-way street. Like Richard said, "Fuck you" to them, and they said, "Fuck you" to him, and it's like basically they're at a standoff at the OK Corral. Richard doesn't want to be listed on exchanges, and they don't want to list him.
Yeah, that cultural risk that Clay Collins was talking about in the movie. Like, if we
But
say
yeah,
F you to the rest of the world, well, we can't be
Yeah.
surprised when they turn their back on us.
Like Fast Abdul said, it's a cartel, and they want bribes, and they want ass kissing, and they want all that, right? You can say that's good or bad, but that's what it is, and Richard isn't willing to play their game, and maybe some of that to the detriment of his own project. But if that's his principle and he's standing on it, I gotta respect it.
The whole ethos of like Hex and PulseChain is kind of
Listen,
like,
like,
not your keys, not your crypto,
bridges.
right?
Yeah, but there's a whole financial system out there that could just benefit from things like these perpetuals or options, or even get new
Well, yeah,
traders on.
we all agree, but I think Richard has made his stance very clear that he's very against leverage trading, futures. Like he's been saying this for years.
Yeah, but though he did say, like, somebody make something where you can short Hex, and Buck and Dylan and team did just that, except for it was on chain. So maybe he wouldn't object to people who do not follow the ethos of Hex and PulseChain shorting Hex on centralized dexes. Maybe that would fit right into his plan.
I can tell you
Tell
this
us
here,
not
though.
to do
Like,
it.
what the exchanges love is something that is widely traded and something that's very popular, because just about every single day on my phone right here, I get a little alert from I Trust Capital saying, "Oh yeah, we just added this new meme coin right here." I'm like, I Trust Capital? You guys are supposed to be like doing the retirement plans. We would think that you would only be interested in like the mega market cap coins or the blue chips and everything. But now they're constantly adding these trashy meme coins to it. Man, they added Trump coin in just like 2 days after it first started trading. So I think if there is enough price appreciation and enough demand for it, somebody's going to add it.
Yeah. But there's the implementation, like a lot of these coins are paying the bribe. So like even way back in the day, like getting listed on all these exchanges, it costs like $30,000-$40,000, something like that.
Well, those are the, like, nowadays that's like the starting price, $30,000-$40,000
Yeah,
for a
wouldn't
centralized
exchange
exchange.
do
That's like
that?
a little one, like weird exchange you've never heard of will charge that.
Yeah.
Yeah,
Well, I mean,
wouldn't
they
exchange
do
do-
have expenses. Like there's implementation expenses, and there's also the market making, right? They have to seed the liquidity of the order book. So they
If
have
they-
people that do that, but they want to kind of offset. You know what I mean? Like it's a whole business. But yeah, they're taking in a ton of money too.
Yeah, if they believed that they were going to make money off of listing this coin, then I think that they would bend over backwards to list it. And if that means like, reducing their fees or waiving their fees to do it, I think they would do it if they truly believe they're going to make money off of this coin.
Well, that's
I
what
think
I've
we
been
have to
trying
get
to do.
one first, right? Like we need one of the big ones to pick it up. I think the
Yeah.
other ones might pick it up for free after, right? Like because they'll be like, "Whoa, these guys are making so much money on their Hex futures. We got to do the same. Just buy it, right?" And they'll understand, or we can teach them that, like, yeah, there's lots of liquidity, guys. Feel free, right? I have no objection to centralized exchanges coming on chain and buying up tokens and then hosting them on their exchange. That's if they want to do it with their own money, go to town.
Yeah. I felt like I was getting somewhere with one, and then discussions fell apart, and then now I'm currently like in discussions with another one, but I'm dealing with like lower level people trying to get back up to my contacts, and it's just like they seem open to it, but I already know what's coming. They're gonna say, okay, well, put us in touch with the devs, put us in touch with the founder, because they're going to be looking for money and they're going to be looking for the implementation. And it's like, I don't know those people and they're not going to work with you.
Do any of you guys know Britep?
I mean, I know of him.
Know who he is.
But he's got all
he
his
answers my
comments
questions
turned
about
off,
the bridge sometimes. But
DMs turned off. Like,
Well, that's the thing. Like, if we want to push it, we need some support of these guys, and maybe someone watch it has the contacts.
but I think again, it goes
It's
back
not
to what I
about
said
that.
about Richard. He's not interested.
Well, then it'll take a while, or just green candles to push us up, and then
there we go.
That's that.
Green candles solve a whole lot.
Green candles.
For the technical stuff, like we'd be able to, get the information that was required by the DEX. Like we need technical information about PulseChain. Sure. Like, I know a guy will work it out. But as far as like you want to speak personally with the founder, like, yeah, no, he's not taking their call.
And like the large reason we want to do this here is we just want to make the coin easier to buy.
Yeah.
We're not necessarily thinking that listing on an exchange is going to win the hearts and money of users already on the exchange.
Well, listen, if you get listed on a major exchange, you make a bridge irrelevant. The exchange becomes the bridge, except for people that don't trust the exchange, right? Like the people that want to stay decentralized, they still go through the bridge and pay all those fees and all that, wait the time, even though it's shorter now. But on an exchange, let's say you were in Ethereum, you'd put your Ethereum on the exchange, trade it into Tether, trade it from Tether into Hex, and take it out.
That's true, because like
Which is great because most people don't know how to use wallets. They just
the one thing I like about Coinbase is they make it very easy for you to get your money off the exchange immediately.
Right. Plus the trading fees are way cheaper than the bridge fees.
Exactly.
True. But yeah, we'll have to see. It's going to be a process. But as far as marketing goes, like I would really like to see it on one of those big five. Just even if none of us went on there and used it at all, the fact that it was on there, that would be great. If we're also like proper listing on, CoinMarketCap and CoinGecko and those things would also be useful. So if anybody has any contacts for that, that would be fantastic. Though I think they also maybe don't like Richard. Yeah. You'd think CZ and Richard would be buddies, they kind of both went through the same sort of
well, that's what I thought.
Government prosecution stuff. You think,
because Richard said that he wrote him letters or some shit, and I was like, oh, maybe they like found some common ground and went through the trauma bond together.
Maybe they did, and we
maybe
don't know.
But CZ also isn't the CEO anymore. CZ's off doing his little side project, whatever.
He knows people. I'm sure. I'm sure he could push something forward. But maybe they did. Like, think of that. Like, what if CZ and Richard are actually buds? Like they're drinking champagne on a yacht right now, and
that's what I was hoping for.
Waiting to push the button. When the timing is right. That would be pretty bullish. And hilarious. Also hilarious.
Well, yeah. And then we can't rush greatness. Like, we'll have these perps, we'll have options. And we know people that will be available to make them. So I'll be there.
Cool.
Yeah, and like we shouldn't think that or try to give the wrong impression that we need any of these exchange listings or anything to do well, or any of the gatekeeping to go away, because look what we did last time with no exchange listing and with all the gatekeeping that we had back then. And I think that the trash talk level back then was a lot higher than it is now.
Oh
I
yeah,
think.
because it was
I
fresh.
remember. Yep.
Like I was on the outside looking in. I was never one of the trash talkers, but like I missed the boat on Hex. I knew about it. Like I showed people tweets from back then. I was trying to get on the email list and all that, but you guys know how Richard is. It took too long and I lost track of it and I just moved on to other things. And before I know it, Hex is at 10,000x. And I was like, oh fuck, like I was supposed to buy that. But yeah, like I remember, like I've been a part of the mainstream crypto Twitter since like 2016, and like I remember like the whole thing. Like Richard was actually somebody that people loved and respected, and then he came out with Bitcoin Hex and started shitting on Bitcoin, and it just pissed off all the maxis, and then they kind of started this flood campaign against him, and it just caught on and spread like wildfire amongst all mainstream crypto.
Well, it doesn't matter anymore. Like, it's up to us to push it our way, even if he's not here anymore.
Well, yeah, and that's the beauty of decentralization. Like that's the way it should be. But it doesn't hurt to have him pull in with us because he's made himself such a central figure of this.
Yeah.
He's going to do what he's going to do. Like he might show up and all the things we're talking about will be already delivered. It's totally possible.
Yeah. Well, I think that's what's going to happen. Like, I think he's got a great master plan, and all this rollout of these marketing devices and all that, like he's been gearing up for this, waiting to beat the SEC and just come out swinging. But he's waiting for the proper time because he understands the market cycle, and technically we should be peaking somewhere soon with the rest of the market. So like, I mean, I've been banking on that myself, so it wouldn't surprise me if he was trying to align with that as well.
You think the top comes this year?
It's supposed to. I mean, based off, like, I go off prior data, right? Like, it's not a guarantee of anything, but you know, history often repeats itself, rhymes. So if you look at all the past post-halving cycles of Bitcoin, when Bitcoin controls essentially the entire market, we're entering the zone right now where shit got crazy and it topped almost every cycle. I did a whole thing of the averages from the halving date to the top of the bull market on Bitcoin, and I think it was something like 500 some days. So it's like the following calendar year after the halving, sometime in like Q4.
Well, I'm thinking we got to wait for that money printer to get turned on.
Well, yeah, I mean, there's obviously going to be like economic forces that will be different in different bull markets, but I can only go off the data from the charts. You know what I mean? Like it's a loose roadmap.
Yeah. The Bitcoin top is not the altcoin top necessarily either, right? Like there could be some time, like
it's like a delay.
Bitcoin
you get about 2-3 weeks out.
Yeah, it takes a while because all the money kind of flows, right? Like it's cycles. So it'll go from Bitcoin, those profits get taken, they go into ETH, and then the ETH profits get taken and they go into mid caps, and it just kind of trickles down. Like that's how it's happened in the past, you know. Like I don't know, because now people are a little more intelligent to how these cycles work. So a lot of times some of these things are priced in, or like they might jump into ETH sooner than they would have in the past. Like it's really hard to predict, but we do have prior bull markets that we can look at and kind of extrapolate what we think potentially could happen.
And also, like, whatever people think. Go ahead, Fast.
No, go ahead and finish your point, and then I want to hit a couple of the questions in the chat here.
What I also say is, like, whatever like the consensus of people think is going to happen, usually it's the opposite of what happens, because we thought, going into 2025, we were just going to have a euphoric year, And I guess since everybody anticipated that, it didn't come true. You got to think of like the contrarian play. It seems to like always be the thing that works out in the end, because we certainly did not expect Ethereum to be below its previous all-time high right now, third quarter of the fourth year of the cycle, if you're going by a 4-year cycle schedule.
Fair enough. So I see one comment from C3 Works here, who I know is has worked with traditional futures markets and things like that. He says, for Rodrigo, options have their place for institutions for sure, but how do we prevent professionals from fleecing the community who don't have access to the critical options pricing models?
Well, it's market makers that do the options. So most options nowadays in altcoins are done OTC. So you either onboard as an institution or you onboard as a high net worth individual. So yes, it would be mostly for larger players.
Yeah.
But you can also help larger players don't nuke their bags and hurt the price trend.
Right.
It largely is most for larger players to generate yield without hurting the chart, which is what we need.
Okay.
Like
so
one
you're
big
saying
guy-
it would just be player versus player with these big guys, and the community in general would not be involved?
Well, the large players would be, but one or two whales can hurt the price way more than 50 smaller guys. And we see it like now. Like one big guy sells $1 million and the price drops 10%. Imagine if that guy could protect himself with options. Like he would just not sell. It's also a matter of teaching them how to use the tools. In reality, it's just a tool. It's not trading. It's building for it.
Fair enough. We have a pretty sharp community. I imagine there'll be some bigger players that could learn that properly. But what about this pricing models thing that
finish with
C3 is
this
talking
real-
about?
Let me finish with this real quick. Like, I'm calling out the larger whales out here because we don't need to list the richer tokens. There's a token out there that has a lot of liquidity. It's actually the most liquid one on chain, other than Richard's. So if we could actually get that listed on any exchange or as a perpetual, the whole game would change. You could even create options for that token, and we all know which one it is. And if he's already providing more than $10 million of liquidity, I don't think a few $100,000 of a listing fee would affect it that much.
Well, not
And
all
it's also a
liquidity is
casino,
created equal.
and
Yeah.
it's also a casino token. So why not gamble with leverage? Like that's available out there.
Yeah, we don't want to see, as a community, we have to be careful what we, really recommend to the regular Joe coming into crypto. And most people should not touch leverage. Most people who do touch leverage should not touch leverage. Most people who think they're professional should not touch leverage. Like, so there's really a very select few that we want, playing that game. So it's just like, it's a difficult stance.
But in reality, like that perpetual enables leverage, but also enables risk management with options. Like it goes both ways. It doesn't have to be all gambling.
I'm with you if you know what you're doing, and that's sort of the bottom line here. And I do not know what I'm doing. I'd be scared.
Yeah.
It doesn't mean there's not a place for it. So I'm with you on that.
Mhm. Well, that's great.
So when do you
have
guys
any
think?
other-
I think the more the better. I think we should have everything else that every other chain has, as long as it's something that's not like outright a scam. Because we're essentially building decentralized finance, right? So we want to have as many tools as possible, and there's different people that like different things. So I think they should all be catered to, and that's up to the builders and developers to determine what they think should be built.
I see it as a net positive all around right here. If we just get like more trade and volume, or just like more ways that we can play around with the Hex and PulseChain, because we get more of that volume on here, we got ourselves a very nice talking point when we're constantly appearing higher up on the list on DeFi Llama. Because like right now we're somewhere between 20 and 30. So you got all these haters that are saying, "Oh yeah, PulseChain's a dead chain." Okay. Well, I know at least 270 other chains that would love to be as dead as we are right now.
Yeah. No, Crispy and Max were just talking about it before we came on, like with pump tires and all that stuff. Like, there's a lot of money running through here, and I'm seeing people making a lot of money every day. And it's like, things like that, even for the people that disagree with them, I would hope that they're able to at least see the benefit that it has, not just because it burns PLS, but also because it's bringing volume on chain and it's bringing new users on chain because they're chasing gains. And like we always say, green candles solve a lot of problems. And I've seen a ton of them in some of these meme coins, and it may not be the coins that everybody else wants to go up, but eventually some of those profits can roll into those other coins and cause them to go up too.
Sometimes they do.
Yeah.
I think Crispy has a special marketing message that he wants to get across to the entire community. Go for it, Crispy.
Excellent.
Wow, that was great. Buy Hex. How about that?
Buy Hex.
Oh,
is that good enough?
My language. I like it.
I know.
Hey, anything else?
I enjoyed this segment pretty much. I was listening to the whole thing. It was good. I think you're going to be successful, Rodrigo. So anything I can do to help you, let's get it done.
Me too.
Yeah, shoot me a DM.
Thank you, guys. Yeah, we should all do it together. I mean, that's why we're here. We're all building, so we can create it.
Now, I do want to say one thing before you close out there, Max, right? Just kind of hit this real quick.
You got like 15 minutes.
All right. So I think you guys on stream here all know this. There's this big marketing push coming up, right? So Richard Hart's been talking about this, and so I'm not part of the team, so I don't know the exact details at all. But what I did is I reverse engineered, I guess would be the right way to say it, the product selection. And the reason I did this, at first I was like, is this really a big deal or not a big deal? But then I looked at the numbers. It's a big deal. It's a real big deal. And so what I'm trying to share out to people, and I've done a couple streams on it, I'll talk about it tonight again with RG3 and some others. Basically what Richard, from his words, what he told us is he is somehow through this organization of people, right? Physical products, electronic products are being sent to people. And I think the first batch was mentioned to be like a C-van with 200,000 units.
Yeah.
Right. So would it surprise you to know that or at least one of the number ones, or close to number one way to market through direct mail is by giving a physical gift, and it has the best numbers over anything else that gets done out there.
It makes sense.
And so he put some thought into this. His team put some thought in this. Whoever worked with him on this, they put some thought into it. And so here are some of the things that I found out. And this is what I want the audience to hear too, because I think we all need to get behind this as we go forward. I think it would be in our best interest to get behind it. And so when people are coming in, they're asking about PulseChain because they get this gift. We ought to be preparing for that. I know a lot of us are, but I mean, mentally be prepared for it and be able to really understand how big of an impact it is. So first bullet is this type of thing. When somebody gets it, people tend to keep it for 2 years or more, right? More than twice as long as anybody else, right? Anything else. Right? Because they see it as a gift. They got it in the mail. It was a gift. That's number one. Number two, 83% of the people remember, because they got this physical gift, they remember, like, day over day over day, what the brand is. You know, particularly if it's something that sits on your desk, right, or in your kitchen or the kitchen table. So they're gonna keep it for a couple of years. They're gonna remember that they've done it. And then when you talk about marketing touches, the estimate is each one of these will have 1,000 touches, meaning the person will see the brand 1,000 times a year. 1,000 times, right? These are the numbers that are behind this approach, right? And then probably the next thing that's probably most important about this is network effect. Another 80, you know, doing the measurement, another question they ask people in these detailed, you know, analysis of marketing, 80% of the people that say that they tell somebody else about it when they get it. That's how excited they are about things. You know, so you have this marketing campaign coming up where likely, you know, figure 2 people a household, 400,000 people are going to see Hex and PulseChain, or PulseChain and Hex, right? They're going to remember the brand. They're going to keep the item in their house for 2 years, and they're going to tell other people about it. So I don't know how that could be any more bullish. And even if they didn't need the product anymore, they're probably going to give it to somebody else in the household who's going to keep it. So that's I'm just laying out those facts for what's happening with this. I got pretty bullish after I read all
bullish.
This.
Bullish. In terms of direct mail, I think it's probably the highest converting you could get outside of like handwritten letter.
Making it a gift rather than, like, you know, a postcard, like it'll be a physical object with a little bit of weight to it that has, we know it has batteries, like that'll change the math dramatically.
Yeah. And I know for a fact that this is a very large scale operation. I've been talking to 2 people that are boots on the ground, literally making this happen. And, you know, they're basically dedicating their life to it right now.
Can I get a konnichiwa for boots on the ground?
Konnichiwa!
Oh yeah.
Okay. Yeah, honestly, when I first heard it, I didn't know what to think. You know, when I first heard it, we're gonna, you know, we was doing this direct mail, we're gonna send some sort of electronic gift out to people. I didn't know what to think. I didn't know whether it was good or bad. I have a little bit of exposure to marketing, but once I started doing the research, I realized just why he's so excited about it, and he's not blowing smoke. This is going to be, this has the potential to be off the hook. A company that did this was a very, very similar thing. Dropbox. You guys know Dropbox? You ever heard of Dropbox?
Yep.
Yeah.
Right, Dropbox. This is, they're not as big now because we all have cloud storage. But there was a time when we didn't have cloud storage. It was like a big thing. And Dropbox, they sent gifts like this out to prospective clients. They 40x'd their base just on that campaign. That's how they attributed to 40x.
I mean, for people listening, like something smaller that you could think of that's similar to this, like I know every time I go to my bank, I end up with a pen, and I use my bank's pens most days out of my life. And I see them every day. Like, obviously, they're already in my brain because that's my bank. But if it wasn't something that I was already aware of, now you have this physical object. And these objects that he's sending are going to be much cooler than pens, apparently.
Pens are pretty cool, too.
Yeah, pens are cool.
Dude, what's better than a good pen?
Not
Do you guys speculate that
they're pretty good, right? Good, Rodrigo.
Have you guys thought about releasing these devices while simultaneously a new wallet? Potentially?
That's what I said initially, but a lot of people commented and made me realize that that's probably not it, because the OPSEC, and it's just not safe. And nobody's going to trust
that. You're not talking
that.
about
Like,
a hardware wallet, are you? Do you mean like releasing Richard Hart, you know, on-chain wallet at the same time as devices? That could be a thing.
Maybe a hot wallet, but I mean, the hardware wallet he could give out would be amazing. Imagine if he gives out like $50 and then just uses the 4,000 Ethereum he sold a little bit ago and pump it up.
Yeah, but the like the giving people a hardware wallet is not like a safe way to get a hardware wallet. Like, it's just too off base for, the safety that he would preach, in my opinion.
But then what could be in these
It is
devices?
here that this is what I'm thinking it is that Max is showing. Maybe it's a phone with one of these.
I mean, I think on the software side, I'm not sure. I would just, what I've talked about a couple months ago was just creating a super app. Like, what's the next Richard Hart product to launch? I hope that it's a super app. I hope that it's some sort of like more than a wallet. It's a wallet, but it's got a whole bunch of stuff built into it. And I mean, what if the electronic device or whatever it is there's a link, a QR code or something to download an app and go, get on the PulseChain via that way like that. That's something I've talked about before that I thought was interesting. If we don't see it with mega marketing, maybe we'll see it at some point. But super app to me, vertical integration, it always made a lot of sense.
Yeah.
Well, it could be soon, right? Like, what's the expected date? That
2 weeks.
We don't have expectations here. 2 more weeks.
2 more weeks.
Yeah.
2 more weeks.
Well,
I think it'll
we'll
be soon.
active
From the
in 2 more
dates that we
weeks.
had for shipping containers, the publicly given out stuff was like there were boats in the water, with these things on the way. Takes like 3 weeks to cross the ocean. Like it's.
I know
it's gonna be in the
somebody
next
that
month.
is right now handling these things, getting them ready to go. That's all I'm going to say. I don't know what the date is.
Speak to the blockchain to Richard.
Is the Richard in the room with us right now?
Is Richard in the room with
Good chance he's watching.
Okay, yeah. I hope so. If you are Richard, shout out to you. You're awesome. You please don't do any more work for us. Let the community do this. I really want the community to do this. I want the community to get this done. You do the work. That's the most powerful 4 words I've heard in crypto, maybe my entire life. You do the work. And it's so empowering. And so like, you don't have to wait around someone else to do it. You go do it. That's what I took to it. By the way, look at Richard here.
That's why we're gonna build the options. We just need the
build the
perpetual.
options, take over Ethereum. Look at old Vitalik. Look at him. He doesn't want to win anymore. He just wants to work on the tech. Let us do the price performance, bro. Let's do the 14,000X. Let's go. Why can't we? Where's the price god? I'm looking around. I don't see any price god saying we can't do another 10,000X. I don't see him.
It's all very disturbing.
Somebody animated it.
The only thing we need is the picture of the green candles next to the large chair. You know that?
I'm familiar with the meme.
Do you guys ever look in the YouTube comments and try to guess which one of those people without a face is actually Richard?
He's definitely around.
I think Johnny Chaos is Richard.
That would
I've seen Johnny Chaos. I'm pretty sure he's not. But some, it's like of the nameless, faceless people on here, maybe one of them's Richard.
What if Johnny Chaos is an autonomous humanoid that Richard sent to make you think he's Johnny Chaos?
Johnny Dow.
Possible.
From the future. From the future.
Terminator. I gotta do some more Terminator memes now. I had one. Let me see. We'll be able to find on this one. Gents, what do you want to wrap us up on? What's good? What do you like that's going on in the Hexaco? What are you bullish on? 10,000X already went up in 2 years. Pretty good. Hex.com. It's pretty good.
Anybody got an idea of what you think is going to be the most telling top sign? Like when the top's finally in, what's going to be the sign that we're all going to look back on and be like, oh, that should have been obvious?
In the past, it's usually celebrities and when people are just doing absolutely ridiculous stuff with their money.
Yeah, last time I remember exactly what had happened. It's like this Instagram thought influencer was using Ethereum to pay for her Brazilian booty lift. Okay, yeah. They're using Ethereum to pay for your BBL.
Tom Brady and Matt Damon in commercials, and all the stadiums started getting named after crypto, and it was like
when Beyonce does a step-by-step tutorial on how to use Hex, That's when I'm like, all right,
There you
all right,
go.
it's maybe the wall's going up. Maybe the liquidity position. It's time to take some profits. Beyonce.
There will be signs. Might be like a meme coin ETF or something.
I feel like that'll happen.
Fart coin ETF.
Yeah, well, there's already
Fart
talks
coin
about
ETF.
Trump coin ETFs, and so on and so forth.
Yeah, definitely.
This time could be different, boys.
I hope so. What if it's the end of cycles?
There you go. That's the one.
There we go. It's never coming down. That's what
When
we're going
everybody agrees it's the end of cycles, it's never coming down. Then it's-
Here's the top. Here's the top. When Cairo makes a video that he has no more bears to destroy, there's none
true,
left.
that's true. They're like, that is officially like when
Whoa.
the bear market happens is when the last bear turns bullish. We are officially in a bear market.
When Payday hits $1, it might be the sign. I did say
would
when,
be a sign of
when
the
it,
apocalypse.
I said when it hits $1. Not if.
I like that when every hexagon has a Lambo. Maybe the number of Lambo picks per day you see on X, maybe that's an indicator. We'll be tracking that chart. Oh god, pump a middle green. That's all I gotta say, gents. Stack panel. As I said, I predicted every panel. I say it's a stack panel, and you guys come in, guns a-blazing, saying smart stuff, looking all strong, and you get it done. So I appreciate you all, and come back tomorrow if you'd like to do more paneling or talks if you're scheduled as well.
Great
Always
panel.
listening to the guys with the
Thank you,
backwards
Ari.
bandanas.
Thanks
Yep.
for doing this, Matt.
Of course. Somebody's got to do it, and I hope all of you start doing your own conferences and events too. Please, everyone, every speaker of this panel has the power in their hands. If you got a computer and you know how to talk to people and send StreamYard links and do schedules, you know it's a lot of work. But if you want to do it, you can do it.
Hard.
It is.
How about you do it and I show up
Ask me.
sporadically?
Ask me at the end of each day if it's hard or not. Ask me at the beginning and I'll tell you, and then ask me at the end. I'm like, my body's ready for tomorrow. I'll say that, but I need to get some sleep before that. All right, Scivive 5555. You're very welcome, sir. And let's end it with Crypto Kings, everyone's new favorite song. Boom.
Years old, already reading fast. Gifted school couldn't hold him back. Special program, logic and code. Humble roots, but a genius mode. Dad fixed AC, delivered the news. Taught him to hustle, never to lose. Car stereo business, teenage dreams. Online platforms, building schemes. AC company, adult store too. Browser optimization, revenue flew. 60 million yearly, success so sweet. Semi-retired, but never complete. Reddit showed him Bitcoin's like blockchain future burning bright. Who is Richard Hart? He's taking control. Hex and PulseChain, that's how he rolls. I'm not fucking around, I'm here to take over. Crypto revolution, he's the composer. Who is Richard Hart? The king of the scene. Building tomorrow with blockchain dreams. I'm not fucking around, I'm here to take over. Digital freedom, he's the bulldozer. First blockchain CD, Hex was born. High returns while others were torn. PulseChain launch, eco-friendly way. PulseX exchange, a brand new day. 27 million for research and health. Longevity research benefited from his wealth. Inspiring millions to break their chains. Financial freedom, healthy gains. Fighting scams with all his might. Protecting users, shining light. And safe came knocking at his door, but he fought back and won the war. Who is Richard Hart? He's taking control. Hey, Hex and Pulse, crypto revolution. He's the composer. Who is Richard Hart? The king of the scene. Building tomorrow with blockchain dreams. I'm not fucking around. I'm here to take over. Digital freedom. He's the bulldozer. Red notice came from Interpol's call. Finished claims, trying to make them fall. Tax fraud allegations, assault they say, but the system's broken. Games they play, business rivals using legal schemes. Crushing innovators, killing dreams. If haters wanted to get me down, they'd raise more than my 27 million crowns. Diamond worth millions, watches and cars. DC allegations reach for the stars, but he denied it all. Stood his ground, blockchain freedom, that's what he found. Won in court, they didn't appeal. Justice served, victory real, ecosystem vision, wallet and all, independent blockchain standing tall. Bitcoin and Ethereum left behind, community value, peace of mind. Richard Hart, he's taking control. Revolutionary leader, that's his role. I'm not fucking around, I'm here to take over. Second crypto wave, he's the composer. Who is Richard Hart? Controversial king, sparking debates, freedom he brings. I'm not fucking around, I'm here to take over. Crypto's future, he's the takeover. Pivotal figure in digital space, influential leader, setting the pace, building community, advocacy strong. Richard Hart's story, the crypto song. I'm not fucking around, I'm here to take over. I'm not fucking around, I'm here to take over.
Hex.com